all the money that's being raised right now, and it's billions and billions of dollars. If there's no inflation and if the economy is chugging along, you know what's going to be key, and I don't know what's more important, what these companies say, and we're going to get it this week. We're starting with the banks.
Yeah.
Right.
What they say about maybe we don't see any really bad effects like with the economic numbers yet, but we're going to see what their outlook is and what they say. Is that more important, or do we just with bated breath wait for every inflation number and every labor?
I think earnings.
But this
earnings is going to be good.
Almost by default, you'd have to think it's inflationary. The question is whether the economy is so good that it's absorbing, if you will, the inflation. And then the second piece is so much of the stuff that was brought in the country is front-loaded, and whether we do hit this new wall later. I don't know the answer.
It's not August 1st. Most of the tariffs aren't in. They're definitely higher, but as far as why we haven't seen inflation yet, everybody talks about shelter. Shelter was such a big part of inflation, and that is cooling off drastically. And then you got oil prices that have stayed below 7. So you could see, theoretically, that could have been transitory the first time. And we were headed for 2% anyway. Maybe we were, because it was all supply chain related and COVID related. So maybe this whole...
Now it's transitory.
Maybe this whole obsession that Jay Powell, and maybe he's still fighting last year's back. That's why, we'll see. We'll see what happens. The economy looks good. I don't know if I'd cut. You just because you want to save dry power. It's the dry powder. Speaking of Jay Powell, President Trump again criticizing the chairman. The president spoke with reporters after arriving back in Washington last night from the Garden State.
Well, I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't.
Vice President Vance also slamming the Fed under current Chair Powell. And this was an Twitter post yesterday, responding to a post from economist Judy Shelton. Vance said that, in his words, the Fed has been totally asleep at the wheel. As President Trump says, they're too late, both in fighting inflation during the Biden administration and then in lowering rates now. National Economic Council Director Kevin Hassett says the Trump administration is looking into whether it does in fact have the authority to fire Powell. Meanwhile, the Fed has a new frequently asked questions page up on its website with some information about the $2.5 billion renovation project of the Fed, the facilities that has drawn criticism from the Trump administration. The page directly responds to some of those critiques. For instance, it mentions that the project is meant to renovate 2 historic buildings that haven't been significantly updated since back in the 1930s. One thing we found out, I thought people should have led every newspaper and article about when we had this Treasury Secretary on. The food's much better at the Fed.
He can say that when he goes to
the
breakfast
food
with
is much
Powell every
better.
week.
Why wouldn't it be? I mean, print some more.
No, look.
Let's have caviar. Doesn't cost anything.
I've eaten at the Fed.
You've eaten at the Fed.
Good. I've eaten at Treasury.
Which is better?
I think they're both pretty good.
I don't know. At the Fed, you get those gold flake hamburgers that they make.
It's not like that.
That's not what's happening with this.
You could. If you wanted to, it's just that we don't have any gold flake because Fort Knox is empty.
Coming up, we got so much more right here on Squawk Box. Don't go anywhere because we're getting here ready for earnings season. Kicks off once again this week with, yes, the big banks. What to expect. We're going to talk about it after the break, including, by the way, this fascinating story about what JP Morgan's doing. I don't know if you saw about private credit this morning.
No, I did not.
We should be talking about as well. We're coming right back after this.
So today.
Writing me.
Yuck.
I know. Dozens of companies are due to report quarterly results this week, including financial giants JP Morgan, BlackRock, and Bank of America. Then later in the week, investors are going to hear from United Airlines, PepsiCo, Netflix, and many more. We'll also get a slew of economic data. It's kind of exciting. We're going to get key CPI inflation data. That's due tomorrow. I don't know whether anything resolves as we wait to see some negative effects. Maybe this will be the week. Maybe it won't. Let's talk markets now with Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. I wouldn't take your job for all the money in the world, I don't think, Lori. Because tariffs are unprecedented in the last how many years. I mean, there were some in the first Trump administration, but the level that we've seen. So you didn't know how to react, and you've been totally whipsawed. So you started the year at 6,600, then when the market got Liberation Day in March, you went to 57.50.
We went to, actually I misspoke earlier, we went to 55.50, and we had signaled that that was our bear case and we would do that if the market broke 10%.
Okay.
We
But
thought,
and then you went up to 57.50 briefly or something?
we went up to 57.50.
And now you're going back to 62.50 day. The market's at 62.50.
Yeah, and we were, right, and we view our targets, I mean, look, targets are madness
It
this
just
year,
seems like
right?
you're following the market. Every time the market goes down, you give a new target where the market is. Now you're 62. What good is it?
No, well, look, I to be honest, a lot of strategists don't like doing price targets. I mean,
I wouldn't do them.
it's sort of an exercise in where is the market going to end up on December 31st of this year. And timing gets very, very tricky. I'll tell you what we were surprised coming off of the April 8th low. We have done in 3 months what we typically do in 9 months in terms of rebounding off of an extreme low. So if you go back and look at episodes like 2010, 2011, 2018, kind of these major 10% drawdowns or more, we should be at around 6,300 by the end of this year, not right now. If you just sort of look at the typical path that we travel. So markets are just processing things very, very quickly. And I'll tell you, Joe, when we went to the 57.30 as our, I think we did that at the beginning of June, we were trying to communicate that we didn't think we were back to where we were to start the year, but we thought we were in a better place than April 8th. What I was surprised about in terms of talking to clients after that, and I got an earful from clients about this in June, they're done with 2025. They're looking ahead to 2026, and they think that they paid the price for any sort of economic or inflation potholes on April 8th. So when we changed our framework this morning on our target, and that's really what we did, a lot of our math was the same, we tried to bring in the impact of 2026 numbers into this year's forecast.
And for people that talked about valuation at the beginning of the year and 2 or 3 great years that we, in 2023, 2024, they really wanted a shakeout. It's weird. This is a weird way that it happened with tariffs. There's always some excuse for it, but it cooled everything off. Some of the leaders that were probably overvalued or there were some air pockets underneath that all got sort of worked through. Now we might, if we had a decent earnings season right now, it might be all clear. Why stay at 62.50? Why not go back to 6,600 where you were at the beginning of the year?
So we don't think the world is the same as where we were back in January.
It might be better.
I don't necessarily know that it's better. I mean, if you just look through the lens of consensus GDP forecasts, they were up above 2% for this year at the beginning of this year. I think right now the number is like 1.5, 1.6%, and then looking again for 1.6% for next year. So the consensus, and this is not just my economists, but the consensus around the street, thinks that we've taken something out. Also, if you have higher inflation levels, that's going to pressure your PE multiples a bit. One thing we talked about this morning.
What if you have lower inflation levels?
Well, look, I can get you some really, really cool numbers on S&P pricing for this year and next year if I take inflation down to 2%. Our economists think we're going to live more in kind of that upper 2% type number, a little bit below 3%, so nothing too crazy, but that does dampen your PE multiples a bit.
What about where we stand just on a PE basis? I mean, what are we back at, 22 and a half?
So when we look at the top 10 market cap names in the S&P 500, you're getting close to past peaks, actually. And we also look at the market cap weighted PE, and that's above 25 times now. I see more opportunity if you look at the S&P kicking out those top 10 names. And we're not cheap, but we're not back to those peaks either. Russell is probably your best barometer for how cheap things got on April 8th, and we actually went down to recession lows in the Russell 2000, but now we've...
Russell 2000's been on fire lately.
Well, it's not having a big outperformance versus large cap yet, but a lot of people are sort of chomping at the bit, thinking we might get it. I do think, though, that kind of this dialing down of Fed expectations that we've seen over the last week or so might take a little bit of the wind out of the sails there.
Do you think that the slower GDP forecast now will be reflected in the earnings that we're seeing? And do you see it as companies responding to slower sales or to their margins weakening?
I think it's a combination of both. I mean, I'm a kind of a earnings call transcript junkie, and I read through a bunch of transcripts starting, I think, with June 25th. You know, we had a quiet week last week, right? So
Did you see Delta last week?
I did, but you know, the reality is there were a couple of good companies. That wasn't the only one that had some really good headlines. I read a lot more than that, and we actually said in the weekly we published this morning that we think a couple, and compliance guys will zap me if I get into individual companies, but
They will?
know, I'm not allowed to talk about individual companies without disclosures and all that. But you know, we read a pretty broad sample, including a number of small and mid-cap companies. They tend to have simpler business models. They can help you see things a little bit more clearly. I was struck by a couple of things. Number one, there was a tremendous amount of disruption to demand in the second quarter. There was also a healthy debate about pull forward. And so I think that's a critical question that we're going to get the answer to in this next reporting season. Did we pull forward some demand? What is that level of disruption? There's a lot of uncertainty there. It's also a lot of talk about pricing. A lot of it's been surgical so far, but it's pretty clear to me that when people are saying, look, there's not going to be an inflationary impact here, it's starting up. The cogs are just starting to turn a little bit more slowly than most people had anticipated.
Delta, at the beginning of the year, they were one place. Then there was some disappointing forecasts. All they really did last week was go to the high end of the disappointing forecast, and the market took off for Delta. Even the stock market seemed to do better after Delta.
Yeah.
Said that.
Well, you know, what we're seeing, if you look kind of more broadly, and my traders have really clued me in on this around the July 4th holiday, is weakness in the momentum trade, which is just basically, you know, I'm not a quant, but, you know, the stocks that have been working best or those continuing to work best. We spent some time looking at that last week, and what we found is that momentum factor, and we looked at a few different third-party sources of factor data. They're all starting to weaken, and one of the ones that we watch that's pretty widely tracked has been tracking the S&P 500 with about an 85% correlation since the beginning of 2024. That one has stalled out, and what we've seen recently is that when that momentum factor stalls out, and I'm thinking like the last year and a half, it gives you a lead by a couple of days to a couple of weeks that you're going to have something like a 4 to 8% drawdown in the equity market. So
Well,
things are getting a little fatigued under the surface.
if we end up the year at 6,600, and you've done all these crazy moves, now you're 6,250. Right?
I'll be ready to retire.
Yeah, if you end up at right where you started the year, after all was said and done, we're right at 6,600, and all you had to do was just stand pat, that would be bad.
Well, look, and I think a lot of investors are looking at all the noise out of DC, saying exactly that. I'm better off not doing anything and just focusing on next year.
Like, turn off the TV. No,
Don't do that.
Oh my God.
Don't do
I
that.
was saying, anyway, thank you.
Thanks for having me.
Okay.
When we come back, packaged food giant Kraft Heinz reportedly investigating whether to break itself up. This comes a decade after Berkshire Hathaway helped pull the company together. We've got the details on that story when Squawk Box comes right back. Shares of Kraft Heinz in focus this morning. That follows a Wall Street Journal report late last week that the company is planning to break itself up by spinning off a chunk of its grocery business into a new entity that could be valued at up to $20 billion. According to the report, the remaining company would house sauce brands like Heinz Ketchup and Grey Poupon Mustard. Kraft Heinz was formed in 2015 after Berkshire Hathaway and Brazilian private equity firm 3G Capital combined Kraft Foods with H.J. Heinz. Those shares are down about 60% since that deal. You can see they're up by about 1.7% this morning.
When you think about that big deal, everybody
Did
thought
not work out.
did not work.
Yeah.
By the way, ketchup, great business. Why ketchup is such a great business, I do not understand.
Because you
go
do it
with
on
the-
everything.
You're going with the catsup instead of the ketchup.
Ketchup. I said ketchup.
Ketchup, yeah.
Ketchup.
Okay.
But
Ketchup.
Heinz ketchup, huge
There you go
business.
again.
Why?
Well, it's catsup is one spelling of it.
Catsup.
It's C-A-T-S-U-P.
But the question is why that brand is, you can have a huge margin on ketchup,
Yeah,
but then everything else
not so
is
much.
so complicated.
Yeah, well, it's a lot of the packaged foods. that
Right, all the
people aren't
packaged
eating
food
anymore.
stuff
Yeah,
that
or
nobody's
they're
eating.
eating less of,
Right.
I should say.
Meantime, we were watching shares of Tesla this morning. Earlier this morning, Elon Musk responded to a user on X, which asked Tesla investors if they support a merger between the car company and Musk's XAI. Musk responded no to that. Responding to another X user yesterday who said Tesla needs to be able to invest in XAI, Musk said, it's not up to me. If it was up to me, Tesla would have invested in XAI long ago. We have a shareholder vote on the matter. And over the weekend, the Wall Street Journal reported that Musk's rocket company, SpaceX, has agreed to invest $2 billion in XAI. On Friday, Musk knocked down a report that XAI is looking for up to a $200 billion valuation in its next round of fundraising. Musk said XAI is not seeking funding right now. We have plenty of capital, but a lot of this was sort of speculation driven in part by the fact that XAI is now on the actual Tesla system.
Right.
So you can actually get access to that. Now, separately, the team behind Musk's AI chatbot Grok issuing an apology. This after the bot made an anti-Semitic post on X, a statement on Grok's X account apologizing for, quote, the horrific behavior that many experienced. It attributed the offending post to a code update separate, though, from the language model that powers Grok, and said the code in question has been removed.
That's clear as mud. Coming up, The Man of Steel, easily winning the weekend box office. The formula, I'm sort of getting into it. I mean, it starts with Superman bruised and battered and bloodied, and that's not what you normally think of for The Man of Steel. So the whole
Did you-
way
did you
that
see it?
I haven't seen it. People I know are seeing it
I know, my
today.
son saw it. Yeah,
You like it?
yeah.
Pretty amazing to get such an amazing results on a reboot. Great for Zazzle. We're going to tell you how much money the new Superman film brought in at U.S. theaters. You put Jurassic Park, F1, and Superman together and think about
Yes, it's on
AMC.
blockbusters.
AMC is doing okay. Stay tuned. Squawk Box will be right back.
5 things to know ahead of today's opening bell. Warner Brothers' Superman reboot topping the weekend box office. Brought in $122 million in the United States and Canada in its debut weekend. Its global haul estimated at $217 million. The movie cost $225 million to produce. Of course, there are marketing costs on top of that. Shoppers spending heavily online from last Tuesday to Friday, what some are calling Black Friday in summer. That was led by Amazon's Prime Day. Adobe Analytics saying that online spending grew more than $24 billion across the United States retailers, and that was above Adobe's prior forecast. And Reuters reporting that NVIDIA's Jensen Huang is going to hold a media briefing in Beijing this week. He's going to be making his second visit to China just in about the past 3 months. In an interview that aired yesterday on CNN, he downplayed the United States' fears that his firm's chips will aid the Chinese military. And speaking of China, the country's export growth beating expectations last month. That was boosted by shipments to non-U.S. markets and a temporary reprieve from U.S. tariffs. And J.P. Morgan's Jamie Dimon has warned about the dangers of private credit, comparing the risks to those of the 2008 financial crisis. But J.P. Morgan now ramping up its efforts in that same area as the growth of private lending has exploded. A new piece in the Wall Street Journal this morning saying that Dimon is now racing to claim a stake before J.P. Morgan is left behind. The report details the bank's strategy to, quote, swoop in strategically and profit if there is a meltdown. I think that's the most important part about this, which is he's not going whole hog into this space. The idea is, to the extent you can be opportunistic, how do you do it? There's potentially a lot of leverage in this space. I mean, the question always has been in the private credit market, some people would say it's all matched up perfectly because there's not a duration mismatch, meaning people raise a fund that starts 1 year and ends 10 years later, and they loan it for 10 years, and that's the end of it, so that should be good. The question is whether there's leverage embedded in those funds. Some of the funds don't have leverage, and then there's a lot of funds that have started to get leverage from banks, and the question is, how does that all really work itself out?
And is there a way of measuring or tracking all of that?
Not well
Yeah.
right now. Not well.
I would guess.
That is one cute dog.
What are you looking at? What dog?
That is one
Crypto.
crypto. They showed in the scenes, and he was flying, and he was very cute. So I'm trying to figure out what kind of dog he is. He's a mutt modeled after James Gunn's rescue dog Ozu.
Aw,
And the CGI, apparently that dog really isn't flying. The CGI
really?
design, all of his traits are based on James Gunn owned animal. Usually, Superman had a lab or a German Shepherd. So this is. But did you see how cute?
Yeah, I did.
I think that's going to make the movie really, or at least. I mean, they seem to have the right formula. I was thinking, reminds me of Underdog. Remember Underdog? He was a pretty studly dog.
He was more muttly, right?
Yeah, but he flew.
He was a little
Superhero.
chestier dog.
Save
He was a
people.
little-
Save people. So coming up, we're gonna speak with the U.S.
I haven't
ambassador.
done that in so long.
Underdog. U.S. ambassador to NATO about the Russia-Ukraine war. President Trump teasing us. What he called a major statement on the conflict. Or maybe have an Iron Dome in Ukraine, that'd be nice. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back.
NBC Plus.
This job.
Welcome back, everybody. President Trump will sit down with the NATO Secretary General this week as support on Capitol Hill grows for additional sanctions on Russia. The president has recently announced plans to sell weapons to NATO allies so that that weaponry can then be passed on to Ukraine. He also said that he would have a major announcement today on Russia and Ukraine. And joining us right now to talk about it is U.S. Ambassador to NATO, Matthew Whitaker. And Ambassador, thank you for being here. Can you give us any sort of a hint, any clue as to what that announcement today is about?
Well, good morning. It's good to be with you today. You know, I'm going to be in the room at 10 o'clock this morning, and we're all going to hear it together. You know, obviously, President Trump has already said that he is going to have Patriot systems sent to Ukraine, paid for by the European members of NATO. You know, he's already expressed how frustrated he is with Vladimir Putin, and he's also expressed, I think, what he views as the last, 6 months of conversations he's had with President Putin. So, I mean, today's announcement, I think, will set a path that we can move down, both at NATO and in Europe, and as an ally of as the United States. And so, I think it's going to be a strategically important announcement, but I certainly am not going to front run it here on your show this morning.
Ambassador, let me ask you for your own thoughts about this legislation in the Senate that's working its way through. This is sponsored by Republican Senator Lindsey Graham along with Democratic Senator Richard Blumenthal, but they've got 85 co-sponsors to have some very strict sanctions that would allow the president to put levies of up to 500% on any country that is buying Russian oil, uranium, gas. They think that would be the sledgehammer that would really bring a quick end to this war. Do you agree?
Yeah, a couple thoughts on it. First of all, ending the slaughter on the battlefield in Ukraine is the top priority, and bringing a ceasefire and then ultimately an enduring peace is the goal. And this package of sanctions certainly would be very strong. Now, I think the president's been pretty clear that the package needs to be at his discretion. It needs to be something that he can wield as appropriate and as necessary. But there is no doubt the way Russia continues the slaughter on the battlefield in Ukraine and continues to hit civilians in cities like Kyiv and Odessa is with oil revenue. And that oil revenue is primarily coming through oil distributed by the shadow fleet to countries like China and India. And those are the countries that ultimately would be sanctioned very heavily by this bill. And again, as long as it meets the president's needs as the person who is constitutionally mandated to execute and deliver foreign policy, I think that provides a very strong tool and a stick with which the president can conduct foreign policy and hopefully bring this war to an end. Because at the end of the day, the killing needs to stop. The slaughter that we're seeing every single day of human beings for no gain. Russia has picked up 0.25% of Ukrainian territory over the last year. I mean, it's actually really catastrophic and sad.
We know that Ukraine has already offered to a peace deal that would essentially force them to give up 20% of their own acreage, their own land, to this attack that came from the Russians. The Russians are the ones that won't come to the table. Vladimir Putin is the one who is stalling on this. How do you force his hand to make him take these negotiations seriously?
Yeah, well, there's nobody better than Donald Trump that understands leverage and understands how to get leverage in a negotiation. And so I think at the end of the day, he is creating a circumstance and a situation together with allies in the Senate and almost, bipartisan and 85 co-sponsors, almost unanimous, quite frankly, to bring that leverage to bear, to get Vladimir Putin to the table and to create a ceasefire and ultimately an enduring peace. Because, if you look at some of the other conflicts around the world, whether it's the Iranian-Israel conflict, whether it was India, Pakistan, and others, President Trump has brought the parties to the table together with his foreign policy team and negotiated peace. And I think there's another potential peace deal that's on the table with Armenia and Azerbaijan. So President Trump is a peacemaker, but he also understands how to negotiate and how to bring leverage. And so I think you're going to continue to see a desire from President Trump to end this conflict in Ukraine. But at the same time, we all know that it takes both Ukraine and a willingness out of Russia to actually come to the table and negotiate in good faith.
Mr. Ambassador, there's been a second school of thought, probably most closely defined by Bridge Colby, the Undersecretary of Defense for Policy. Just this idea that we shouldn't be getting involved in places like Ukraine and places even like Israel to some extent, because we should be really focusing and saving our weapons for China and making sure that we are kind of standing up against the other superpower in the world. Is this a recognition that that is not going to be the case at this point?
Well, so I know Bridge Colby very well. I work closely with him at NATO on issues that are relevant to us and our alliance. And what I would say is the United States needs to be able to walk and chew gum at the same time. Obviously, we need to make sure that American interests are protected, that we are strong, that we don't disadvantage our strategic ability to project power wherever we need to project power. But at the same time, we have strong alliances, whether it's with Israel, whether it's at NATO, or whether it's with our Indo-Pacific allies. I mean, all of those partnerships and all of those alliances need our attention and obviously need our ability to project strength. But, we need to, there's only one country in the world that can fly B-2 bombers halfway around the world and drop bunker busters and return home and have pizza with their family before they're ever discovered having been there in the first place. And so I think that, the power of the United States is unquestioned, but at the same time, we need to continue to lead on innovation. We need to still be the strongest country and the strongest military in the world. And I think that's what Bridge and Secretary Hegseth and others are making sure, that we don't put ourselves or expose ourselves to being strategically, unavailable when a fight breaks out. But at the same time, I think the unquestioned power of the United States of America will continue, especially with this leadership we have right now.
Ambassador Whitaker, thank you for your time this morning. We appreciate it.
Yeah, thank you. Good to see you.
Coming up on the other side of this, a new Senate report digging deeper into the assassination attempt of President Trump. Yesterday was exactly 1 year since that happened. We're going to bring you the details right after this.
Self to apply.
With a new report now on the attempted assassination of President Trump last year. It reveals what it's calling multiple unacceptable failures in the Secret Service's planning and response. It also called for more severe disciplinary action. The report was released yesterday. That was 1 year after the shooting. It was released by the Senate Homeland Security and Governmental Affairs Committee, and it said that the Secret Service became aware of that suspicious individual 45 minutes before shots were fired and failed to act. It also said officials didn't address line-of-sight vulnerabilities at that venue in Butler, Pennsylvania. 20-year-old gunman Thomas Crooks fired 8 shots, one grazing Trump's ear before he was killed by a sniper, and one attendee at the rally was also killed in that shooting.
Meantime, we got some news just out from Kenvue, the consumer health product company that was spun off from J&J with brands like Tylenol and Band-Aid, also Neutrogena. The company's CEO stepping down from his role and from the board as well. And Kenvue is now going to review strategic alternatives, it's saying, to unlock shareholder value. Let's show you the stock. It's down just marginally. Sometimes when people say looking at strategic options or reviewing things like this, it means selling the company. It potentially means spinning off certain assets or selling some assets. So we're going to see whether this company gets carved up now that the stock has actually turned around on the back of this news, in part, I imagine, because you're going to start to think about, is there some kind of sale premium on top of this business?
All right, when we come back, American Federation of Teachers President Randy Weingarten will join us on a new partnership that aims to train teachers in AI skills. We'll talk about the potential benefits and the pitfalls right after a break.
us. Welcome back to Squawk. Microsoft, OpenAI, and Anthropic, they're all teaming up with the American Federation of Teachers to offer free AI training to AFT members. The $23 million initiative is going to focus on AI tools for K through 12 educators. Joining us right now is Randy Weingarten, president of the American Federation of Teachers. Good morning to you. AI, of course.
Good morning.
All sorts of controversy about how teachers should use it, how students should use it. Tell us about at least how this program is going to be implemented.
Right. So thank you for having me on. And, you know, I'm a big skeptic, and I think you need to be a big skeptic to engage in this work. The problem is that nobody in government is really helping teachers, or frankly, any other public employees, in trying to figure out how to use these tools, use them wisely, safely, and ethically, and at the same time, as you know, Andrew, the big bill almost had a provision that preempted states from having any regulation whatsoever about tools or about AI. So over the course of the last couple of years, we have taken it in our own hands. We've worked with Microsoft and OpenAI. Anthropic is a new partner. And we've said, let's figure out how to have a voice in all of this. And the teachers and paraprofessionals really want it. There's questions, there's concerns, you know, the question of, is it the GPS system or is it a driverless car? But we thought it was really important to actually offer training in a real way to virtually all of our members who want it. And we thought it was really important to do it place-based. We have done it once a summer with Microsoft and OpenAI the last 2 summers, but there's a real need. Nobody's filling it. So we thought, let's work.
Tell
with
us
these
the
companies
position
to
of the
do that.
union on AI in terms of the following. There are some teachers I know that are afraid, maybe appropriately, maybe not, about how AI could effectively one day take their jobs. There's other people who are super excited about it and say, look, there's an opportunity here for every single student to have the equivalent of individualized tutoring, if you will, in a remarkable way. So, for example, do you believe that students should be able to, and teachers should allow, and the whole thing should work where you could record an entire class, if you will, create your own notes out of those classes? Some people think that's a great idea because it could help the student. I know teachers who think that's going to do me out of a job.
So, number one, there are lots of things that I'm afraid of. I'm not afraid of AI doing teachers, K through 12 teachers, out of jobs. We've already had these kind of situations where people have tried to replace the human being. I am concerned about issues like safety and privacy and making sure that we regulate deep fakes and also making sure that we deal with intellectual property. But what teachers are clamoring for, Andrew, is the tools so that they use AI wisely, safely, and ethically. And in the absence of other people doing that, we thought that the way in which you deal with these fears is you actually have real training and you do it with the developers who have developed some of the products. Now, this is not everybody in tech. We chose the people that we worked with, and frankly, we've been working with Microsoft as part of an AFL-CIO partnership for the last 3 years. So what teachers actually want is they want to be able to reduce paperwork. What teachers actually want is they want the creativity that AI can help with in terms of developing games. They want it for helping to develop lessons. But you know, I've been through, as I'm sure you have over the last 20 or so years, with technology attempting to replace intellectual capital and in teaching and learning. And we have to actually fight that. You need a human being in teaching. But the bottom line is, if you don't have the training, you don't know the questions to ask.
Well, so the
let me
interesting
also show
dynamic,
you-
though, that I just wonder about
we-
is,
We've done
teachers.
this. Sorry.
Go ahead.
I was just going to say, you've in your show a couple of years ago, I came on with the first version of this guardrail that we've done, and we're trying to get governments to actually adhere to these kind of guardrails and do that kind of stuff. So we come to it as skeptical but hopeful.
The question I would ask is, teachers, as far as I can tell, often feel overwhelmed. They do. And they've got a lot of work to do both in the classroom and then outside of the classroom. And whether it's, grading homework or talking to parents or all of the things. And this could be very, very helpful in terms of cutting down on some of that time. The question, therefore, then becomes, though, when some principal or somebody else at a school says, well, look, you have now a lot more time than you had before. You used to have 5 classes. I want you to double up, or I want you to load you up with 6 classes a day, or whatever it is, and how you would treat that, Randy.
So, Andrew, having the difference between having some more time, say maybe it's half an hour a day, I've seen some studies of the potential for that, versus so that you can actually deepen your knowledge, you can actually have ongoing conversations with kids, you can have project-based instruction, you can do those kind of things. That's a good thing. To try to make teachers into an assembly line, that's a bad thing. And so ultimately, this is about trying to both enrich, do things, have the positives of AI, but also guard against the negatives.
Okay. Hey, Randy, 2 other things real quick. I saw just a headline,
Sure.
I guess from last month, that I didn't know, that you quit the DNC. And I wanted to ask about why that was, and also wanted to ask you, I know that Zoran Mandami is trying to get some teacher unions to support him, and was curious where you landed on that.
So the UFT and PSC, our locals in New York City, have endorsed Mandami for mayor. The higher ed local did it a while ago. The K-12 local UFT just did it, and they spent a lot of time talking to him and talking about the education issues. I spent a lot of time, Andrew, talking about all of this in an interview in the New York Review of Books. And I think that the issue is that what Mandami did in terms of young people in New York, and we spend a lot of time with young people, is that he captured their imagination. He's a populist, just like Donald Trump's a populist, or, Donald Trump pretends he's a populist. But Mandami does it with aspiration and focuses on the problems that people want solved. And it really riveted people in New York City. In terms of the DNC, I would actually say the same thing, which is that we need to engage with people in a real way. I don't know what your position is on the tax cuts, on some of the tax cuts in this bill, but I would just say that if there's going to be a tax cut, there should be a working class tax cut. There should be a tax cut, not just a temporary tax cut on tips and overtime. What there really should be is making sure that working people can have the opportunity that this country should be about. And so what I've said, and Reece Saunders also elected not to serve on the DNC again, is that we need to enlarge the tent, and we need to do this work 24/7, not just policy. I'm a good Democrat. I plan to stay as a Democrat, but we need to engage with people in a real way. Sometimes that takes risks, like what we're doing with this AI Institute, but we have to do things differently.
Randy, it is a much larger conversation, and frankly, I'd love to actually have you back so we can actually get into all of these issues. We don't have the time to do it right now, but we appreciate you joining us this morning.
Thank you.
Thank you, you bet. It's past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick. We got a lot going on this morning. Among today's top stories, there's this. President Trump planning now to impose a 30% tariff on the European Union and Mexico. The deadline, August 1st. Officials from both the EU and Mexico say they're going to continue negotiations. Meantime, President Trump now criticizing Fed Chair Jay Powell yet again. He told reporters it would be a, quote, great thing if Powell stepped down. Meanwhile, the Fed has a new, quote, frequently asked questions page on its website with some information about that $2.5 billion renovation project that's drawn a lot of criticism from the Trump administration. The page directly responding to some of those critiques, including, quote, no new VIP dining rooms are being constructed as part of the project, responding to some of the claims. Meantime, check out shares of Kraft Heinz. The Wall Street Journal reporting Friday the company planning to break itself up by spinning off a chunk of its grocery business into a new entity that could be valued at up to $20 billion, and that's a transaction maybe much needed after we could show you a longer chart. It's been a bit of a mess since that deal was put together many, many years ago.
That is longer term. That's not good. You don't need to show much more of a mess than that. Checking the futures this morning before we get to Dom Chu with some individual names. It's about where they've been. Nothing too significant, but it does come after some losses on Friday. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, good morning, Joe. Good morning, Becky, and good morning, Andrew. We're going to start off on the cryptocurrency side of things with Bitcoin setting a new all-time high mark of north of $123,000 earlier this morning. It currently stands at 121,804. We're kind of below that level, but Bitcoin is now more than 12% higher over the last week or so. Now, that move all comes ahead of Crypto Week in Congress as the House begins deliberation on crypto legislation, including the highly anticipated Genius Act. That move is also sending Bitcoin-related stocks higher. If you look at Bitcoin Proxy Strategy, formerly MicroStrategy, you got Robinhood, Coinbase, Mara Holdings, all moving higher this morning on the heels of that new record high in Bitcoin prices. Meanwhile, take a look at shares of Boeing, which are higher after a crash report that was reported last Friday on the Air India tragedy last month did not find that Boeing was actually at fault. Now, analysts at Bernstein subsequently increased their price target on the shares to $282 from $249. They're citing the report's findings, but also they're bullish on the 737 and 787 production increases. Bernstein's new price target is among the highest on the street, according to data from FactSet. So Boeing shares, Dow component, up north of 1%. And then CrowdStrike is among the largest S&P 500 laggards this morning after Morgan Stanley downgraded that stock to an equal weight from a prior overweight. They're citing the stock's higher valuation following the recent run-up that we've seen in those shares and how expensive the shares are relative to the rest of the sector and high investor expectations ahead of its second quarter earnings report in August. CrowdStrike shares are around 26% higher on the year. So keep an eye on CrowdStrike. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers, as always, get all the access to the stories and context behind those big upgrades and downgrades. Joe, I'll send things back over to you guys.
All right, thanks, Dom. Boeing can get through 230. Got to go all the way back to 2024. Could be anywhere to January of 2024. But gets through there, that would be a new high, new 52-week high, and maybe on its way. It's like the last thing that company needed, but well, last thing anyone needed, obviously. But,
Right.
All right, thanks, Dom.
You got it.
Coming up, we'll get a check as markets react to the latest tariff threats. Also, get ready for a parade of earnings reports that we'll be getting all week long. We're really kicking things off with the banks, but you see a lot of other names there as well, including PepsiCo, 3M, Netflix. Yeah, lots to come this week. And later, National Economic Council Director Kevin Hassett will join us on the future of the Fed, Chairman Powell's job, and trade negotiations. That's all coming up in an hour's time at 8:10 a.m. Eastern. Squawk Box will be right back.
Welcome back to Squawk Box. Let's take a closer look at the markets. Joining us now, Sylvia Jablonski, Defiance ETF CEO and Chief Investment Officer. I'm feeling you have not been that negative
No.
throughout all this. I
haven't.
can remember it's sad because I look at some people and I remember how wrong they were.
Yeah.
And we have a lot of people on that when I look at now, that's all I can think about, and I'm not sure why they're here.
I'm glad I'm not one of them for
You're
today.
not one of them. You are not one of them. Why didn't you? It wasn't a head fake. I mean, there are real concerns and worries that people saw, but obviously the market is seeing through something. What's the market seeing that most stock analysts did not see?
Well, I mean, I think that there's a lot to it. So first of all, the macro backdrop is good, right? You have job numbers are pretty good. There's $7 trillion of cash on the sidelines. The market is ripping up. Corporate earnings have held up against, popular belief that eventually we would see that softening. Inflation is starting to come down. Things are looking good. But in terms of tariffs, you go back to Liberation Day, the market just completely crashed. And then we've had so much back and forth, hot and cold, the art of the deal, that I think the markets have just become a little bit insensitive to these conversations. And I think the belief is that, here we are again trying to force the hand till August 1st, but there could be carve-outs, there could be other negotiations, there could be changes to all of this. So I think it's kind of much ado about nothing until there is an actual policy that's
Market's
enacted.
reaction is non-existent.
It's muted,
Right?
absolutely.
You can say, okay, the futures are a little weaker, but not really. This is like any given day.
Right off.
Right, it's like any given day. And so is the S&P, by the way. We're at 6% plus. That's kind of an annualized average return over the last 100 years. It's a pretty steady market.
Did we miss all the stuff that people were so excited about initially? And, deregulation, maybe less antitrust concerns, and tax certainty for corporations, and expensing of equipment for people. And then all of that was supposedly canceled out by these awful tariffs, which either didn't go in or weren't as bad as people thought.
Yeah, and if you think about the tariffs as well, there's sort of two sides here. The first side is that this whole thing, negotiations fail and tariffs go into place. All of a sudden we have revenues to pay for the tax cuts, and perhaps that is touted as a success. And on the other hand, if there's a negotiation that is laid, then markets are happy because we have stability and peace in the world. But all of these things will take time to play out. I'm not sort of Pollyanna that this will never impact the consumer at the end of the day, because tariffs will, but it takes time to show up in the data.
So many people think that we can't just cut spending, that we need to raise revenue somehow. Tariffs, it might be regressive, but either corporations are paying or customers are paying, but there's money coming into the till from something. And if corporations bring some stuff back here or find ways to lessen the impact of tariffs, and if maybe consumers, I don't know. There is real money. A lot of people think higher taxes is the answer, but they hate tariffs anyway. You could make the case, if it wasn't regressive, that this is not a horrible way to generate some revenue from corporations and individuals.
Right, and so far it hasn't proven to be so bad. We have seen some of those revenues coming in, markets are holding up, the economy is holding up, and so we need something to take a wild turn left.
What's going to throw us off here? Could it be a bad earnings season, or could it be hot CPI numbers tomorrow? Could it be finally a crack in the labor markets, which we haven't seen? What's most likely?
I think, so we've had 4 softer than expected inflation reads, right? So this next one in June is expected to pick up a little bit. So if it's a lot higher than expected, maybe that throws the market off a little bit. If jobs start to soften further, maybe that throws the market off a little bit. But I just don't think we're there. Again, trillions of dollars on the sidelines. I think corporate earnings are going to be good. I think that AI is going to propel them forward going, into the next couple of years.
Also, the wild card, AI, just those 2 letters.
Right.
Either it is the wild card or it's not.
But here's my tariff question. So Goldman Sachs report last week said that and this is interesting, it's true, that only 40% of the tariffs, if they are implemented, get borne effectively by the American consumer and or American business. Effectively, that 60% of the tariff gets borne back at the foreign side of things. I don't know if that's true or not. The question is, what do you think the real estimate is? That I don't know if you agree with Goldman Sachs. You think somebody's got a better way to think about it.
Yeah, I don't know what the exact numbers come down to, but I tend to lean towards Goldman Sachs, and I think that that even strengthens the president's position to negotiate here, because actually it feels like it might be worse for the EU than it would be for us, right? And so I think that also gives him some power in his negotiations there.
Okay.
You don't have price targets, really, do you, for the S&P?
I think
I wouldn't do it.
Yeah, right. It's
If I were
it's
you.
it's a crap shot. I mean, I'm bullish on the S&P. I think the market's going to end up
Is
this
it a
year.
crap shot or a crap shoot?
Crap shoot.
Oh, okay. Because I'm trying to think of, there's a way I can think of what a crap shot is.
I can think of.
If I shoot a basketball, it's usually a crap. What are you thinking? Something gross?
Oh, I was thinking the same thing.
Okay. But higher than where we are now by the end of the year?
I think a little higher than we are now. I think we get closer to that, 10% for the year on the S&P 500. I think Nasdaq will rally quite a bit more here. You're seeing it in Nvidia, you're seeing it in quantum stocks, some things like this, and then I think you'll get some breakout in other areas of the market, like drones, cybersecurity, things like this, just given what's going on in the world.
So, as all of your peers were negative, were you just defiant? Is that how you would describe yourself as a?
Absolutely.
What's the name of the firm? Defiant.
Defiance.
Defiance.
Defiance is the name of the firm.
You
So
just,
we have to
you
be
weren't
a
taken in
little
by the
defiant.
negative. You were defiant.
Yeah, we're positive on the U.S. economy, positive on equities.
All right. You're in studio today.
Yes.
I just realized that.
Yes. It's nice to see you all in person.
Yes. Little flies on it.
We look like we're market cheerleaders wearing the same dress in red and green.
Yes. Exactly.
All right, when we come back, much more on the latest tariff threats. President Trump now targeting the EU and Mexico with an August 1st deadline. We will talk to a former U.S. trade representative about the efforts to strike a deal. Squawk Box will be back in just a moment.
Now.
President Trump is imposing 30% tariffs on the EU and Mexico starting August 1st. The leaders of both the EU and Mexico have indicated that they will keep negotiating with the White House in the meantime. And joining us right now with more on the latest tariff threats is Susan Schwab. She is former U.S. trade representative under George W. Bush. Ambassador, thank you for being here today. Looking at what the fallout is from this, the markets seem to be looking at this and thinking, we're not going to get concerned just yet. They seem to think that there will be changes and that 30% likely won't go into full effect. What do you think?
Oh, I must say, after this year, this spring, far be it from me to predict, and I don't get upset if the deadlines get pushed forward. It takes time to negotiate good trade agreements, and if it's going to take more time, it takes more time. And the market volatility is less of a concern and much more concerned about the nature of the negotiations and what the outcomes are going to be for the competitiveness of U.S. industry and for U.S. exporters and for the consumer and the tax being put on the consumer by import restrictions, tariffs being put in place or potentially being put in place.
The Wall Street Journal has a new survey that it took of economists that suggests the economic fallout is less dire than had been feared. That's at least according to these own economists who have looked at it. Now, maybe that's because a lot of it didn't materialize the way we thought, but that was surprising to see and sort of an interesting note to things today.
So I must say, I am not one who's been chasing after inflation numbers. I think the key is not going to be an inflation increase per se. Remember, that's a technical economist calculation. Rather, I think we will see it in specific sectors, and consumers will see it. I mean, the administration's been talking about $100 billion in new tariff revenues to date, $300 billion this year. Even if the calculation that only, quote, 40% is going to be paid by U.S. consumers, that's a $120 billion tax increase, a regressive tax increase to U.S. consumers this year. And where is that going to come? That's going to come in it's going to hit anyone who wants to build or buy a new home, steel, aluminum, probably lumber, that's going to want to outfit that home, refrigerators, washers, dryers, those kinds of things, tools that are going to be used to build that home, anyone who wants to buy an automobile. So we're talking about specific items at this point. And I think, fair to say that retailers are trying really, really hard not to pass through these additional costs right now. And we may not even see a lot of it in the coming quarter. But there will come a point where they can't do that anymore. They can't average out across their inventory. They can't average out the front running that they did, perhaps bringing things in. And for small and medium-sized companies, they're in big trouble already.
When you say you're worried about how this negotiation is taking place, you mean the brute force of some of the things that have been kind of pushed through on this, or do you mean that now the EU is talking supposedly with Canada and Japan and maybe other countries to try and figure out how they can do more together if things fall apart with us?
Well, I think that's perfectly understandable. I mean, you're talking about industries, agriculture, services, enterprises that have long-standing business relationships that have not been developed overnight in all of these countries that have them with the United States, U.S. companies that have them in those countries that are worried about seeing them disrupted. And so these countries are trying to establish more open trading relationships with each other. It's not that they're going against us. It's that they're trying to help their own enterprises because they see their own enterprises losing access to this market. And conceivably, if they end up retaliating, their business that they do with U.S. exporters diminishing. And that's going to be, obviously, that'll be on us. So some of it's stylistic, but I think my concerns tend to be more of the, frog in the boiling pot of water variety, which is to say over time, U.S. enterprises, small, medium, and large businesses becoming less and less globally competitive, losing long-term business relationships. If you look, for example, at the sectoral, not just the country, we've focused very, very much on the country-specific negotiations going on. That's what we talked about last week or over the weekend. Brazil, we're hitting out at Brazil for their domestic politics. They even have a trade deficit with us, for heaven's sakes. They don't have a trade surplus with us.
Well, let's take Brazil. Let's take Brazil out of it. What I hear you saying is this loss of competitiveness. That's the argument that Donald Trump and his supporters would say that the American businesses have had an anti-competitive sort of position because they weren't on a level playing field. Is that right or not?
So I think I am the first one to agree that there are foreign barriers to U.S. exporters, whether it is in the agricultural space, whether it is in the industrial space, and services. I mean, the digital services tax that the Canadian Parliament rescinded, that was a very important move, and I give the administration a lot of credit. I give both the Canadian and the U.S. administration a lot of credit for that. But that got done. So then coming back at Canada saying, well, oh, by the way, we're now going to up the ante. In my, negotiation 101, moving the goalposts isn't necessarily a great negotiating tactic, but I'm getting at something different, which is to say we focus on country-specific negotiations. If we look at the Section 232, meaning the national security sector-specific negotiations, we look at tariffs on steel and aluminum. What we haven't looked at is the derivatives, so-called derivative tariffs that are going up. So, for example, we put tariffs on $18 billion worth of imports of aluminum products in 2018. We now have tariffs on over $100 billion worth of imports of products containing aluminum. There is a process that's going to play out this week where petitioners, 58 petitioners, have asked for tariff increases on almost 1,000 products that contain steel and aluminum for 25% tariffs. We already have tariffs now on beer cans containing beer. We've got a petitioner who wants to put tariffs on any product coming in an aerosol can, food products coming in cans. Now, I'm sorry, I have a hard time addressing that as a national security issue versus something that's going to hit consumers in their pocketbook.
Susan, thank
For me,
you.
I think when we talk about national security, we need to be thinking about, I am all for national security and resilient supply chains. But it seems to me that it takes a long time to build those. That's not going to happen overnight. And raising the cost to U.S. manufacturers who bring in over a third of those inputs, of those imports, to make themselves more competitive, either at home or when they, export and deal with competitors overseas. I think it would be healthier to be thinking about creating those supply chains with allies like Canada, like Mexico, like Europe, and so on.
Susan Schwab. Thank you, Susan.
My pleasure.
Coming up, $4 trillion and counting. That's the number. NVIDIA's market cap continuing to grow. Now, CEO Jensen Huang headed to China, aiming at that market with a new chip. We're going to get into the chip wars later this hour. And then tomorrow, Senator Dave McCormick's going to join us on Squawk Box ahead of the Pennsylvania Energy and Innovation Summit that's taking place in Pittsburgh. It's going to be at 8:20 Eastern Time tomorrow. Squawk Box returning right after this.
drenched in sweat.
And we got Republicans getting back to work already on a new mega bill, another one. Budget Committee Chairman Congressman Jody Arrington going to join us to tell us about that and more when he joins us on set next. Squawk Box, we'll be right back. House Speaker Mike Johnson and Republican leadership are looking to pursue another party line mega bill this coming fall. Joining us now, Texas Republican Congressman Jody Arrington. He chairs the Budget Committee. Good morning.
Good morning.
You want to talk about the OBBB we already did and what it's going to do, or do you want to talk about what was left out and what still needed to be done?
Well, I think I'd like to say we achieved historic economic and fiscal reforms along with the largest investment in border security and national defense. So I think making our country safer, stronger, more prosperous has been achieved in terms of policies and creating the conditions. And I think that will be realized in the months and quarters ahead. I'm very proud of that. Much needed, long overdue. And then you mentioned future budget reconciliation opportunities. I think we stretched that rubber band between the moderates and fiscal hawks quite a bit to get that bill through and have record spending reductions at $1.5 trillion. That's twice as much as we've ever cut in spending.
Yeah.
Is there more meat on the bone in terms of fiscal reforms? You bet. As budget chairman, I can tell you there's never enough for me, especially with $2 trillion annual deficits and a $36 trillion
Would it be more
debt hole.
That's the thing. Would it be more spending cuts? More? Because you remember, I know you saw Senator Johnson just hammering the point that we're so far above what we were spending pre-pandemic.
Yeah.
Even though there's no pandemic anymore. He wanted to go line by line.
Yes.
And Mike Johnson, the speaker, said, look, I'd like to do that too, but I here's my card. Here's the hand that I have. Here's the hand that you have in the House. Here's the hand in the Senate. We're not going to do it. The hand isn't changing, so why be optimistic now? And then you got the parliamentarian, which said a lot of things didn't pass the Byrd rule. Is there a way of structuring some of those things to to get that done?
There is. I think we can spend a little more time on some of the conservative reforms that were kicked out by
Like
the
what?
parliament, like prohibitions against taxpayer dollars going to transgender procedures, which I think
That's
is
still in it.
totally inappropriate. Well, it was
Oh.
kicked out, but we didn't spend enough time to try to figure out how to write it so that it was more budget and impact than policy.
I don't know how you make that budget. though.
Well, we did it on a number of fronts that people didn't think, like defunding Planned Parenthood with respect to Medicaid funding, which is the largest source of funding for Planned Parenthood. So I think there's a way to do it. We just didn't spend enough time. Another thing that was kicked out is our ability to enforce the prohibition on states using fungible Medicaid dollars for
Right.
people here illegally.
Right.
Those are two that I would put into the sort of conservative reforms. And then there are Medicaid and Medicare non-benefit efficiencies. Medicare, for example, we're paying hospitals more in reimbursement for the same procedures as physician groups on outpatient procedures, same outcomes, usually the same and often the same mid-levels in physicians. And we could save $150 billion by just equalizing payments. There's a number of those non-benefit efficiency reforms, I think, left for us to dig into. Did we maximize that sort of political fault lines within the conference? I think so. We had 1.7 trillion in cuts. The Senate had 1.5. We offset the tax cuts and had no deficit. They had about a $500 billion delta. I think we'll cover that, Joe, just by keeping discretionary spending flat. Trump put a 23% cut on discretionary spending.
Right.
That's 25% of the budget. In reconciliation, we were focused on the 75%, the mandatory spending, healthcare, welfare. If we hold discretionary flat, we just constrain it for 1 year, that's $500 billion in savings over a year. And that's just 1 year of the 4 years of the president's tenure. So we're going to more than offset it. And with growth, we're going to see the debt and deficit to GDP come down, the fiscal health of our country restored, and an opportunity for greater prosperity in the future. So I'm bullish.
CBO will have a heart attack if the deficit comes down.
Yeah, they won't know what to do.
But sometimes it's ego because they have to do it a certain way, and those are the numbers they come out with. They aren't allowed to assume anything positive from any of this stuff.
Well, they were off wildly with record revenue to the Treasury when we cut corporate rates from 36 to 21.
Right.
We've had record revenue ever since. They were off by $1 trillion in 2023 on predicting what the deficit would be under Joe Biden. So we will get to that 2.6 annual average growth rate that we assumed in our budget. I think we will exceed it. We were conservative. Biden and Trump both had higher than the 2.6 in their tenure.
But I think there's a fair question to be asked about whether the tax cuts unto themselves ultimately pay for themselves.
Yeah.
Right. I mean, I think we can go back in history, and it is very rare where tax cuts on their own
Yes.
pay for themselves. It really is only going to work if all of these other component parts, including some of the deregulation issues that we talked about, actually pan out.
Yes. Well, I think we took on Republican orthodoxy when I say we, deficit hawks, and my budget committee members, who for the first time said, we're going to tie spending cuts to tax cuts. And we're not going to suggest that all tax cuts are created equally, that all are pro-growth, and that all pay for themselves. So I would agree with you, which is exactly why we put that provision in the House budget to offset the tax cut cost. The Senate didn't comply, which is why they made theirs permanent and ran up about a $500 billion tab over the House budget. So I agree with you.
Right.
Even when the House does nothing for a new president, they get thrown out. You've done a lot. Is the House going to stay Republican in your view? And it is. This was a big bill. This is monumental, and you know that it's depending on what poll you look at, which mainstream media outlet is talking about it. It's supposedly really unpopular. Is it possible that you need to do everything within the first 2 years of the Trump presidency that you want to do?
I think in my mentality after 10 years of serving in Congress is you do everything you can. I think we struck a good balance in terms of the fiscal reforms and spending reduction measures, I think the proof's going to be in the pudding, right? We did this in very aggressive timetable, right? Both the House on Memorial Day and Independence Day to complete the whole project. That gives enough time, Joe, for the reality of the policies to show up in the paychecks and the pocketbooks of our hardworking Americans who got enhanced tax breaks through increased standard deduction, through the no tax on tip breaks, overtime, seniors. Right. The list is...
Might have been worth it just to get the 100% expensing for companies that are trying to grow.
The 100% expensing is the most pro.
Well, can I ask a question about that, though?
Yeah.
And then I actually have a question about Texas.
Yeah.
And one of your residents. But you probably know who I'm going to ask about it. On the expensing question, my understanding is it goes back to 2022, so you can actually retroactively expense.
Yeah, you can.
And so the question is, the only thing I don't understand about that piece is that doesn't spur new spending, right? That's almost just a thank you present for past spending. And that was one I didn't really understand if I was trying to incentivize going forward, because that's effectively, as I said, sort of a very look backing kind of thing to do.
I'm with you. I mean, this is negotiated not for my ideal policies, but for good policies. I agree it should be prospective because we're trying to incentivize the right behavior going forward, which we have done, both with tax relief for working families and those business provisions that we supercharge by making them permanent, especially the expensing, R&D, interest expensing, capital expensing. But no, I don't disagree with that.
And then on one of you're probably most
Hit me with that Texas question.
Most famous resident, at least at the moment in your state, beyond our former president, is a guy named Elon Musk, who doesn't like
I've heard of that.
Who doesn't like any of this, and is all over Twitter or X, I should say. Very frustrated both with what it means to all the work he did on Doge. He's going after the president, constantly now raising the Jeffrey Epstein stuff. I don't know. I'm curious what you make just of all of that, and what do you tell him?
I think there's a lot of personal feelings wrapped up in his comments, obviously. I think that's obvious to people. But to give him credit, I think he's been concerned about the fiscal trajectory of our country, the national debt. I think he's right. There's tremendous waste. Joe mentioned the COVID bloat. That's hundreds of billions of dollars that we never right-sized after COVID. By the way, that's on the discretionary side mostly. So that's going to be harder because that's a bipartisan appropriations process as opposed to a unified Republican exercise in reconciliation. But nevertheless, I give him credit. I think since Ronald Reagan, no one has raised the awareness of our fiscal decline and the need to rein it in and restore discipline and responsibility in America's government's balance sheet than Elon Musk. So I think I take the good of what he's done, and I'll let these other personal issues settle in time, which I believe they will.
But you could ask a person at this point on the street, how much we collect and how much we spend, and probably more than in history, people know, well, we've always collected 17 and we're spending 24%.
Yeah.
And more and more people, and that's something that people need to understand that when they start, belly aching about every single cut that we make. We never have been at 24% of GDP spending.
That's right. That's right. Spending is the driver of this.
You can do both, but it really, you got to favor trying to rein it in a little bit. Congressman, thank you. And
thank you, John.
That's the Texans.
Thank you, Andrew. Yeah, thank you.
Thank you.
All right, when we come back, an update on U.S. auto production after a couple of months of tariffs on imported vehicles. Squawk Box, we'll be right back.
to apply.
U.S. auto production is slowly increasing after 2 months of tariffs. Phil LeBeau joins us right now. He's got the details on that. Phil, good morning.
Good morning, Becky. This is a good snapshot to look at what the impact has been of the tariffs. And remember, anything built in Canada, Mexico, over in Asia, in Europe, there's a 25% tariff for those vehicles coming into the country. There may be some offsets with USMCA, but the bottom line is this. Automakers have said, what production do we have in the U.S.? How, or capacity, excess capacity, how can we use that to build more vehicles in this country? And look what we found. J.D. Power ran the numbers for us. They track this every single month. And what they found in the first quarter, 51% of the vehicles sold in this country were built in the U.S. But look, it's gradually increased since then, up to 54 in April, 55 May. Last month, 56% of what was sold in this country was built in this country. Bottom line is this. The automakers have found those areas where they can add a shift, add overtime, add plants that are already running, and that's what they're doing. They are adding production at those plants. It's not a lot, but it is sizable enough to move the needle in terms of amount of vehicles built in this country. The sales rate is slowing down. I get this question from people. They say, well, there was a surge in April. People were worried about prices skyrocketing, so they went out and bought them. And yes, it has come down, though. 15.3 million, according to Cox Automotive, was the sales pace last month in June. The average transaction price, by the way, really hasn't ticked up much. It might be a couple $100 higher in June than it was back in April and March. 48,907 was the latest reading in terms of what people actually paid at a dealership. As you take a look at Ford and GM, they are two of the companies that have, as quickly as possible, taken advantage of excess capacity, and they get credit for that. Ford's Q2 sales in the U.S. up 14.2%, GM's up 7.3%. Of course, guys, the real question will be, what's been the impact on North American margins? How much of this tariff discussion and the tariffs that have been implemented, how much will that impact the margins here in North America? Because they still are importing vehicles from Canada and Mexico, though they have slowed that down to a certain extent.
Phil, I also wonder how much of this is because of the already existing 25% tariff on European cars that are coming in. I was just reading over the weekend about how it's costing German automakers billions at this point. Is there...
Yeah, we'll see that. That'll be a big question, Becky. And then the question becomes, at what point do some of the foreign automakers say, you know what, we can spread this out over our global platform, we'll just have to eat it in the margins? Or do you have some automakers, and we've heard discussions about this, but nobody's pulled the trigger, who say, I do have to put a manufacturing plant in the United States? Because let's be clear here, despite Peter Navarro saying they're all going to come rushing back in, nobody has announced putting a final assembly plant in the U.S. since the tariffs began.
Okay. Phil, thank you.
Okay. Coming up, NEC Director Kevin Hassett's going to join us this morning in just a moment to talk trade, those big negotiations, the Fed, Chairman Powell's job, and so much more. That's coming up at 8:10 Eastern Time this morning, less than 15 minutes from now. Do not go anywhere. Squawk Box returning after this.
Well, it is almost 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, Bitcoin near an all-time high, currently trading at $121,500. It briefly topped $123,000 earlier this morning. There is some news out from Kenvue, that's the consumer health product company that was spun off from J&J with brands like Tylenol, Band-Aid, and Neutrogena. The company's CEO is stepping down from his role and from the board, and Kenvue will review strategic alternatives to try and unlock shareholder value. From May 4th of 2023 through today, that stock was down sharply, but now you can see it's up this morning. And we're watching shares of Tesla. Elon Musk responding to a user on X who asked Tesla investors if they support a merger between the car company and Musk's AI startup, xAI. Musk responded no to that, responding to another X user yesterday who said Tesla needs to be able to invest in xAI. Musk said Tesla will hold a shareholder vote on that question.
And JP Morgan, Citi, and Bank of America, just a few of the financial giants getting ready to report quarterly results. We're going to hear from them this week. Leslie Picker joins us this morning with a bit of a preview of what we can expect and what we should be looking for. Good morning.
Hey, good morning, Andrew. Yeah, those big 6 U.S. banks are up 33% on average just over the last 3 months alone. And they're set to report second quarter earnings over the next 2 days. The street is asking whether the valuations are getting a bit stretched here or whether the new numbers and commentary will catalyze further to the upside. On average, this cohort is trading at a 27% premium to its 10-year average when compared with the next 12 months projected earnings. And with the tariff, inflation, lower income consumer health, and rate uncertainty, there are still some macro risks circling the sector. Now, on the flip side, we've seen a dramatic shift on the regulatory front, with reforms expected to loosen capital requirements. Banks are expected to redeploy what's now excess capital in the form of buybacks or M&A or additional loan growth if demand is there. Additionally, global M&A volume is higher by 25% in the first half of the year, driven largely by some of those bigger deals that we've seen, while IPO volume is up 14%. Equity trading is also expected to have another banner quarter, and analysts are expecting net interest income to help bolster the bottom line this quarter thanks to loan growth. The key question is how much of these tailwinds are already priced in at these levels, though, guys?
Did you see this piece in the Wall Street Journal this morning about JP Morgan and Jamie Dimon and private credit by any chance?
Yeah, private credit's obviously a huge part of this whole kind of existential question around loan growth and banking, right. And JP Morgan has some on-balance sheet exposure, yeah.
Should we be worried about that, though? I mean, one of the things that was so interesting about the piece was Jamie has been quite public about, I think, concerns about what the private credit world could portend in terms of, if there is a financial crisis, is that where, the risks lie? And yet the piece also suggests that JP Morgan wants to take advantage of that marketplace.
Yeah, absolutely. So I think there are two sides of concerns here. Jamie has been the one who's been very out front and vocal about, when SHIT hits the fan, what's going to happen? Do these private credit shops have kind of the know-how to work out situations in terms of bankruptcy? And then on the flip side, there was a report this week, I can't remember, it was from one of the big credit firms or credit ratings agencies that said essentially that private credit is safer than the banking system because it is, it has kind of longer duration exposure. You're not at risk of some sort of a bank run situation, and so therefore it's safer for the entire system. So there are kind of two sides of the coin, but banks have been, at least over the last few years or so, heavily exposed to this area in terms of their extending of credit to the private.
People can spell, Leslie. Excrement hitting the air conditioner is always a good.
I was like, I don't know. Can I say that on air? I don't know. I don't think I can.
It's almost like saying it. It's almost like you can say Shih Tzu like a dog. That always works.
Yeah.
The Shih Tzu hits the fan.
I should have done that next time.
Air conditioner, excrement, air conditioner is good.
I think my 8-year-old can spell that word.
Yeah, I think I got it.
Thank you.
I got it immediately.
We got it.
I got it immediately.
I'm slow when we got it.
Yeah,
there.
Exactly.
Now to the New York mayoral race. Multiple reports saying that former New York Governor Andrew Cuomo expects to announce plans to stay in the race as an independent, with an announcement coming within days. He reportedly is going to be asking all the candidates except for Zohran Mamdani to vow to drop out of the race if they are not in the lead by mid-September to avoid splitting votes. Now, the report says Cuomo will make that pledge himself. Of course, we had the mayor on our broadcast just about a week and a half ago now, suggesting that Andrew Cuomo should be the one who should step out of the race. Clearly, if any of them are going to give Mamdani a run for his money, if you will, one of them has to step out of the race. And right now, if you look at Polymarket, if you believe that that's a decent indicator of where things stand, Mamdani looking at about over 71% right now. And the other guy's down to like 14, 11%.
Adams, it's a tough combat. There, a lot of people are deciding to back him, and there is some momentum. He's in what high teens or so.
I saw 14.
Okay.
I saw 14
really
and for him and 11 for Cuomo. I don't know what the latest.
Well,
and
even
greatest is.
combined, that's not.
It doesn't do much.
Yeah, it's crazy. You expressed you missed National Donuts Day. Was that when was
Apparently, National Donut Day was in early June. I want to say it was like June 8th or 9th.
Where were you? Because you never missed that.
Because I never miss it.
You never miss that.
I'm not sure.
Today is Bastille Day in France when they stormed. There's a lot of other ones. If you miss National Donut Day today, you give another chance. Today is National Nude Day.
National Nude
Day.
No,
National. Nobody needs that.
No.
You know what else it is? It happens to be National.
Speak for yourself, my friend.
Yeah, exactly. Hey, I'm looking better nude.
I don't want to see either of you.
Okay, but it's also National Be Nice to Bugs Day. Don't call me fine.
Nice.
But I will trade
National
you.
Be Nice to Me Day.
I'll trade you one National Nude Day for one National Mac and Cheese Day.
I'll take that.
National Mac and Cheese Day.
Today.
You can have you can have all the national.
That's what
I don't want any of them.
I don't want it. I'm saying. I'm at it.
Can you imagine walking around in
You've
Times
been to a
Square
nude
if everybody
beach?
was nude? It would.
You've been to a nude
I've already been to Times Square.
Awful.
There's no upside to a
wants
nude beach. Maybe 1 out of 100 people should be nude on that beach. Coming up, National Economic Council Director Kevin Hassett is going to join us. We're going to ask him about the Trump administration's new tariff threats against the EU and Mexico, the president's criticism of Fed Chair Jerome Powell, and much more. Squawk Box, right back.
washboardjim.com.
President Trump announcing an additional 30% tariffs on the EU and Mexico. Those are set to take effect August 1st. Join us now, National Economic Council Director Kevin Hassett. Great to have you on, Kevin. Hasn't been that long, but I see you a lot around, and I always wish it was with us, but we understand. we understand you've got a lot to say. I'll tell you, the thing I'd like to start with, we get so excited about pending deals when we keep hearing last time it was, I think, by Wednesday we were going to have 2 or 3 big deals, and they don't come. Wouldn't it be better to just wait or something? Why does nothing, like India? We were sure we were going to hear about India. Can you update us on that? Or maybe you shouldn't update us, because then we start getting our hopes up and then nothing ever happened.
Right. The bottom line is that there have been ongoing negotiations with numerous countries and close to final deals that when the president reviews them, he wants more for the American people. We've got a guy who's the best deal maker in history, who made billions of dollars by squeezing everything out of deals, and he's doing that for the American people right now. And so talks are ongoing. We've got a deadline, and we'll see how things land, but I know they're going to land in favor of the American people.
CPI tomorrow, Kevin, and a day doesn't go by where we don't wonder collectively where the tariff effect is. And maybe August 1st things get more interesting, and if people don't come to the table and more things happen. But at this point, we haven't seen the negative impacts either with inflation really or the labor market of tariffs. Why is that? Is it because shelter has been a tailwind as costs come down, or oil prices? Why is it that we haven't? Is it still coming, or is it never coming? No. The bad effect on inflation.
The biggest, most interesting data item in this place, Joe, is the fact that the CEA put out a report, Council of Economic Advisors, that showed that import prices into the U.S. are dropping, actually dropping during all this. And my theory as an economist of why that is that Americans, because of President Trump's leadership, have recognized that when they buy an American product, they not only get perhaps a better product, certainly a better product most of the time, but they're also making their communities stronger. And so there's, I think, a lot of patriotism in the data. The bottom line is people prefer American products, and so therefore the demand for imports has gone way down so much that even with what tariffs have been there, where people would say, oh, they might increase prices at least a little bit, we've seen prices going down. The other factor, don't forget, is that if we have a trade deficit year after year after year with a country, then by definition they're supplying stuff to us inelastically. And so if you have an inelastic supplier and you put a tariff on them, then the inelastic supplier bears the tariff. I think putting it all together, we haven't seen it in the data, and it's been long enough. It's been long enough, right? We've got hundreds of billions of dollars of tariffs coming in. The CBO says that we're now, with the things that are already in place, set for $3 trillion in tariffs over the next 10 years, just about. And all of that, and we haven't seen big market responses. In fact, the market's been going up. We haven't seen inflation responses. And we've got all that tariff revenue coming in. Imagine if we had a tax hike of that scale, how much upset there'd be.
About that. Yeah, I talk about that a lot. Everybody that hates the tariffs can't wait to raise taxes, but this doesn't count as raising any money. It's weird. You mentioned we have deficits, so we don't like countries we have trade deficits. We got a surplus with Brazil. And I won't say I immediately said that we shouldn't be using tariffs for all these different reasons, and Bolsonaro or whatever we're using it for, because sanctions aren't the same as tariffs. I understand that. You're supposed to have a legitimate reason or emergency reason for it. But what about that? What about using tariffs for anything that you decide you want to do to try to modify some other country's behavior? What if people start doing that to us with things they don't like that we do?
Look, the president has made it clear that there are a couple of national emergencies. There is a national emergency with fentanyl, and there's a national emergency because of the persistent trade deficit. And one of the problems with Brazil is Well, Brazil is transshipping Chinese goods. I mean, it's not a big stretch at all to think about where are the goods going to go with the sort of 50-ish% tariff that we currently have on China. And so I think the president's right to draw a line in the sand. And again, we'll see what happens with the negotiations between now and August.
Hey, Kevin, so should the Federal Reserve, hey, it's good to see you. Should the Federal Reserve be working with the administration's plans or goals, or should it operate independently?
Oh, the Federal Reserve should be independent. The president has the right to voice his opinion. And the bottom line is that the Federal Reserve has been very, very wrong on this tariff issue. They've been saying it's going to cause inflation, saying it's going to cause inflation. And they've done that while the European Central Bank has been cutting rates a lot because inflation appears, by everybody's standards, to be just about under control. And so think about it this way.
But Europe doesn't have the economy that we have. Kevin, Europe doesn't have the economy we have. We're a much better.
If you look at their inflation, oh, I'm sorry, Jake. If you look at their inflation and our inflation, it's almost spot on. It's almost exactly the same number.
Right, but we have stronger economic.
And it's come down. And it's come down. Yeah, but the growth is coming from supply side effects of Trump policies, which isn't inflationary.
Kevin, I'm curious if you saw
inflation goes down.
I was curious if you saw this Goldman Sachs report last week that effectively suggested that 40% of tariffs will be borne by U.S. either taxpayers and/or U.S. corporations, 60% borne by the foreign country and whatever businesses are there. Do you buy that in terms of what math have you done, and how does that compare to what Goldman Sachs is saying?
Well, I like first. I haven't seen the report, but the numbers seem pretty wrong to me. The way I think about it, when you're thinking about who bears the tax, you need to go back to thinking about the intuition of it as if you're just in your economics 101 class. If I buy a candy bar for $1 and I put a 10% tax on it, then the question is, do I go in and have to pay $1.10, in which case the person buying the candy bar pays the tax? Or does the store say, oh, I'm going to not be able to get rid of all my candy bars, and so they cut it down to 90 cents and still sell it to you for $1? And it depends on the elasticity of supply in the end. Like if you have an apple tree with 100 apple trees, you got to sell 100 apples, and so the apple tree guy, he's going to bear the tax. And my view is, my intuition all along, I've said it on the show all the way back, really for many, many years, is that supply from foreign countries is pretty inelastic, so they're going to bear the lion's share of the tariff. And if you look at it, that's what's happened. That's what's happened. And so I guess economics being what it is, maybe it'll change in the future, but so far we're really 6 months in to an experiment that's working exactly the way the economic theory I described would say.
Just one other sort of point. How do you think about a lot of the CEOs who say, look, we brought a lot of stuff into the country early. One of the reasons we haven't had inflation yet is that we sort of front-loaded the situation, and that we may run into a challenging time later when we have to bring in sort of the next set of goods potentially under a tariff regime.
Well, I think that the other argument that I've been seeing, Andrew, is that what's going to happen is that there's going to be big price effects now, but as we get more production into the U.S., then those price effects will go away. And so I think most people expected that if there were going to be a price effect, that it would be front-loaded before the U.S. supply chains adjust and more production is done into the U.S. So the fact that in the period where, in January, everybody was saying the price effects were going to be the largest, we've seen negative price effects. And so now people are speculating they're going to get worse and worse somewhere off into the future. But I think, again, the best intuition for it is that they're taking a hit, that people are exporting into the country, and Americans have recognized that their friends and neighbors are better off when they buy the products that they make.
Kevin, I think you intimated that it might be possible to fire Chair Powell. What would be? How does that process work in your view?
Well, again, we'll see how the Fed responds to this incredible cost overrun. The bottom line is, from my perspective, that when the Federal Reserve was created, we were under a gold standard. And the idea that the Fed could print money and then spend $2.5 billion on a building without real congressional oversight, it didn't occur to the people that framed the Federal Reserve Act. And so I think that we've got a real problem of oversight and excess spending. And to put it in perspective, the cost overrun right now is $700 billion. The second biggest renovation of a building that we've ever had in the history of D.C. was the Federal Reserve building, the FBI building. And the FBI building, the whole thing cost about the same as this cost overrun at the Fed. And so I think that we definitely need to rethink the way the Fed's acting. We 100% want independent monetary policy, but it sure looks like they need more congressional oversight on things like the way they build their buildings.
Kevin, if you did end up in that chair, and I don't know what would cause what we saw under the Biden administration. There's people still argue whether it was COVID, supply chain issues, or all just piling on all the stimulus money when we didn't need it. Whatever caused it, under the president, would you have been able to raise rates even earlier than Jay Powell with a president that likes low interest rates so much? Do you think would you have the independence and the wherewithal to tell him you're wrong, Mr. President? We need to raise rates.
Look, I'm not going to talk about me and speculate about me being Fed chair. I'm really happy focusing on my job every day. The thing I can say is it's very important that the central bank be independent and that it keep inflation under control, and that it do so with an eye on what's going on with the government policy elsewhere. And so the fact that the Federal Reserve kept telling us that inflation was transitory, didn't really start lifting rates until very late in the game, that was a big policy error. And that's, something that shouldn't happen again.
I'm not saying we're in this position now, but if we were in a position where inflation was ready to come back with a vengeance, and it happened in the 70s, the stop and start, for some reason, nothing similar to that, obviously, but it did happen. I don't see how you could raise rates under this president right now, even if you need to. But with so much pride,
I disagree completely.
Really?
I disagree completely.
Really? You know inflation's dead and buried right now. That you don't have the slightest concern that maybe there's some leftover inflation or tariff inflation on the horizon.
The notion that recent Federal Reserve policy has been highly correlated with political matters is indisputable. The fact is that there hasn't been a rate cut since President Trump was inaugurated. The European Central Bank has seen the same reduction in inflation that we're seeing since then. And right now, if you just take a normal correlation of their policy rate and the federal funds rate, then the federal funds rate today would be around 3. And that's what President Trump was talking about. And so we're talking about in the moment ideas about today. But central bank independence is crucial for the stability of the long-run economy, and low inflation is crucial. The Fed failed at that job in the past, and the Fed, I don't think, will fail in the future after President Trump decides who's.
If I were Kevin Warsh, the other Kevin, the battle of the Kevins. If I were Kevin Warsh, maybe he is more amenable to it now. It's not about. Maybe he's more amenable to it now, but I don't know if I'd take the job if I were Kevin Warsh, because I'd be afraid that if. He's stated in the past there's times when he definitely thought the balance sheet was too big and growing too much. All the things that that hawks worry about. I don't see how you could be a hawkish Fed chair under President Trump, even if you needed one.
No, of course you could be a person who's a realistic Fed chair who pursues the dual objectives, and that's what the Fed should be doing. That's what the Fed failed to do when inflation got out of control under Joe Biden, and I don't think the next Fed chair will make the same mistake.
Okay.
Can I just go back to this point? You keep talking about the inflation here and versus the inflation in Europe, but I think the reason they're cutting rates there is not just because inflation is lower, but really because their growth has slowed down. The EU economists are looking at they just downgraded their growth forecast for the Eurozone to 0.9% from 1.3%. They're saying it's because of how the tariffs are hitting European nations pretty hard. We've got a better economy than that right now.
It was just a little while ago that everybody was putting me on the show saying how terrible our economy was because the first quarter was negative. And if you look at GDP now, it's calling for about 2.5–3% growth. That's certainly not overheating. But again, if we do have a stronger economy because of supply side policies, it's not like we're printing money and mailing it to people the way Joe Biden did. But if you have supply side policies, it increases supply and it gives you growth with downward pressure on
for a long
prices.
time. I'm just making the point that growth there is a lot weaker than it is here, and that's why they cut rates, and that's why they put the pressure on it.
I get. Everybody was telling me that we needed to cut rates because GDP was negative in the first quarter.
It might be nice to keep. You know how you build up dry powder when times are good. So when times really do get tough, you're able to cut rates. We're not that high in rates right now compared to where we were. In the last. pick your decade when rates were much higher. So being where we are, we don't have that much room. If there were some unexpected slowdown in the economy, maybe you don't think that's possible because all the other policies are so good, we'll never have another slowdown.
Look, the bottom line is the normal correlations between the European policy rate and the federal funds rate are out the window. We've got one of the higher residuals we've ever seen, and the European economy has been slower than our economy for as long as I've been following the European economy, pretty much. And so I don't think that it makes sense for the correlations to be so out of whack, and that's really the point of view of the president.
All right, Kevin, we're gonna go. That's a beautiful shot.
Thanks,
I was gonna
guys.
wish you. You don't care about National Bastille Day, do you? How about National Mac and Cheese Day? I'll wish you happy.
I love mac and cheese.
Okay, wait. Here's the question: do you want breadcrumbs on top and then it baked, or do you just like it? You know what I mean, Kevin? Where do you land on that?
No, the breadcrumbs. No, don't. You want a nice crunchy cheese on top without breadcrumbs.
Okay. What about lobster pieces? Lobster mac and
No,
cheese.
just cheese and mac.
It's also National Nude Day, Kevin. Should we skip that?
Yes,
See
definitely.
you later. National would be nice to bug. We'll skip it. See you later, Hassett. Thank you. All right.
All right, when we come back, Atlas Merchant Capital CEO Bob Diamond and CIO David Seamus will join us on a unique cryptocurrency deal. We've got news of that just out a short time ago. And a programming note for you, don't miss a wide-ranging interview tomorrow at 8 a.m. Eastern Time right here on Squawk Box with Home Depot co-founder Ken Langone. We'll be right back.
BC Plus. Change. Welcome back to Squawk Box. New this morning, Bob Diamond, former CEO of Barclays, diving into the growing trend of investors buying companies to to turn them into crypto assets. Diamond's Atlas Merchant to Capital, combining with Sonnet Biotherapeutics to form hyper-liquid strategies. It's a little complicated, but the focus is on building a large reserve of what is called hype tokens, which is a key to the hyper-liquid blockchain. We're going to have him explain this in just a moment. Bob Diamond, co-founder and CEO of Atlas, and David Shamus is Atlas' co-founder and CIO. They're going to serve as CEO of this new entity. Both are with us live and exclusively this morning. And as I said to you when you walked in, explain it to me like I'm 5, if you could. You said maybe it has to be 15, you think? Explain it to me like I'm 15 years old?
15 feels better. Look, the way I would think about it is Hyperliquid, which was founded after the blow-up of FTX a number of years ago, is a non-custodial, user-owned, decentralized exchange that has its own layer 1 blockchain. Does a 15-year-old understand that?
Probably not.
Probably not.
Go to 10 years old if you could.
Yeah, so it is meant to address a lot of the problems that we saw in FTX and other things, that you control your own wallet. With a custodial exchange like Coinbase, you're giving them your money.
Yep.
They're holding it. If something bad happens, that happens to you too. It's a problem. Here, you have your assets in your own wallet. You control it. It's you trade on a decentralized exchange. This isn't the only one. There are other decentralized exchanges out there, but you trade on a decentralized exchange with your own wallet. You never give up custody of your assets.
So here's a question about that. There's always been this sort of friction, or at least question. Do you want to live in a decentralized world where you have full custody of the asset, or do you want to give over your asset to somebody else who's going to hold custody of it for you? Which ultimately is the safer solution, insofar as there's an argument that Coinbase has all sorts of security protocols, and they're a big company. There's lots of ways for them to protect it. And then if I lose the password or something goes wrong, that I'm on the hook.
It's a really good question. And, the crypto world is definitely still evolving. I think we are in the first inning here. We're going to be talking about crypto for many years to come. And I think people are figuring out which one is better, but the market is offering people alternatives.
But the Coinbases of the world will say, one is like putting the money under your mattress and your home is exposed, and the other is like putting it in a bank. And you think that people shouldn't think about it like it's being put in a bank.
Putting money in a bank is pretty safe, but there have been problems in banks over the years too. That's why we have the FDIC. So I think it's just again, this is crypto. This is the crypto world. It is very much still evolving, and we're figuring that stuff out.
Now that we're, by the way, in Crypto Week, apparently, I don't know what Crypto Week even means, but apparently this is what they're calling it.
Yeah. I just found this.
Do you think there should be an FDIC for crypto?
Listen, when you and I were talking during the financial crisis, my comment to you consistently was strong banks want strong regulation. Strong firms in this space want strong regulation. The reason we're so excited about Circle, and David and I first invested in Circle 4 years ago in 2021. We've stayed very, very involved. We're investors today. And one of the reasons is the vision of Jeremy Allaire to be the most regulated, to be the most safe, to have the best protocols. And that malign neglect of Gary Gensler and the SEC to just ignore everything rather than regulate it. Strong firms want strong regulation. This is good for us.
So Circle, by the way, has just been, a remarkable performer, largely because it's the only real player in its space right now. I don't know if we can show Circle stock right now. It's
The only
amazing.
really strongly regulated, open to regulation.
Well, that was going to be my question, which is what happens when and if competition really comes into this space?
In stablecoin?
In the stablecoin universe, yeah.
I think there will be competition. I think Jeremy has always said there may be multiple, but the fact that Circle is open to everyone and not kind of a private stablecoin. I brought this up on CNBC before, but one of the people who's joining our board at Hyperlink Strategies is Hyperliquid Strategies is Eric Rosengren, the former president of the Boston Fed. And he was the one that was responsible for the white paper at the Fed on digital currencies for the Fed. And one of the things he pointed out to me is that the Fed wire was not invented by the Fed. It was invented by the private sector and then highly, highly regulated. We're going to see the same thing in stablecoins. You're going to see the Fed allowing the private sector, such as Circle, to develop the technology and then highly, highly regulate them.
Hyperliquid strategies, this is your business, will compete with who? Coinbase?
So the way I would say it is if you look at the coins that are out there, and everyone talks about Bitcoin,
right.
Of the top 10 coins in outstandings, 9 of the 10 have been around for over a decade. Hype, right. The coin that is on our platform here, or on this investment, was really about a year ago, and it's the fastest growing. So there's 10 coins that are pretty credible here. There's clearly competition.
Right. Let me ask you just about other coins, and people describe them as tokens. I don't know if they trade on your exchange in the future or not, but one of the things that we've been talking about just in the past couple of weeks now has been this move to quote-unquote tokenize private companies, effectively creating almost a derivative of shares in a private business, sometimes sold to people who would otherwise be considered not quote-unquote accredited investors, insofar as you need to have a certain threshold of money, $1 million typically. What do you make of that phenomenon trend, and would your exchange or other exchanges start to play in that world? And there, you talked about regulation, where that should play.
Yeah, so look, the Hyperliquid exchange is built exactly for that, for people to build on it, to create things like that, whether it's equities or real estate or whatever asset class you can think of, it's meant to build on that. How the regulation is going to follow is a very good question. I think people really are still figuring that out. You know, last week the IRS announced that they're not looking for decentralized exchanges to form 1099s and file 1099s anymore. It's not that the IRS didn't want money, right? The IRS is in the business of collecting money. They realize it's impractical to ask decentralized exchanges to do that. So again, I think people are figuring this out. And
how worried are you about sort of the prospects for manipulation when we get into these sort of universes that effectively are unregulated?
For manipulating what? Manipulating the price of the coins?
The price of the coins. They may start to effectively become different than the actual underlying price of the asset. It's unclear, by the way, whether some of these coins will really be attached to the asset, not attached to the asset.
Yeah, look, I would say the more liquidity and the more participants in any particular market, the less likely it is to have manipulation, and that the harder it is to have manipulation.
I'm sorry to be dense. I still don't understand the whole deal. Like, why is Sonnet Biotherapeutics still involved with this? They're still going to be using their biotech assets and trying to utilize that. Bob, is Atlas Merchant Capital still going to be doing stuff like the regional banks that you just raised money for a few months ago?
Great question. We've been very diversified in Atlas Merchant Capital. We have a fund dedicated to regional and community banks and investing in them, and we have investors there, and absolutely we will continue that. About half of this capital raise, half of this $888 million, is in our sponsor group. Every investor who's ever invested with us took a look at this and had an opportunity. So not dissimilar to our first work with Circle was around a potential de-SPAC.
So it's just
the
like
de-SPAC expired. We ended up doing a private round. We had all of our investors in there. So, and actually there's a position in our second fund. So we're quite diversified. This is an area that's very important to us. I can't tell you, Becky, how many things have come to David and I over the last year or two in the crypto space. The only thing we focused on was Circle until now. And we see this as an incredible opportunity. And the biggest opportunity here is giving U.S. equity investors, by putting this on NASDAQ, U.S. equity investors now get access to Hype. In terms of Sonnet, this is very good for them. They've struggled a bit. They're a very good company. They have some great things going on in cancer cure and in therapeutics. They were frankly struggling, and I think this gives them a lease on life. So it's a merger or a reverse merger that's very beneficial for us in Hype to access U.S. equity investors, and it's very, very good. I think the Sonnet Therapeutics people would tell you, which they've certainly said to David and I. David spent a lot of time with them, that this is great for them. So it's a good combination. It's an unusual structure, but it's working for both sides.
Bob and David, I want to thank you for joining us.
Thanks for having us.
You bet.
You keep saying it's all hype. It's all hype. You want to change
I can't believe you left that alone.
Is that okay?
We're not I was going to say this on the air, but we're
still on the air.
Oh my God.
Say it anyway. You can better keep going. Keep going.
Bob and I on on the show about 8 years ago talking about an insurance company we're going to buy.
Yeah.
And I told Becky that you should put 1% of your net worth in Bitcoin, and you thought I was nuts.
I remember that. That's making the rounds again. I know.
You know? Yeah, I probably have more than 1% now.
Yeah, all right. We're bumping up. Coming up, Ed Yardeni's going to join us. Big week ahead for the markets. We'll be right back.
All right, June CPI data is due out tomorrow. That's the same day that big bank earnings kick off with JP Morgan, Citi, and Wells Fargo results. For more on those markets, we want to bring in Ed Yardeni. He's the president of Yardeni Research. Ed, how are you feeling about things right now?
I'm feeling pretty good about bank earnings. I think loans have started to improve. There's obviously been a lot of activity in the capital markets. The equity market has had a great rally. Wall Street's pretty good at trading these rallies, so I think we're going to get surprisingly strong bank earnings, which will set the stage for a very good Q2 earnings season.
Do you think, I mean, we've seen the markets come back in a really big way,
Yeah,
something like up 16.5%, 17% from the lows back at the beginning of April. Are the markets in a position to trade even higher if earnings come in better than expected, maybe with some I don't know what the outlooks will show you, but if just the numbers themselves are better than
Well,
expected.
analysts have been cutting their estimates pretty significantly.
What is it, 5%?
For weeks, it's 3.5% now on a year-over-year basis. I think it could be twice as much, maybe 7%. Same thing happened in the first quarter. I think companies have proven to be remarkably resilient on their earnings front because the economy's been remarkably resilient. So, yeah, I think it's possible that better than expected earnings will
But first quarter, we got better than expected earnings.
Yeah.
The outlooks were very muddled, and that didn't help the street much,
Right.
just because people said, we can't predict the future. We
Yeah.
can't tell you what's going to happen this year. If we get the same thing, the results are better than expected, but there's still a lot of uncertainty because we
Yeah.
don't know what the final tariff situation
Sure.
will be. How does the street react?
Well, the uncertainty is in fact all about tariffs, as you said. And I think the markets have gotten used to that uncertainty. The president obviously on a daily basis can change his mind about what happens with tariffs. And a lot of what he's doing is viewed as negotiating tactics. I think this whole issue will more or less pass by the end of the summer. I think the administration surely recognizes that they can't really afford to take a risk of pushing the economy into recession later this year into next year when the midterms are not that far off. So I'm in agreement with the market's assessment that this too shall pass and that the tariff issue will be resolved to a large extent.
What do you expect beyond just the bank earnings that we start to get this week? Are you looking towards the tech earnings? Where else are you kind of focused on this? And what other inflation numbers or other data are you looking for?
Well, I mean, clearly the CPI up ahead here is very important. I think we've all been surprised by how low inflation has remained despite the tariffs. But we may see that there is some signs that the tariffs are boosting inflation, or at least that inflation is not coming down anymore. So, for example, the CPI, based on the Cleveland Fed's inflation nowcasting, is anticipated to be up 3% on a year-over-year basis, which isn't terrible, but it's up from 2.8%, and it's not 2%. So I think the Fed remains on hold, partly because their inflation concerns will be somewhat validated by some of the inflation numbers up ahead here.
How much higher can the market go if you do get these good earnings, if you do have, let's say, inflation that's not terrible?
Well,
exactly 6,500.
Yeah, well, 6,500.
Isn't that your target?
Exactly, 6,500. And
you can't hit it exactly?
I'll try.
You could change it to 6,501.
Yeah. I don't change that often, Joe. You know that.
Well, you were at 7,000. You should have stayed there. Probably.
I started out at the year 7,000, but I think 6,500 is achievable by the end of the year. And I think it's achievable because earnings will continue to surprise. The valuation multiple obviously is back to being stretched at basically 22 times forward earnings. The Magnificent Seven are leading the pack again with a very high multiple. So I think what the market is signaling is the perception that we may not get a recession after all. This has been the most widely anticipated recession of all times for the past 3 years. It didn't happen when the Fed tightened. It doesn't seem to be happening as a result of the tariff turmoil. And so if the economy is resilient, if earnings are resilient, then I think the bottom line is the valuation multiple can stay high.
Okay. Ed, thanks for coming in. Great
Thank you.
We will be right back with a look at Bitcoin, which has surged above $120,000 this morning. We'll talk more about that in just a moment. Squawk Box will be
sustained.
Welcome back to Squawk Box. Bitcoin this morning hitting a new high above $123,000. Doing us right now on the move and what it means. Anthony Pompliano is here as the founder and CEO of Professional Capital Management. Good morning to you. I guess as Joe said, if you're going to get to 250,000 or 500,000, you got to cross 123 at some point. But what do you think is happening? What's driving it right this moment?
First of all, welcome to the greatest show on Wall Street. I think that Wall Street's full undivided attention now is on Bitcoin. And really there's three things that drove this move. The first is that there's been record inflows into the ETFs. So last Thursday, 1.2 billion, second highest day. Those ETFs now collectively have over 140 billion. BlackRock's fund is now almost $90 billion in about a year. They went from not having a Bitcoin ETF to now they have a top 20 largest ETF in the world. So a lot of inflows there. Second thing is the options expired at the end of Q2, and so all that downward pressure on Bitcoin obviously goes away. That helps kind of like a beach ball getting put underneath the water, right? Obviously it can pop back up. And then the third thing is that there was a lot of short sellers, and you started to see that build up, and as they got blown out as Bitcoin ran, you get into this price discovery phase. And if you go back to November, we went from 70,000 to 90,000 in about 2 to 3 weeks, and 70,000 was a new all-time high. What we're watching now is we broke through that $110,000 range. That was the previous all-time high. I don't know if it goes to 140, but it sure is going to make a big move here because you are in a true price discovery phase.
And how much of this do you think at this point then gets driven by ETFs, or do you think it's really more going to be individuals buying the underlying asset?
Well, the reason why I call it the greatest show on Wall Street is everyone wants Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund. Everybody wants Bitcoin.
Should we be scared of that? Meaning, we were talking about just economists and analysts were like, when the economists have a consensus view, you usually should go the other direction.
Yeah, well, the economists still don't like Bitcoin, so I think we're okay. But if we could take a look at, the S&P, everyone wants the S&P, right? And so what you want is persistent kind of price insensitive buyers, and that's finally what Bitcoin has. And it's not just coming from retail investors; it's also coming from these institutions, and I think that'll continue to drive the price.
Doesn't matter what Congress does anymore.
I think that Bitcoin has always been a decentralized asset that really didn't care what anyone else did.
But part of the bullish, this was a friendlier administration, friendlier Congress.
Oh, it definitely helps. It definitely helps, right? If you had to choose.
Is the bill going to pass?
Is what?
Is the bill going to pass, the one that's pending?
I think that the bill will pass, but again, the bills, most of the bills are actually not addressing Bitcoin in particular.
Right.
Stable coins, market structure, things like that.
General crypto universe, though.
Yeah, I look, obviously having an administration that created the Strategic Bitcoin Reserve, leaned into Bitcoin, I think is a very bullish element, but I don't think that Bitcoin was going to go down or not work if the administration wasn't positive on it.
You see Superman named his dog crypto. I'm not kidding.
Should have named it Bitcoin.
No, it's with a K.
With a K
That's
after
kryptonite. Yeah. Why would Superman name his dog after kryptonite?
To prove that he can try.
No, maybe it's after Krypton.
Oh, yeah.
The planet.
Probably
after Krypton.
I got a
But
question.
which of the bills, there's two bills that they're focusing on. There's one that's probably easily going to get through. The other one will require help from Democrats.
Yeah.
And where do things stand on that? That may be a heavier lift.
So what's really interesting, I interviewed Patrick McHenry a couple weeks ago, and what he said is they split this. It used to be one idea, they split into two things, and he thought it'd be easier to get the stablecoin thing through first.
Right.
He actually thinks that they should put them back together now, that their support, and go ahead and get it approved. I don't know if that will happen, but I just think that there is so much momentum around this that it becomes a situation where there's more pain rather than anything if you don't support this. Like, it is very obvious. I tweeted right before I came on. Warren Buffett is sitting on 5% of the treasury market. Boomers are buying up bonds. Young people are gobbling up as much Bitcoin as possible. What do you think young people care about? They don't care what happens in the bond market nearly as much as they care about what happens in the Bitcoin market. And so I think that politicians are not stupid. They understand that the future constituency that they have cares about this sector, and they're going to lean in.
Politicians are not stupid. That's quite a statement. Can you prove that?
You pick which ones you like and which ones you don't.
Anthony, I don't know if you want to weigh in on it, but obviously we said Bob Diamond and his colleague on 2 minutes ago. The idea of whether custody for coins should be living inside of a Coinbase style, somebody else doing it for you, effectively like a bank, if you believe that without the FDIC insurance, I should say that up front, or whether you should effectively own it yourself, put it under your mattress with some kind of protections around it if you believe that there are.
Yeah, well, I think that there's different people in the market. Now, the hardcore Bitcoiners, right, and I fully believe in self-custody. You should have the right to, and you should learn how to actually take control of those coins, be able to move them, hold them, secure them, etc. And so self-custody is a key part of Bitcoin and the value proposition to the world. At the same time, we live in a real financial regulated world where there's a lot of investors and LPs that are not going to let a fund manager or a public company have, a CEO who's walking around with the private keys. And so there are going to be these qualified custodians, third parties that people use. And so it goes back to what are you optimizing for and what are the limitations placed on you? Again, a public company is very different than an individual. I think individuals should go learn about self-custody. We should also recognize that public companies are in a different situation.
Okay, Anthony, great to see you. Appreciate it.
Thanks for having me, guys.
Bet.
When we come back, we will get you ready for the trading day ahead on Wall Street. And one more reminder for you, don't miss our interview tomorrow at 8 a.m. Eastern Time with Home Depot's co-founder, Kim Langone. Squawk Box will be right back.
And a final check on the market before we hand it over to Squawk on the Street. Right about what we've seen all morning long. Don't forget tomorrow we have CPI, and at the end of the week, earnings season begins as it always does with a lot of bank earnings, and then we'll be right in the middle of it next week, and we should get some insight into exactly where we stand in this economy. Maybe not. Bitcoin, a big feature this morning. For the last 2 weeks, it's done nothing really but trade higher. Got as high as 123. We'll take a look at oil or bond market. I think 442 on the 10-year or so, and there's WTI crude just below 70. We will all be here again tomorrow. Happy National Mac and Cheese Day. Enjoy.
There you go.
Happy National Naked Day.
National Nude Day as well. I wasn't going to say that.
Wow.
Becky, walk on the street.
Earlier.
Go home and get nude right now. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk of the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Favor has the morning off. Futures are red, but off the lows as the street wrestles with a new threat of 30% tariffs on EU and Mexico imports. Big week of inflation data and bank earnings with the long bond near 5% once again today. Our roadmap begins with the president announcing those tariffs beginning next month and threatens to raise them further if those countries retaliate. Big test for the rally as earnings season kicks off essentially tomorrow with the banks, and then Bitcoin new record highs as crypto week begins on Capitol Hill. Let's begin with this new week for the markets as they digest the president's latest tariff threats. Got some sound from Hassett on that a few moments ago.
Right. Let's listen to that because I think that there's a confusion about whether it's just on top of things, particularly with Mexico. I don't know whether he explains it. I don't think he really elucidated that much. What worries me is that, like, the last countries, Mexico buys a lot from us. Europe, not so much. Though we have a big trade, obviously, $1 trillion in trade there. But what happens if you build a plant in Mexico? You build a Mercedes plant or a BMW plant. Two have been built near me in Mexico, and they were, we thought, covered. Are they no longer covered?
You mean under compliance with
yes.
Europe?
And that's what I want to know because some of these plants were activated after USMCA, and we all thought that they were covered, and we don't have any clarity about what's covered and what's not.
Right. You're kind of alluding to, I don't know, maybe the page one of the Times today, which talks about our trade policy losing any semblance of organization or structure.
Exactly.
That's how they put it.
Yeah, I mean, it's almost like you got to go to someone who's like, you got to FedEx and say, what are the instructions? If it's coming, if it was made, if there's an Allison transmission, really huge plant for GM near me in Mexico, and they, you send your truck down, gets the Allison, goes back, totally covered. USMC, I mean, brilliant deal. Mary Barr's got it. It's great. Is somehow they unwinding that? I mean, what happens? I mean, look, I'm told, like, we report, just a little example, we import mezcal, okay? It's kind of the lifeblood of my wife's company.
Yes.
And we got the exemption. We said, listen, you were covered.
That's good.
Right, but we started the company in a certain year that would be, covered, USMCA. Are we now suddenly taxed? I mean, and by the way, you're down there, and here's the answer. And then you go to the American side.
Right.
So, I think someone may think there's clarity in Washington. There's no clarity where it counts.
Or where the rubber meets the road, so to speak. But you have pointed, Jim, in recent days to shares of Ford as a proxy for how this is going to benefit American market share.
That's the plan. I mean, the plan is to make it so that not only is China blocked, but everybody's kind of effectively blocked, that you just will not want to buy a like for like from the foreigners. But it's almost as if in return, we have to start paying the piper with Mexico, and you got to bring that back. But there's been no provisions to say you have to bring it back. So if you're, Farley's worried mostly. I saw this tape of Jim. Jim's worried mostly about warranties. But I think that Jim feels, well, wait a second, we don't sell a lot of cars. They don't buy a lot of our stuff. So, hey, listen, we're giving you the Heisman. At the same time, how much? He fortunately makes most of his product in America. So he should be okay.
Right.
Mary Barr, no. GM makes a huge amount in Mexico, huge amount in Canada. Right. So they're very different. And yet, what stock's been going up? Well, GM. So it's like, again, no clarity. And Wall Street has no clarity. I gotta tell you, because people are buying stuff and they think that there's something they know and they don't. In Europe, it's really hard because is it services? Is it goods? We have a great services. We have a terrific services surplus. When it comes to goods, I don't think people realize they don't buy a lot of stuff from us.
Right. But your point about people are buying the market, and the bar for Q2 earnings is fairly low, 4%,
Absolutely.
Right?
And I think that what's happened is that there are people who pretend to have clarity and are buying stocks because they think they have clarity, but there's no clarity with boots on the ground. There's none. And we all want clarity. We're not getting it. And I think that one of the reasons why that might be is that gives the president the ability to negotiate. If someone comes in and says, listen, guys, we need a break. If Claudia Sheinbaum comes in and says, look, we need a break on all these VWs we make in Pueblo, biggest plant in the world. Well, I mean, there's the ability to make a deal, but there's, as we learned from old days, it takes a year and a half to make a deal. And everyone's got to make a deal by August 1, so.
Right.
No one
we
can
got,
do that.
There's the India team is in the U.S. Bessent's going to Japan.
That's good because Japan and Korea are real.
Yes.
Japan and Korea are about to get hit with like who the hell knows because the president really thinks enough, and yet he's saving them for last. I mean, we're going to come in here and we're going to see 30 and 40 on those guys right there.
On
Yeah,
Japan tariffs.
34 because their real belief is that they've had the run of the joint and that the plants that they have here. This is really important for people to understand. The plants they have here are regarded as being ghost plants. Basically, they send the cheap stuff is made here, and all the brains of a car is sent here. So they don't regard those plants as being plants that
Sure,
matter.
I get it. How much of these concerns then, the lack of clarity, is market negative for stocks?
Somehow people believe that this is all going to be resolved well. And that I think the reason they think that is because they're looking at how little business we do in these countries and saying, you know what, maybe Trump's right. I tried to make this point on Friday
At the club
meeting that I think that Trump has a better view of what's really going on in the world and trade imbalances than the media or Wall Street. Because when you talk with the Trump people, they always say, they don't buy any of us anyway. They don't buy any of us anyway. And the worst are Japan and Korea. And so I think that they should make a deal. Like, South Korea should make a deal right now.
Right.
Because they are about to get hit with the ugly stick.
That said, Hassett did struggle over the weekend answering questions about what authority the president has to tariff Brazil based on a judicial handling of a case regarding Bolsonaro.
Well, one of the things that I think people, again, are not understanding, like when he talks about Powell, the actual law is subject to interpretation. Now, we all just think, well, the interpretation is open and shut. But the president doesn't think like that. The president is supposed to. It's open interpretation. Now, does someone think that that this is like the Justice Department under, like, Nixon, where they were independent and they decided to put a stop to Nixon? It's not like that. The Justice Department is run to some degree by the president. And by the way, I say that not because I'm a rogue. I'm just saying that's kind of like the way it's been. So what? Is Pam Bondi going to wake up, Attorney General Bondi, and say, you know what? I question the Brazilian deal.
That's not going to happen.
If you think that, then you should definitely short the market.
Right.
That's just. But I don't think that she's going to do that.
Right.
I don't think that the Justice Department is as independent as. It's a little more like, the president could say, hey, Kramer, it's a little more like Bobby Kennedy and JFK. And I would say, yeah, absolutely. They're like, that was like a terrible thing.
Yes.
I happen to like Bobby Kennedy. That was terrific. I campaigned for him. Then I'm old enough to do that. Say it's like I campaigned for Truman. But I do think that people should recognize it's not the first time the Justice Department's been very close to the president. And I think the president would say, why doesn't everyone recognize that the Democrats had it and no one criticized Bobby? They did.
A different ball of wax completely.
Yeah,
That's not a fair analog.
Right. I mean, one of the things I said, the biggest risk I said at my club meeting was that we have two Federal Reserve chiefs. Right now, we pick a Fed chief, and the president says, okay, this is the real Fed chief. And then he picks a whole new group of people, and he says, this is the new Federal Reserve. And so we have two Federal Reserves. Now, what's going to happen? Is Pam Bondi going to crack down? Chief Roberts can't say anything until it gets in front of him. Who is going to? Chuck Schumer? Oh, he's a Republican. He's a Democrat. We don't have that kind of government right now in the country. People voted for Trump. Trump has that landslide win, as you would say. And if he wants to appoint a new Fed, who stops him? The media? You think Fox would
ostensibly, it would be the reaction from the market, whatever that reaction is.
Right, and I think I actually think that it would be negative.
Well, Deutsche over the weekend says, they say the ouster of Powell is underpriced.
Right.
And that it would probably create a 3 to 4% drop in a trade weighted dollar.
I agree with that. That's my biggest worry, is the second Fed, the Fed that has more authority than the first Fed. And the idea that could happen in our country, I don't think people realize that's probably on the agenda. Why not? Again, it has to do with who's going to stop the president. Who? I mean, they're trying to get Fed Chief Powell and the way the office is decorated. I guess what they wanted to do, go to Wayfair?
Well, now we have a report out of Axios this morning that Powell has asked the Fed's IG to look into this headquarter renovation.
Good. There's someone who understands the way the game is played. Because if the IG looks at it, I think the IG is going to say, listen, half of the stuff's IKEA.
There's also the additional layer of whether or not the next Fed chief, whoever it is hobbled by doubts that they have any independence.
Well, I think this whole idea of independence is overrated when it comes to the president. If you go read like Timothy Snyder, when he talks about the concept of tyranny, he said, listen, you have one branch and it's in control of everything, basically. I mean, because the Supreme Court's very weak, doesn't have an army. The Justice Department, I think, is effectively run by the president. And when I say these things, it's not, look, it does not even Democrat Republican. This is the setup, but nobody talks about it. So it's very strange. Nobody talks about it. We all act like it's as, that we're in a Biden administration or something. We're not. And I think there are a lot of people in the country who say, thank heavens we're not. Thank heavens justice is run by the president. Thank heavens that Jay Powell understands that there's no independence.
You think part of the country applauds a less independent DOJ and a less independent Federal Reserve?
Hundo P, as my kids would say. Yeah.
What's that mean?
100%.
100%.
Dad, 100%. Yes, I'm not making a judgment on it because that's not for me to judge. I think the notion of independence when it comes to President Trump is not as important to him as getting control of the deep state, getting those people out, and making sure that we have our Fed chairman, because this Fed chairman can wreck the economy. We need that Fed chairman to cut because we're going to hurt things with the tariffs. Now, these are all things that are not. I'm saying everything's on the table. Like if the president were here, I think he would say,
Right. Big implications for the next time there's a Democratic president.
Implications for the Constitution.
Right.
And I'm not saying the Constitution is being overlooked here. I'm saying who can stop the president if he wants to do a second Fed chief? Tell me who can stop him. I can't think of who can do it. Wall Street, 4% decline. What he would say is, hey, you're still money good.
Right. Long rates, mortgage rates.
Yeah.
No.
The 10-year, I don't know. The 10-year goes to 5.25, and we sell the market. Now, what I'm saying is, this is the stuff I was talking about at the club. Like, none of this is heresy in the New World. It's just not heresy. I think it's reality, and I think that no one talks about it because they don't even think it's possible. I think it's in play.
It's been very much a boiling the frog kind of dynamic.
Yes.
You talked a lot. I want to play a bit of the sound from your club meeting on Friday where you tried to explain what's behind the enthusiasm post-Liberation Day. Take a listen to this.
At the heart of the individual bullishness that has smashed so much orthodoxy by individuals is this brings bounce back from Liberation Day and Armageddon Week, which was nothing short of miraculous. And
you're an idiot. Okay. So Europe's having a hard time. And just a month ago, people were saying they're going to throw their money in Europe. We got a Darvis box on Circle. Boeing hit 132 Friday. 232. Market chatter Tesla to face first ever injury trial over a fatal autopilot crash in Florida. Well, give me some tea. Don't forget to vote. Oh. Today's close will be higher than the open, lower than the open. I'm going to say flat. Almost unchanged. Because we already had a pullback. I'm Mega now. Who's that? Anti-white hate after ignites massive mega wave. She's drunk. There used to be no alcoholic back in the day. Guy always acted like he was drunk. Dean Martin's kind of like that, but he didn't drink much. Kamala, I think, is just a natural looking drunk that might not even drink. I truly believe it. If she does drink, I mean, I don't know. I'm not around her, but she just seems like a natural drunk, sober. MBIO at 265, down at support. Meta's at a support level. There are a lot of places, a lot of stocks at support right now. Oracle was getting pumped hard last week. It's pulled back some. Could drop a little bit more and be a strong buy. Hope everybody had a blessed weekend. Trish, I love you. Strong buy. Oh, whoa. Good morning, Robert. Anybody do any stock homework over the weekend? Learn something new? Double bottom on AMD, triple bottom. Hi. Let's see if I get me a bounce play off the SPX first thing this morning. Oh, Slashy S just had a big spike. Something happened here. Exchange traded fund. We're about to hit my trend line, 523. SPY, I came within, what? 10 cents of hitting my support this morning. I did hit my alert. We've got 3 more minutes left, and I'm going to get my tea started. Okay, well, get ready for the bell to ring. Oh, better make sure I got that ready. SPX. Ding, ding, ding. How did I know it was going to do that right then? March 14th, the 6270 strike. It's probably opened up some now. Right at Head and Shoulders. Right shoulder on. $255, 6270s. This would be a scalping trade. We're at 350 right now. Take it. Got the first trade out of the way. Time to go to the beach. Get ready again. We're created an orb here. So these are now at 270. We're at a double bottom. I think we'll have a lot of volatility this week. I'm looking at 270. I love playing pullbacks. We got a long leg doji with an inverted hammer and a triple bottom on 1 minute. They're at 320. We're at 295. See if we can get back to the 9. Now that back to 270 here. If this doesn't hold very well, I'm going to get out. We got that orb. We just now broke support. Ooh, gross. I make my own tea here, and I got my filter and almost spilled tea all over myself. Ooh, 235. No! Oh yeah, let's trade real fast. 240. 270 and 240 times 6. Oop. Not good. On the 5 minute, we're on the 9 on the slash ES. On the 1 minute, we got a double bottom orb with a hammer. So I'm at 270 now. I'm going to take it to the 9, or at least right here. $62.52. There's $3 exit idea. I got 270 and 240. Now 295. And I got a couple holding. I'm holding a couple here. We're at $3. Good job, Bardo. Do you see why we're at resistance there? If you don't mind asking, how long have you been trading, M. Barto? Oh, 5 years. Okay, that's good. Do you like my style of trading? Good job, S. A plus. Good morning, Richard, my favorite fan. I got 2 trades out of the way now. I'm still holding a few. Now we got to see if we can break yesterday's resistance. Hike. I couldn't believe I went to the grocery store this weekend. I'm usually paying I like to pay about $10 for my hamburger. They wanted $19 frickin' in there, and I'm going, what the heck? For the same size crap. Listen, so I bought some other stuff there, other hamburger that was on sale. A smaller batch. Back to making mini hamburgers again. Here we go. It's debt. Break the 9 or get out. One or the other. We've got higher lows. We've got an ascending triangle. So let's get a little spike. Boom. No. What's NVIDIA doing? And Tesla. Tesla's got that lawsuit. No, okay, NVIDIA's coming down to support here. I charted this one over the weekend. 162.38. Why is it not? NVIDIA tech's all pulling back. So we should get a rebound on these here shortly. They have had a good run, so we can't detract that. And I said, NVIDIA, I was in another room. Say, question is today, what happens to a stock when the CEO sells shares? Can anybody answer that question? What happens to a stock? What does it do to it? Does it give it positive momentum to run? Or is it maybe a red flag? NVIDIA is about to hit my support. Let's see if I'm right or wrong.
It's only a red flag for the uneducated.
What's that?
It's only a red flag for the uneducated.
That's right, it's a red flag.
They don't understand that the filing to sell those shares has to be filed months in advance of the actual doing it.
But once it's sold, is it a red flag?
To the uneducated, it is.
Yep. What's NVIDIA here? Good morning, Funk.
What's up, buddy?
2 green trades already out of the way.
Yeah, I've been sitting here watching. I'm waiting on my level.
I'm getting ready to maybe do a NVIDIA here. Oh God, look at that 165 strikes on NVIDIA for this week. 30,000 contracts. And I don't know when them just came in. Let's see if we hold here. I'm gonna go ahead and buy some. Give it a shot. Yeah, Vegas told me the same thing. Well, it's already on the books 3 months ago. Okay, get ready. I got a 165 strike at 151. It's kind of risky, so I'm just going off of my support, not really a technical. I got a bill I got to pay today. Can't forget about that. Up. 157. Come on, break out. There's $90. $165. So we're at the 21 right now. We got a resistance up here at 62.52, Rob. Now, where the hell? There it is. I couldn't find my platform. I was going nuts. I want to get out of this trade. We're $290, $295 now. Coming to a double top. Woo! Now that don't make sense. Actually, it does not make sense. I should have got more out of that. What the hell happened here? Huh, I didn't add on. That's what I didn't do. Huh. Well, that don't make sense. I'm definitely at 63 right now. It seemed like I should have got more out of that trade, but I didn't. The 165s are now at 180, 181. You could take some profit here. So this was a megaphone that I drew out over the weekend. And I wanted to come back and touch this here bottom support level off this megaphone. It's also, no, it's not a pennant flag, it's a megaphone. I'm out of it. This is Bitcoin week. And I heard Elizabeth Warren was a bitch about Bitcoin when Biden was in office. Coin's got a double top coming in. And we got Mara. Mara Big Pop and Riot. Riot hit my resistance and pulled back some. Coin. AVGO, another good one. We got a double bottom. We hit my low support off the Fibonacci on a AVGO. It's a little overbought. And I screwed up this one last week. This was my red trade. I thought I could get it off the 200, but never did amount to much. SPX on the hour hit the 63. No, it didn't. Let me clean this up here. Right now we're on the 50. So that has to hold. With a triple bottom wick at 62.38. And that's a double bottom wick. So that would be a triple bottom if we came back down the next hour and hit that. Oh man, right to it. So, let me see. We've got a head and shoulders. It has to hold that support or it drops on down. Let me see where the price is. We're at 220. What do you think, Rob? We're going to hold it? Jim says, what the heck? SPX Lotto. Okay. $185. Could be some risk here. Slash ES on the 1 minute is at the 50 and the 63. We could hit the 63 on the 2 minute. We're at the 200 on the 30 minute. Then we're at the 21. We hit the 21 on the 5 minute. We got 3 black crows with a tweezer bottom on the 2 minute. We've bounced off the 200 earlier this morning. Kind of bearish right now, but we'll see here. There goes my phone. Where's my phone? Huh. Fuck, can't find my phone. I heard it. Huh. It's my phone. I got time to mess with this. Interesting. Oh, it could be the best.
here at the lab on the ES right now.
Who's this again? Yeah. What do you do? I got a phone call. Yeah, but gastro painting and coating, I don't know nothing about that. I'm wondering if you got the wrong number. Okay. Well, my name's... Yeah, exactly, ma'am. Okay. Very good. I get gas every once in a while, but, you know, that's too much information. Bye-bye. We're at 185. We got to break the 9. Showing a little bit of resistance. Gastro painting and coating. Gastro painting and coating. GASTR. Gastroenterology and autonomy. I don't know nothing about these gastro painting and coatings. Jimmy's still in as your call. We'd easily come back down and do a double bottom if it's we got a steep megaphone to the downside. We got a head and shoulders inverse. Now, I had this charted up earlier. I had what? What was that?
Sorry.
What was that?
My energy drink is not working today.
Oh. I'm still in these babies. Rob, you still in? Richard's in. We got to break the 21 here, Richard. I wouldn't expect a lot of angel dust today. But we do have a resistance up here. We have 2 of them. We actually have 3. So let's put these price lines here. There's your first one. With a yin yang. And then you've got the 21 and the 50 right here. So we got a 62, 51, 64 right about now. You could cut it loose here and just be glad you got what you got at 215. We're at the 50 right now, and this is a Head and Shoulders with a two-headed snake. It's 225. All right. Now, what did I see up here? I saw something. There it is. We're definitely at a resistance to break. This is a Head and Shoulders from an inverse Head and Shoulders. So I'm out of it. I'm not going to fuck around today. That's funny. I had a Sunday school's class was about etiquette, cursing. Let me see. Get my Bible here. Now I say my cursing's helped out. It made some difference. Before you speak, ask yourself 3 questions. Is it true? Is it kind? And is it necessary? He likes me cursing.
So I think if you lose this 207.68, which is market low, that you're going to bounce somewhere in this good zone, so around this 206 mark. What I'd be looking for. I don't know if I would take any swings the day before CPI.
Yeah. SPY is at VWAP.
Don't you have PPI this week, dude?
I know we got a lot of numbers coming out.
And retail sales. Yeah, this is a freaking very volatile week. And you start earnings. This is not a week for big swings.
It's a week for consolidation. And then right now we're holding up the 9 on all time frames on the /ES. And that's the 30-minute, 5-minute, which we just kind of trying to break through, and we just fell from the 1 minute. Let me see here. I'm gonna get back in this trade again. Right about now in the 2 minute at 150. Come on, give it to me. There it goes. We'll see if I'm right. This is risky. Again. Right off the second right shoulder for the second time. So you got your head and shoulder, you got your left shoulder, right shoulder, boom. We're at 180. Baby steps. $190. Now $190, I could deal with that.
All the liquidity's above 6297 and 6300. Yeah, you don't have any hours. Do you get down there around the 62, 63 range?
195, Rob.
On a knife down there at some point today, and that's what I'm waiting on.
Yep. Now you got to listen to what Punky's saying. This is what I try to emphasize to everybody. Once you develop a plan, stick with your plan. No matter how much it hurts. And that's called discipline.
I'll show you what I'm looking at on the quick map. That way y'all can see it. It's pretty freaking clear.
So we got 3 white soldiers, and we just broke to 63. So we got another head and shoulders coming up. See what AMC's doing. Now I got a little bit of, we got a head and shoulders on SPY off the 200, which I called down there with a tweezer bottom. What was I going to look up here? AMC. I just don't want to buy this stock, man. I've been so ragged on it. Just out of all the stocks on Wall Street, I've made good money on this stock. Don't take me wrong, but that was before Roaring Shitty got involved. And how racist Hollywood has become. With their wokeism and everything else, it's just not my kind of thing anymore. I don't go to movies. The only thing I like about AMC is the popcorn. New high on /ES. We're at 330 on my last option here at the 6720s. SPX. Great call there, weren't they, Rob? Okay. So let me explain this here trade to you. Just kind of show you the pattern that I'm seeing. And I want you to understand why I just exited the trade. So what we have here is an inverse head and shoulders. We hit the right shoulder, left shoulder, right shoulder, right shoulder with a tweezer bottom. So I jumped right into the trade. Inside of that inverse head and shoulders, we got what you call a megaphone. So I run it up to the top of the head and shoulders, which is right here to the right shoulder, and I took out my first couple of calls. And I held some. Then we have a triple top. 1, 2, 3 on this megaphone. And as you approach the 200, you start to hit some resistance. So I took it out. I'm out. So inverse head and shoulders with a megaphone triple top to the 200 EMA on the 1 minute. And I'm doing something that Yoko and others have told me. Funky might have hold a couple of them calls, because how many times have I said, damn, man, why'd I sell them all? Why'd I sell them all? I could have made another $500 or $600. I could have made another $2,000 if I just held them all. You see, we hit the triple top up here on the megaphone. So that's 5 for 5. And we've been open an hour. What code should I make these here? Let's go with just yellow. No, yellow ain't gonna work. Let's go with purple.
Nope. Not calling Tesla. Do not trade Tesla. Hate Tesla. Not calling it. Not putting anybody in a trade in Tesla. Ask Rob. That's his baby. I lose money every time I trade that damn thing.
Okay, we're back at support. We're at a pivot point. I'd like to see it come back down and hit this 50 right off this right shoulder. But we're at a pivot point right here. So I could start position now. Let me see here.
Look at the 5-minute ES. Look at your 63.
Okay, let me grab. 1.90. And look at the 63. The 5 minutes at the 9. We could easily hit the 63. Like, is that what you said?
Mm-hmm.
Yep. Yeah, I agree. The only thing holding me up here would be the 1 minute.
Yeah. I like the 2 minute bounce. It bounced off of it a while ago.
$165. This will be my last trade for lunch. Okay. Getting a little dangerous now. It's not slim pickings anymore. Ah, no. Damn. Not my fancy book. I got 178 average. 6 contracts. Got my shoulder pulled out one time in boxing. The guy hit me so hard I still have problems with that. I used to work in a lumber yard stacking wood for the keel. And these stacks would get up to 6 feet high. And we'd do about 10 of them a day. I had so much upper body strength from doing that. My shoulders had them little bubbles above them, you know, and had a big fat neck. So I'm getting out there one day and we got into a rock fight and The boss caught us and fired me.
I'm gonna wait for this next 5-minute rollover on ES and see if they bring it down to the orb. That would be nice. I'd get in there if they could get to the orb at the end of the 5-minute and tweezer bottom.
Yeah. On the 5-minute?
I mean, hell, even if they could push it to the 63.
Why don't I have the orb up here? Fuck.
Give me 3 black crows on the 5 to the orb. Oh, well, frickin' take that.
I'm still in them. I don't think I'm going to get too shook up. I got a 62.42 on SPX. And then the 2-minute on your ES at 62.82. We'll get some broccoli started and have a slider and broccoli today with avocado spread. There I'm green. We're at the 63. We got a Head and Shoulders right here. I could get out of it and go have lunch. I'll get caught in this. PLTR had a nice little breakout today. Mr. pulling back to support. If it wants to stay bullish, right here, Mr. And if I was to trade the options, what's NVIDIA? NVIDIA's at 190. So I could have got 191 out of NVIDIA. What am I doing here, Mr. 18th. The 475 strike. Nah, I'll wait. I mean, that's a good spot. I'll wait. Then we'll look at chips and see how they did. Look at that. We bounced on all them calls I did on the AMD, NVIDIA. I took NVIDIA. I should have took AMD also. But NVIDIA hit my support. That's why I took it on the Mega. But there it is. We're at the 63, we hit the 63 on the 1 minute on SPX, and it kind of halted there for a second. Not halted, but slowed down, stopped. We want you to break. We bounced off the VWAP on /ES 3 different times. And we got a triple top. Resistance above 63,100. I think I would have took that trade if I saw that. I would have added on or something on /ES. Or I might have, I don't know. I didn't, but I definitely would have added on right there. Watch Mr. here.
Yeah, the orb on Mr. is 444.30.
Yep, that's right where my trend line is. got it. There we go. Jimmy's getting, no, not yet. I need more. These things ain't working like they should. We'll wait a little bit longer to the top of the orb, which is now head and shoulders at 62.55.29 on the SPX. 62.55.29. I'm going to start my lunch and I'll be right back. I'm still in this thing for now. Not very heavy. No. We got a 1, 2, 3 coming down. Ten more minutes before us fat cats go to lunch. I didn't add on there, boy, that'd have been nice. Off them 3 black crows. I'm still in these suckers at 6 of them at 178. I want to get back to the top up there, top of the orb. Oh, there we go. Yay! Dang, I wish I'd added. Okay, today's commercial is brought to you by, let's do this right. Holy, cook 2-pound hot lye. Today's commercial is brought to you by Joy Luck. It's jasmine tea. Now you can go online and pay $14 a box for this, and you'd get 8 ounces of leaf tea. But our local store here will sell it to you for $7 a can. So please, shop Joy Luck Jasmine Tea, brought to you by Washboardjim. Well, we hit the orb. Called the reversal on Mr. AMD hit the 200 double top. Meta double top. Everything's kind of at a resistance. Oh, 205. Here we go. Go take that. Profit, profit, profit. We're at the head and shoulders right now. $2.15. Thank you very much. Now I can have lunch in peace. Man, I could have got them at 130 and really added on to them suckers. I'll be right back. Cooking lunch. We're definitely at resistance. Always clean. Man, they're at 280 now. How may I help you? Dadgummit. Can you believe that? They're at 280. God. Man, I can't believe that. 280. And $360 left on the table. Picture right here. Not much better. The video broke out. today's lunch, sliders, broccoli, and avocado cream.
MSTR. 5 minute, 5 minute, 200. 10,000 buy orders sitting at this 445 level. Man, she's breaking.
Which one?
Master.
Yep.
She falls below 443.50. She's going to 440. Got another 10,000 buy orders sitting there. Setting my alert at 441.50.
Fundamentally, I'm very bullish. In general. A lot more than these fat cats are. Sorgensen got on CNBC this morning, Squawk Box. Joe was saying, well, a lot of institutional traders are starting to become more of a bullish, and they're leaning more against recession now. And Sorgensen gets on there and says, well, that means we need to short the market. I'm saying, you people are nuts. You weren't saying that when they were saying we were going to go into a deep depression and we end up bouncing. You weren't saying it back then. To buy the dip like I was. And that was all technical, not fundamental, because we hit the 200. Mm. We want to be looking to buy pullbacks in the S&P, says Citigroup Scott Chornert. Retail is the enemy to them. That is so 100% correct. retail traders changed this market. I got into a big argument with a guy once in one of my old rooms. He definitely always followed institutional traders. And I'd keep asking him, are you still in the stock? Are you still in the stock? It's down a couple bucks. He passed away last year, but he was a big reason why I left that room. I got sick and tired of listening to him talk about institutional traders all the time. They've been pumping Circle today on CNBC and Schwab. $10 bounce today.
Got a mark set for 440.50 studio.
Circle.
Got 11,000 buy orders sitting at 440 even.
Circle new high. We're at the 200 EMA right now on SPX on the minute. We've got an ascending triangle on /ES. Gonna know something here soon there, Funk.
440 looks like a pretty strong hold, even when I turn the Bollinger Bands on. 440's dead center of the Bollinger Bands on the hourly. See if there's a trend line I can draw on the hourly. Gotcha. I don't see any orders on Master coming in through cheddar flow, so. Looks like they're trying to drop it at the end of this 30-minute candle. Hell, there's another confluence. The 63 is 440 on the 30-minute.
Well, they're talking about Lulu again. We've got a new high here on slash ES. Lulu. 20-day 1 hour. Okay. I'm going to set an alert right around 228.81. A little bit above it. Make it 229. For the alert. That'd be a Head and Shoulders inverse. That's about a $3 dip. $2. Yeah, $3.
Yep. Master Displeaser button.
Okay, well, I've got that one off my chest. Ooh. SPY just hit my resistance. Charted yesterday or this. Let me see what that was. Oh, excuse me. That was a really good meal. Yep. You see here on the 30-minute, the SPY, left shoulder, left shoulder, left shoulder, left shoulder, head, right shoulder, right shoulder, right shoulder. It's called a Head and Shoulders. We can break it a little bit. No, not much, really. Yeah, it's right there. That's a hard resistance on the SPY right now. Very hard. Usually they break out on the third. If they're going to break out, they're going to break out now. This is the third touch on that shoulder line. That's on the 30-minute. RSI says it's overbought or close to resistance.
If you believe the journey is the destination,
The big sell orders on the ES are at 63.09, so this could just be a 9 tap on the 2. All right, Rob. You in here? Oh, I see you. What do you think about this 440 reversal on Master that I got called? I see 10,500 orders sitting there. It's a 63 on the 30-minute. Like, there's a bunch of consequences at 440. I need to get you to check me on the cutter foot.
It's a double bottom on the 30-minute.
Wait patiently. I'm gonna snatch it at 440 unless you can say otherwise. The only thing I don't like is that the EMA cloud is flipped red and the 63 EMA is just dead across 200 SMA.
You got a yin yang on it right now.
I think we're pretty close to a reversal on it, but I just.
I have 441.92 to hold.
Yeah, I have 440.51. Well, my alarm set at 440.51. I have 440 even.
Yeah, I'm right on it. Yeah, it's right on it right now. It's falling wedge. And we just hit resistance too in the falling wedge on the 1, 2, 3. And we have a 1, 2, 3 bottom, so this is squeeze. Well. I like it too.
I want to see what happens right here when it retests this orb. I want to see if it reclaims it or if it rejects it. So far it's rejecting it. It tapped it. Yes, and you go to 63 on that, like I said a while ago. Doesn't have any sell orders till you get up there. Master 440 now has 12,000 orders.
I'm gonna go ahead and make my, well, I can think about it, make my payment. Consolidate. We're getting ready to squeeze. We'll find out what this is going to do here. And I'll be right back.
Consequences from that policy. But it's interesting because I also believe that Cantor Fitzgerald reiterating its neutral rating at $15 price target, citing reduced guidance, worsening macroeconomic conditions, tariffs. They've also talked about the tax credit as well. And then also, if you look at the sort of broader space, Diane, we had a JP Morgan analyst also, I believe, naming both Tesla and Rivian as top short ideas in the second half of 2025. Yes, so their rationale seems to be some of the sky-high valuations that we've seen. It seems to be a bit of a theme we're seeing right now, shrinking subsidies, as I mentioned, and growing disconnect between expectations and reality. And not to mention, you know, when you look at sort of the broader theme, I mean, EV adoption hasn't been really gaining traction, or at least the pace that some had expected, particularly in this market.
And the tax credit going away, that's a disincentive. All right, thank you, Sam. That's our Sam Vadas, Schwab, a network contributor with a look across the EV and space, in particular, Rivian. Time now for the disruptors. Joining us once again, we've got Alex Coffey, senior equities contributor here with today's company. That's a firm. It's being hit with the downgrade as well. What are the details here, Alex?
Yeah, good morning, Diane. Looking at a firm here, stock catching a downgrade, as you mentioned, from BTIG. From buy to neutral, and the reason cited is they see continued signs of margins pressure, but at the same time they don't see the accelerating gross merchandise volume growth that you would need to see to offset that margin pressure. That's likely due to increased competition, not only from credit card companies and traditional financial companies, but also these up-and-coming fintech players that are continuing to invest in buy now, pay later. So long story short, very competitive space that's pressuring margins, but it's also making it difficult for a firm to show accelerating revenue growth, and they just can't make the bull case work with that backdrop.
Okay, so a firm not being a firm today. Give us your take on then how you approach an example trade, Alex.
Yeah, there was no price target associated with this, no, but if you just took it at face value and you still like the company but perhaps think it could be range bound for a temporary period of time, I looked at a neutral strategy, one that sells options premium and looks for range bound trade. It's a high volatility stock, so in result, it does tend to, all else equal, carry a little bit, greater options premium. And so when you're looking at that, looking at selling both a call vertical spread as well as a put vertical spread, all is one four-legged transaction called an iron condor. Because in this particular case, we're just doing a $2.50 wide spread, we're looking at selling the 75.55 with $2.50 wings. It sets up a risk reward where you can make $75, but you're only risking $175. So high probability of success, break even below or at 54.25 and then risk below that, but then also 75 to the upside and then risk above that. So if it stays in that kind of 20 and some change dollar wide window between 55 and 75 in particular, not only will this be profitable through expiration more than likely, but it would actually be at max profit. So you can see how that risk profile almost looks like a plateau with risk in both directions, but of course we know the stock can only be in one place at a time.
And then, Alex, since this is about essentially a month away in terms of the timeline, is there anything else you have to keep in mind about this example trade?
Yeah, obviously the more time you have, there's going to be other things to account for and risks to take into account. So first thing you would always look for is, when is that estimated earnings date? In this particular case, a firm is not slated to report earnings. It's estimated at this point, but late August. So as structured, this would still be ahead of that earnings event, but notes like this one, and of course other analysts could certainly move the stock, or even peers in its industry, trade policy, things that are on the macro front could too. But no earnings event on the calendar. That would be the first thing you're always looking for.
All right, thank you, Alex. That's Alex Coffey, our senior equities contributor and co-host of Next Gen, with an example trade on a firm. Coming up next time for our 360 round, we'll break down Amazon's Prime Day sales event, the impact of expanding that event to 4 days. That's next on Trade 360.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
800-421-2110.
Where are you going?
That's 800-421-2110. You can say repeat that or main menu. If you're finished, you can just hang up.
We broke out of the wedge. We broke out of the wedge. On the hour? Which one? Slot on Mr.?
Yeah, I'm looking Mr. and yes on the hourly.
Did you?
We'll see what happens this last 10 minutes, especially because we're coming up on the pump hour.
Oh, yeah. Did you grab that little scalp or you just...
I tried it, didn't fill my freaking order. It ran too quick once it broke the orb.
Yeah. Well, it held that support that I mentioned pretty good. We got to 63 now on the 1 minute. So if it comes back, it could come back, do a triple bottom at that support again one more time. If.
And I'd still like to get it to this 440 level.
Yeah.
We got 10 minutes till the rollover. Let's see the hourly on the S. What does that look like? Damn. I'll be careful of it. These are tough on the S.
AMD new high. That's the one that I should have jumped in this morning because it's been pumped so hard.
That hourly volume on Master is half of what it was the previous hour.
Yeah, Randy, I left a lot on the table on that NVIDIA. I know it.
Yes, I'll wait for the hourly. That was a bull fake, bull trap on the freaking 1 and the 2 minute when it broke the orb. Seven minutes left.
You got your triple bottom right here.
Yeah, I'm greedy. I want my 240.
Which are they?
They're dumping it.
Yep, this is support right here if it's going to hold.
If you look at, dude, I'm telling you, if you look at my chart at this 1 hour trend line it's been holding for the last week, it could blow through my 240 and it could hit blow through my 440 and hit 437.50 would be the trend line on the hourly that it's been holding for a week now.
They're not cheap.
Well, another 5 minutes. I gotta get on a damn business call at 11, so I need this thing to hurry up. Dude, Algo's in this sneaky thing.
I'm going to message Dan Ives and ask him why he's pumping this piece of trash.
Seconds. Hourly fat right on the 21.
It's 11 o'clock. 12 o'clock Eastern. And we're at the orb on your mister. On the 1 minute. Good luck. Netflix is up $19.
This week it really ramps up.
From famine to feast, right? Last week we had nothing except headlines to drive the market. We had no data, we had no earnings other than Delta, which actually put up a pretty good solid number. But Tom, I think
Dow.
the theme going forward, I think, for this earnings season is going to be, but look how much they've run already.
Yeah.
Right? We're going to say this how many times, Tom?
You're probably right about that because we're back at all-time highs. But I'm going to listen to his version and what I think.
3 months, Tom. If you look since mid-April, everything is basically rallied. I mean, with very few exceptions. So we're going to be talking about that a lot. The bar is going to be, like, let's say for the financials that we're about to talk about, bar is going to be pretty high just because of the numbers that they've rallied over the last several months. So there's the micro story. The macro story is CPI tomorrow is going to be a big number. Why? Some of the consensus views is that the numbers are going to be all higher in terms of CPI. But then Wednesday, PPI is going to be lower for the consensus. So what do we make of that? So it's going to be an interesting week. So many names have run so far. How do they stay at these levels after earnings? It's going to be an interesting week for sure, Tom.
Yeah,
Good point.
And then throw in those headline risks from tariffs. We get that announcement of.
My opinion is we've heard nothing but negativity. And the last time earnings came out, companies could not give forecasts. They said airlines was doomed. Delta comes out and gives great earnings. So my opinion is we have had a run. And we're back at all-time high on the SPY. If we didn't have that run, I would say earnings would be wonderful because they're all going to miss estimates. They could give forecasts and they're going to come out and earnings are going to be better than expected. So I think it's priced in. Not by the fat cats, by the retail traders. Because you heard what the fat cats had to say. They're so mind numbed that they couldn't even give forecast. Especially all the big ones. Airlines was one of them. And I was saying back then that it's all hogwash. Somebody got their mic on. Am I right, Randy?
Large portion of that, and that's how they were able to get favorable negotiation terms, and it's still ongoing. Notably, they aren't getting the letter the same way these other countries are. But then also, I think the piece that you hit on that I think is the real critical piece too, which is there's a feeling that once you move a deadline and you move it again, that it's not really a deadline.
Yeah.
And it might be, and maybe there'll be more volatility as we approach that if it doesn't get moved again. But right now it's a game of chicken, and it feels like the market thinks that the Trump administration will flinch.
Yeah, I'm not sure if I feel like the Trump administration is going to flinch. I think what it is negotiating tactics, and that's what President Trump is supposed to be the master of, and that's kind of what maybe.
I'm going to show you a pattern here.
Hey, we're going to give you deadlines. We're going to give you a finite number.
Definitely back up my support,
so we can actually lower them.
But this is called a descending pattern. This is bearish, so it's either going to do something right here and finally break out of that pattern. But that is called a descending flag. But here lately, some of these descending flags are breaking out to the upside. Probably not too many people see it on the 1 minute because they're looking at different time frames. So we'll know here shortly if this thing will do something. I personally don't want to trade it. I'm going to go. Let me see the calls. The 460 strike.
'30th is the Fed meeting. That's going to be really interesting because I think that's when they set the table for the September the September rate cut, Tom. Everything leading up to that is just setting the table, I think.
Yeah, headline CPI year over year, 2.6 versus prior 2.4%. Ex food and energy on that core 2.9% from the 2.8%. So yeah, expectations for CPI to go up a little bit, and as Kevin mentioned, PPI is actually supposed to drag down a little bit on those year-over-year numbers, so that might be key to look at. But Alex, we have already talked about the data that we're going to get, CPI, PPI. We got
One
retail.
last thing, we're also assuming it comes in line. What has the trend for inflation data been recently? Missed to the low end.
To the low end.
It could even just be rounding. If it comes in 2.54 as opposed to 2.55, it's going to read 2.5.
Yeah.
Okay, so some of these things, it's like the headline, or in the case of the 0.3 month over month, like if it comes in 2.44 versus or 49 versus 2.5, like that's going to read a different number. And so you're 0.25. So you look at that, it's like so much of this rounding, you should look out further on the decimal points just to see how big of a move it's going to be. But I'm totally with Kevin. July to start setting the stage for September, utilize Jackson Hole to really solidify that, assuming no setbacks. And then we're probably going to get cuts in September.
Yeah, and those numbers, according to CME FedWatch tool, for a September cut are just above 60%. That was like 95% just over a week ago. Now we're back down below 65% probability of a rate cut in September. But like we said last week, you don't need to cut rates if the economy is doing well, and that doesn't mean that the market can't go up if we stay at this restrictive level as far as rates go. But Kevin, we mentioned the data that we've got. Retail sales will be another one on Thursday. Amazon Prime days and Target Circle days, Walmart, a lot of sales. Adobe Analytics have growing over 30% year over year on that data point. So the economy's still doing well, Kevin.
Okay, we got a little pullback.
Throw earnings into the mix this week because it's earnings season. We're going to talk a couple names in the financial space today, but anything else piquing your interest there that traders should be watching? Because as you mentioned, the bar is going to be a high on a lot of companies.
Yeah.
No, it's not.
Here's the secondary setup that these bank earnings are going to give us.
How can you say that?
Morgan,
After all the failed guidance given, he's saying the bar is going to be awful high. Nothing makes sense about that.
data, combine that with American Express earnings on Friday. And we're
It's going to be surprisingly surprising
this week also, Tom, at the U.S. consumer and how they're doing. Not only the everyday U.S. consumer, but the affluent U.S. consumer, more given by American Express's earnings. So I think that secondary data point that we're going to get is a look at the U.S. consumer. Remember, Bank of America's data showed the U.S. Consumer spending back up in June after being down in April and down in May. It turned back up. Let's see if that economic data keeps showing. Let's see if it shows up in the retail sales data as well. That we're going to get.
Funk said 440.
Expect to go from down 0.9 to
50 or something like that.
And X vehicles from down 0.3 to up 0.3. So we'll see how that comes out too. The strength of the U.S. consumer, so important for this economy.
Yeah, and that wealth effect with the stock market at or near all-time highs never hurts a lot of those data points as far as consumer spending goes at this point. And then the drop in, the unemployment rate went from 4.3 or 4.2 to 4.1. It was supposed to go up to 4.3. So people have jobs and they'll spend and dare to bet against the U.S. consumer, as Kevin and I always talk about. But Alex, anything sticking out to you? We've got Netflix on Thursday. That's going to be a big one. We've got some blue chips in there, Pepsi, United Airlines. I mean, that Delta one kind of set the tone for the consumer. What we saw, that, hey, we're reinstating full-year guidance. Everything's looking better than we thought it was going to. Stock pop, the airline stocks all pop, cruise lines pop, hotels pop. So the consumer is maybe re-accelerating right now. So maybe some of those GDP estimates for the entire year are lower than expected, and maybe we can weather no rate cuts this year because I think the market wants it. But hey, if everything's going well, it doesn't need it.
So holistically for this earnings season, what Delta did, I think, could be an early theme to look for, which is there enough confidence now to just put numbers out, even if they're worse than maybe they were before the trade policy negotiations? That's still going to be favorable, especially if they come in better than kind of the feared estimates. But for this week, it's Netflix, and it's Netflix alone in terms of where it stands in my mind in terms of the impact it can have. And it's more of a sentiment impact. Like, yeah, it's a big market cap company, but for me, much like Tesla, but Tesla doesn't tend to move as much on earnings. Netflix delivers volatility around earnings. Over the last 10 years, its average move around earnings is over 9%, but the estimated move based off option pricing right now is sub 7%. That doesn't necessarily jive. Also, notably to me, streaks are meant to be broken, but Netflix has never had 4 quarters in a row where it's been higher around earnings. It's 3 in a row right now. So again, streaks are meant to be broken, but there are always lessons to be learned from history. So stock essentially at all-time highs, lower volatility than expected, and it's never went up 4 times in a row around earnings. Like, I think the table's set for Netflix to be kind of a buy the rumor into earnings like it has been, and perhaps a disappointment, sell the news type of event. And what does that do to sentiment going into the weekend? It could set us back a little bit.
Yeah, and I think that kind of parlays into the fact that Netflix, the bar is really high going into those earnings. Delta was actually muted a little bit. That was in bear market territory from those highs that we saw in January off of the April lows, but the bar was relatively low in Delta due to some of the commentary that Ed Bastian, the CEO, gave and cutting their full year guidance, but now reinstated. All right, guys, let's take a quick break here. When we come back, we're going to discuss one of the first names that reports this earnings season. That's JP Morgan Chase. The bank stock is up about 20% so far in 2025 and just below those record highs that we set on July 3rd. Stick around.
This is the hardest tea to drink, but I love it. Coffee, and I used to sit here and drink coffee, and I get so tired. This is like a hit of speed, drinking this jasmine tea, which I don't have much experience in. I wasn't a speed freak at all, man. Anybody that did that, I just told them, bye. And anybody that cheated on their girlfriend, I also did the same thing. So I had a couple.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding
We go
of
get me a
technical analysis, options, and futures.
cup of chai tea, and I'll be right back.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch.
Chart patterns, moving averages, and being in the now. Now this is around, I think this is around where he called his support level. I'm not totally sure, but God, what happened there? Oh, okay. That's, I was thinking the wrong number. Is it $5? It's up 50. You're at the 63 now, Rob. You're at resistance. And this is number 4, number 3 with the bodies. Boom.
$275 put vertical in this week's expiration. Now, if you can get $1, maybe that's the low end of what you'd accept. You'd want to see this closer to $1.25, $1.50 if you could, but might not be in the cards unless JP Morgan sold off in the next 24 hours. Or don't even have 24 hours. In the next few hours, I should say. Might not happen. So maybe you're willing to take a 4-to-1 risk reward. You risk 400, chance to make 100. It's a short dated trade. It's around earnings, but it's neutral to bullish. And again, I just kind of laid out a thesis that maybe the outcome is just kind of a muted reaction, maybe slightly lower, maybe slightly higher. But it's largely going to hinge on not just JP Morgan's results, but also its peers' results as well, be that Citi, be that Wells Fargo, be that BlackRock even, which we're going to hear from. Right. And so as a whole, maybe the picture, like Delta Airlines, is just enough for this stock to hold on to these gains or even move a little bit higher, and that's how this trade works out.
Yep, taking advantage of higher probabilities on a directional bias trades like this. As Alex mentioned, this example is a neutral to bullish strategy. July 18th, monthly options expire just 4 days. Sell the 280 put, buy the 275 put, collecting roughly about $1 credit, $400 in risk, as Alex mentioned on this one, Kevin. But Kevin, we always talk about this. This is a neutral and bullish trade. You're giving yourself a better probability of success. But we always talk about the bank earnings. They never have massive anticipated market maker moves built into them because they're relatively muted as far as the expectations for big moves post earnings. But this one just takes advantage of, hey, if you're bullish on this name, hey, why not give yourself a little bit of cushion to the downside also?
Yeah, that's exactly right. I mean, you look at a $9.30 move, but what's that, about 3.5%?
Yeah.
Price of the stock. It's not a very big move. So the only way to play the other side of that is to do something that plays for big move, and then you find yourself disappointed. So they kind of price you out of the game. So this is one that, the probability of out of the money about 73.5%, 74%, right in the middle there. So it's high probability. It's collecting theta. It's risk defined. Yeah, you're only getting about $1, but there's the reality of trading these financial names. You just don't get big credits because you just don't get big moves. I mean, their chart is almost a straight, smooth line on the upside, Tom. Just not a big volatile trade here. So yeah, I mean, if you're neutral to bullish, this is the best you can do here, unless you're willing to go further out in time, and you probably won't do much better statistically, guys.
We always talk about that. Sometimes we don't get big, massive moves in these stocks with the muted responses post-earnings. That doesn't mean it can't happen. And any commentary or guidance or something like that, or a miss, or maybe the whisper numbers are higher, you have to take that into consideration. There is that potential for them to move. But go ahead, Alex.
Well, one thing I would add too, and that maybe complicates this time around a little bit more, is we're going to get CPI at 7:30 in the morning Central tomorrow, 8:30 Wall Street time. That's essentially the same time that JP Morgan's going to be talking on their conference call. But what CPI, and this is the good news is CPI hasn't moved the market dramatically that much in the last 6 months or so, maybe even a year. So maybe it's becoming increasingly less likely for it to do that. But a market that's essentially on highs, JP Morgan that's essentially on highs, if they're even slightly disappointing and then CPI comes in hot, it could be the cocktail for the bigger than expected move. So for some, maybe they aren't going to look at this first round of banks truly around earnings trades unless they got a really nice hunch about a direction, just because CPI could cloud the earnings results just a little bit tomorrow morning.
Yep, maybe a volatile morning, with data and earnings coming out, kicking off earnings season. All right, great stuff as always. Alex Coffey, senior equity contributor here joining us. But let's take another quick break. When we come back, we're going to be joined by Landon Swan from Likefolio for a look at sentiment data in PayPal. FinTech stocks has pulled back about 20% from the recent highs that they've had, down about 13% this year, but did get upgraded today. That's why you're seeing 3% pop. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here.
You got
on
Netflix
Schwab
this
Network.
week.
It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder of Likefolio. Welcome back to the show,
BlackRock,
Landon.
Wells Faggot Wagon,
Happy Monday.
Citibank,
PayPal.
JB Hunt,
Stock got upgraded today, but these fintech stocks,
Johnson
whether
and
it's Block or
Johnson.
PayPal, they haven't been doing too.
Let's run for the earnings here. First Bank after close. Tuesday morning, J.P. Morgan, Citibank, Wells Faggot Wagon, BlackRock, Albertsons. After close Tuesday, J.B. Hunt, Pinnacle. Wednesday morning, Bank of America, Goldman Sachs, Morgan Stanley, Johnson & Johnson. Wednesday after close, UAL, ACOA, Great Southern Bank. Thursday morning, TSM, Pepsi, Centos, Bancorp, Abbott, ABT, Thursday after close, Netflix, First National Bank, and then Friday, Open, 3M, Ally, ALLY, Charles Schwab. So banks financials this week with airlines with UAL. Now let's look at UAL. I think UAL is going to have a good time. They've already got the bounce on it. Dadgummit. Now it did pull back and they were pumping this Friday. Now I called the pullback when it was overbought. And let me show you where that was. I said this was way overbought at 116. So we came back to support. So I'd rather take it off the 9 on the daily. Might be too late for that. And I got an alert. See what the prison guy has to say.
Landon, I mean, 3 firms upgraded this stock today, and TD Cowen upgraded not only PayPal but Block as well. But they have some good products, right? Venmo is now a verb. Even I'm 100, Landon, and I use Venmo every weekend for golfing and paying people back and forth. So Venmo is now in society. I mean, everyone uses Venmo one way or another. But
never heard of it.
They move that away and get that more monetized, get that to the forefront. Why isn't Venmo on a parallel with?
I think Venmo has that commercial
and a debit card and all those things. They should be able to get it there, So they must be doing something right. I mean, the stock, the chart don't look great, but it's getting a bunch of upgrades today. What do you think that is, Landon? Do you have any background there? I mean, Venmo seems to be popular enough that they should be able to carry this company going forward. It doesn't seem like it's doing it yet, though.
Yeah, I mean, when you think about the business, though, I mean, I agree. Venmo is the bright spot. Like, that's what, if I was PayPal, I'd be bragging about Venmo. But when you think about it, yes, peer-to-peer, they're dominating, absolutely dominating. But, peer to merchant or whatever you want to call it,
Can you Venmo this?
Damn it. Always clean, may I help you?
Hello?
Yeah, what's up, baby? You can demo this, and you can demo that. You can demo this, you can demo that, you can demo this, you can demo that.
Venmo everything. Get the Venmo debit card, get up to 15% cash back.
Hungry?
Anything else?
Everything.
Everything.
Can you Venmo this?
You can Venmo that.
You can demo that. You can demo this. You can demo that. You can demo this. You can demo that. You can demo this. You can demo that. You can demo that.
Yo, engine number 9 on the New York Transit line.
God, I wish I was doing mushrooms right now.
Pick it up, pick it up, pick it up.
Now you can Venmo everything. Get the Venmo debit card, get up to 15% cash back.
Hungry?
Ooh, always.
Do da dippity.
You can demo this. You can demo that.
And Block and some of these other fintech companies, right?
Yeah, I'll tell you what. I'm a pretty big crypto bull, and you guys know that. I'm still a little skeptical on that concept, so we'll see. I don't think it's a huge threat right now. Maybe down the road, but yeah. I don't see that as a major.
Richard, do you Venmo? Rob, do you use Venmo? Anybody here use Venmo? That's what I thought. No, there's no apologies needed. If that girl would go out with me, I'd demo it. I mean, Venmo it. Venmo it. Now that was a yawn, Mr. Hickey.
50 million and went down to 420. And it kind of stabilized last quarter. New CEOs trying to make some changes. But how do you want to look at this one from an example trade?
Yeah, Tom, this is a company that the way this just got spelled out in our conversation, they've got to get consumer to merchant. There's the key for their future, Tom. But things are getting better there. 3 upgrades today.
You can demo that.
Seaport, TD Cowen, Goldman, all raised their numbers. Some of it's because the stock has rallied through some of their numbers. But all things considered, Tom, I'm not sure how to really trade this. The premiums are not big.
Yeah.
So what I looked at, Tom, is something in the cash secured put realm. They have earnings on the 29th of July, so I stayed ahead of that with the July 25th expiration. Selling the 71 put, Tom, for 65 cents. And that gives you daily decay. It allows you to extend duration at the end of the week if it's, or the end of the period is possible. These are not big premiums, Tom, on some of these names. So you do have risk down to zero. You would buy the stock if you sell it for 65 cents. You would buy it about 70.35 would be your entrance. And so, if you look at the chart, the 50-day moving average is about 72 and change. So it's kind of holding above there, Tom. But like I said, doesn't have earnings for a little while yet. Couple upgrades today. Maybe a cash secured put is a mildly safe way to do this, Tom.
Yep, neutral to bullish here. This is like one of those twofold trades that Kevin and I always talk about. It's got the risk profile of a covered call, right? But remember, PayPal doesn't pay a dividend on here. So using the cash secured put, same risk profile for this type of strategy. Going on to that July 25th weekly cycle here. So you've got 11 days only to expiration. And, this is one of those strategies you can use over and over again. If you pick a level that you think the stock's going to stay above, you can sell out of the money puts with the hope that you just keep that credit that you collect on this. On this example, Kevin looked at selling the July 25th weekly options on the 71 strike put, collecting 65-cent credit. That's what you can make on this trade, $65 per put that you sell. Now, it takes your break even down to $70.35. if the stock does move below there, below the 71 strike, you get assigned on that short put. If you remain short that put into expiration, that's where your purchase price on the stock would be $70.35. That's about a 4.5% cushion to the current share price above 73.5 in PayPal. So you'd be buying the shares at a discount. Now, Kevin mentioned there's risk on this if for some reason the stock were to go to zero, but you got risk of just over $7,000 per put that you sell in case the stock did ever go to zero. Highly unlikely, but could be a possibility, in the realm of possibilities. But a cash secured put where you either want to just keep the credit that you collect on this type of trade where you don't think it's going to go below 71, or if it does go below 71, you're willing to buy the shares if you stay short those puts at that $70.35 break even. But Kev, real quick before I let you go, this is also one of those strategies where, hey, if I put a $70.35 bid in to buy the stock, I might never get filled on that, right?
Yeah, exactly. If your intention is to buy PayPal at a lower price, or take out PayPal, put in any name you're thinking about. A cash secured put is one way to get paid until the stock gets down there, or it may never get down there, Tom, and you can continue to get paid by selling cash secured puts. And remember, I'm selling the 71 put. My entry is not 71, it's 70.35 if I sell it for 65 cents. So you're using your intention to buy the stock on the downside and using this put to pay you while you wait.
No. What the heck? July. BLK, WFC, No, I was going to get a haircut today. I guess I'll do it later. I'm going to do an earnings video. And get my water. Good morning, retail traders. It's been a little bit since I've came out with a video. Well, we've got earnings coming up, so let's talk about them. I already got some picked out that I'll be watching, and let's get right to here. So these are the earnings list. We've got nothing really coming out here on Monday, but Tuesday we got JP Morgan, Citibank, Wells Fargo Wagon, BlackRock, are going to be Tuesday morning. Then we've got Tuesday evening, JB Hunt, which I think I need to add to my watch list. And nothing else in there. And then Wednesday morning, we got Goldman Sachs, Bank of America, Progressives on here, Johnson & Johnson, Morgan Stanley. And then Wednesday evening, United Airlines should be one to watch. AA, Alcoa. Then we got TSM Thursday morning with Pepsi. Abbott's on here. Then Thursday after hours, I think Netflix is going to be, on there definitely. A little overbought, in my opinion. And then 3M on Friday with Charles Schwab, SCHW. And what was that other one? We'll come to it here in a second. SCHW. Whoop, that was not the right number. What was that again? Charles Schwab. SCHW. That's what I said. So volume high, we got Bank of America. You can see that it's definitely at a triple top, and we broke out here a couple weeks ago, and we pulled back to the 21. Now, to me, I think Pow needs a good spanking. He's definitely fixed on the billionaires and not the middle class or the lower class with these high interest rates. Definitely the millionaires and the billionaires can afford this kind of economy right now. So we got a triple top resistance, and we broke below it. And we pulled back to the 21 on Bank of America at 47 something. Then I think the hold would be this previous resistance high right here. And we're going to draw that trend line off the body of that candle right there. To right there. So somewhere right around this here 46 area. I'm going to set an alert right there. Then Doug got Kentucky Fried Chicken, Wells Fargo wagon. We have a 1, 2, 3. We got a double top. Now this one's doing better. It's had some controversy in the past few years, or a while back, during the housing crisis. But I think they've kind of cleaned up their act. So support to hold will have to be right around 81.48. If that doesn't hold, we might see 79.75, with a low support down here right around 77.79, with resistance to break would be the double top at 83.58. So it's looking pretty good. It's definitely had a nice recovery in the last 3 months. So I'd keep it on watch. Everything I'm going to mention is going to be a dip. If it dips, it's going to be a buy, because I like every one of these companies, all but maybe 1 or 2 of them. TSM, another good one that's had one heck of a run with new highs in the past year. Now, we were told doom and gloom by Wall Street and all their cronies, and it ain't been nothing like that at all. I think they're all a bunch of crap, full of crap. So personally, I'm liking the market. I'm very bullish on the market, especially as Trump is president. I wasn't that bullish during Biden because we printed $14 trillion for Wall Street, and Trump ain't doing that. He's bringing in the money from out of country. We've got like 14 trillion coming in already in 6 months for our economy, and we don't have to print it. It's not coming out of your pocket. It's coming out of corporates. So we got support right here to hold. So we got a support channel right here between 222 and 226.50. If it holds the 21, we've held that 21 all the way up. If that doesn't hold, it could be a pretty good drop down. TSM, now it's had a good run, and this is the main chip company. They're definitely bringing trillions into America, building a couple plants. NVIDIA versus Microsoft. Who will hit the 5 trillion market cap first? I don't know. I'm not going to put my opinion on that. I'm not a Bill Gates fan. C, here's another great run. All the banks had their great run. We were told that this was going to happen, that the banks are going to like Trump. But I think the banks like Powell too because of the high interest rates. I mean, I got credit cards that are at 12 to 19%, and I'm going, what the heck? I got excellent credit, so I just don't use them anymore. Support's going to be right around 84.68. I'm just going to the previous highs and see if they hold. And that's going to be Citibank. But it's definitely had a huge run already, $30 in the past 3 months, and that's more than 40%, 30% on the stock itself. So they definitely got to come pull back. These banks are just way too high right now. JP Morgan, Johnson & Johnson, here's one that's kind of flattened out some. We got an ascending triangle. This could be a good one to watch. You got your ascending triangle right here, so resistance to break. 158.19 with support right around 152.50. Definitely right on 152.50 for a strong buy. That's Johnson & Johnson. Then we got Ecoa. Here's another one that couldn't break the 200 EMA on the daily, and it's kind of pulled back to support, and I'm not very bullish on this one here. So I'm going to call support right around 27.88. Off his two previous double bottoms right here. $28. So if that drops to 28, I'm going to see if I can get a bounce off of it. Then we got a gap down here. So low support right around 27.32. Pepsi, I don't drink soda pop. I think I've had 2 tablespoons of soda pop in the past 3 years. It about made me sick when I drunk it. So I just don't drink it. I'm not a big catalyst on soda pop, but right here at 140, resistance to break. Support to hold, 132.21. United Airlines, as we heard, they weren't able to give forecast in their earnings last quarter because of the trade war and tariffs. I think they're full of shit. I said it back then when they couldn't give any earnings forecast, and we seen Dow had great earnings, and I think UAL will also have great earnings. The airports are packed, the ships are packed, the resorts are packed, everything's packed. Nothing slowed down in the tourist industry. Nothing. So we got support at 84.29 to hold, 84.29 off an ascending triangle, or even a Darvis box with a head and shoulders. So that has to hold. That's a pretty solid support at 84.29. If that doesn't hold, we can drop down to 76.93. We got Schwab. Now, Schwab's had one heck of a run. We were at 61.01 a year ago. Now we're at 92. We're up more than 30-some%. It needs to kind of pull back too and kind of consolidate. So we have a 1, 2, 3 off the 21, right around $90, 90.71. If that doesn't hold off the 21 EMA, we can easily drop down and hit the 50. And that 50 is a good one. That's a 50 SMA right around 88.36. So let's put that price line right there, 88.29. And then support level will be the triple top breakout. Right here on the body of that candle to the body of that one. There's 1, 2, 3 breakout, so it'll easily come back down and hit that 21 for solid support if it wants to stay bullish. If not, she'll dingle on down to 88.61, 88.29 off the 50 SMA on the daily time frame. Then you got Morgan Stanley. Morgan Stanley also had a great run from 95 all the way to 143, more than 45 to 50% run up to the upside. So I would suggest another great breakout. I mean, we were told, and I told the room when Trump was president that said, get in your banks because they're going to run. You got a business-friendly president for once. And I've been in business for 35 years. I couldn't stand the Biden administration. The inflation about killed me. It costs me 21 to 30% more to run my business now than it did 4 years ago. So I'm not happy. 135.52. Can you imagine sucking 30% of your profit out of your wallet every month? 135.52 for a low, 138.89 off the 21 is your pivot point, and then resistance to break at 144.12. And then we got ABT, Abbott Labs. we're definitely at support right now off the 63. I'm going to call support to hold down here off the 200 to buy this long. And I'm going to set an alert right off that 200 SMA on the daily. And that's Abbott. So I'm not bullish on it at all. Netflix, it is a Wall Street baby. Now this one's way overbought. It's up over 100% in a year. It's up over, let's go back 3 years. This thing's way overbought, okay? We were at 188 3 years ago, and it's at 1341. So this thing needs to come back big time. And I'm going to set an alert right around 966, 963 for a buy signal. Off the 50 SMA, way overbought. Now, I'm not a Hollywood guy. I haven't watched movies in years. I don't waste my time on wokeism and Wall Street. I mean, Hollywood. But our society is glued to the TV. I don't know too many people that watch TV. I don't have the time to watch TV. Plus, I think it's a waste of time. So, I just won't trade it. Unless earnings are bad, I'll short it back to 1,000. A little above 1,000. 1062. Then we got Allied ALLY Bank. Now they're making profit. They're doing real good. I used to trade this years ago. So we got a double top resistance up here at 44.23. And we got support right off the 50 SMA right now at 36.87. And that's got to hold. $37. That's Ally. I think there'll be good earnings. So if you get any kind of pullback, I'd be bullish on this trade. We got 3M. Now I'm not a big fan of 3M, but it's up 100% in 2 years. They had some controversy during COVID. So I'm going to put my alert right up here on this triple top. Actually, I'm going to do this. Take that and put that right there. So it's going to be off the 9. There's your triple top right there. We'll set an alert for this one. I can be bullish on, I don't know. It just had too good of a run. And it likes pullbacks. So this thing could easily pull back to this lower support here if it has bad earnings. So I'm not very bullish on that one. Goldman Sachs is a liberal bank with a bunch of crooks. We got a double top breakout here, and that's going to be your support off the 9. So that's going to be your first support. Double top break off the 9. Right around 6. God, this thing's that high. Oh my God. I didn't even notice the price on this thing. Yeah, this is way overbought. Yeah, this is definitely going to pull back. This is way overbought. Way overbought. This is horrible. I'm going to say it's going to drop 60 bucks. I might raise it up to this previous high on this 4 hour. I think I will. I'll set my alert right there for a double top. This is way overbought. Way overbought. And then got BlackRock, same thing, way overbought. New highs, 1106. This is way overbought. I like it just under $1,000. BlackRock. I think it'll pull back. Now these are all the dumbasses that have been calling recession and depression and everything else. BlackRock's a very liberal woke. They started the wokeism. I'm going to wait for just under $1,000. I'll put an alert above, right at the 9 on the weekly. So this is my theory. This is my hypothesis. I've been saying this. Everybody knows how I feel about earnings. The last call around, that none of them could give forecasts. And they were all good earnings. Earnings were all good. Last quarter, they were all good, but they couldn't give forecast, which makes me, kind of leery of the CEO of the company for one. A lot of them couldn't give forecast out. They were calling recession, depression, high inflation, and none of that's come to fruition. None of it. So I think earnings are going to be good again, but they're priced in this time. You see we hit the 200 right here on the weekly. This is called, when I called the reversal in the market, off the 200 on the weekly time frame, and we bounced right up off of that. Now the fat cats didn't do that, none of them. Nobody called support off the 200 SMA or EMA on the weekly time frame. Nobody. I didn't see one person out there call it, but I did, and I did a video on it. You can go back and watch it. I was really, really, really excited at that time. I'm not that excited right now because we've kind of bought into the dip, and we're at all-time highs. So any kind of small pullback, I think, will be a strong buy. I'm very bullish in the market right now. More bullish in the past 6 months than I have been in the past 4 years. But I don't think like a Wall Street crony, I don't get that free money coming into me. I got to earn mine. Now that they got it taken away, they're kind of desperate. But you can see we bounced off the 200, so we can get a good pullback on this off these crows, and each one of these crows are going to, each one of these soldiers, it's going to be a support level all the way down to the top of this triangle right here. And if we touch that 992.45, I'll buy this long and run it back up. See what happened last earnings. They were just the same as before, the same as before, the same as before, the same as before. and we still had to pull back because they were worried about recession, inflation, and everything else. And none of that's happened. So this is it. That's my hypothesis, is that their guidance, they couldn't give a guidance last earnings, and I did. I said I wouldn't trade any of these companies if these companies couldn't give any guidance, because I was bullish in the market, and they're not. So we could easily come up and top at 11.29, 11.30, and then pull back to $1,000, and then buy it for a day trade or a swing trade overnight. That's a sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Keep an eye on this watch list. These are my favorite stocks this week when it comes to earnings. And have a great day. Thank you, Bardo. Okay, let's get this on. Dum, 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 dum. What am I doing? Man, it's been a while since I've done a video. James, can we look at the cannabis stocks? Yes. Give me a second. I might have to look at a couple trades. I haven't traded in an hour or so. I'm 6 for 6 right now. Now, how come that didn't? File's too big. What? Huh. Let me see here. Good morning. Damn. I never could understand why this monitor does this. I got to put my other one. Got to put my other monitor back up.
truly binary to this earnings event as possible, make it a true earnings trade. You could collect 60 cents. It's about a 3-to-1 risk reward.
Citibank.
$1.90 to make $60. 84.40 would be the break even. The idea here, Jenny, is not necessarily that you think the stock might go down, but rather that even in positive scenarios, because of its run, maybe it goes sideways even in response to good news, and this allows you to benefit with a neutral to bullish strategy as opposed to looking for upside.
Yeah, and I think I completely agree as well, where I do think that the broader trends that we hear from the banks will definitely matter, but just I think important to also look at some of these names individually, which then speaks to Wells Fargo, a totally different type of company, but again, could be in lockstep with some of the broader performance we see. When we're looking at Wells now, Rick, walk us through the latest here from a technical standpoint. Wells has had its own fair share of turbulence and unfortunately company-specific missteps, but hey, we're about now 0.75% away from recent highs.
Yes, and Alex did a really good job of kind of summarizing what seems like an overall kind of feeling people have toward these big banks, is that they've had this great run to the upside. How much farther can it go, really? And, you know, that's a difficult question, because just because something is high doesn't mean it can't go higher beyond that point here. But to look at the chart more specifically, we can see that, you know, once again, April, those lows come into focus here. In this case, we could draw a trend line starting with that low.
Let's see what his looks like compared to mine.
Connecting those subsequent lows here. Is this the greatest trend line? Not really. You know, you want to try to connect more points ideally, but I'm kind of just trying to illustrate, though, that we've seen a major low that was substantially higher than the previous major low, and price has mostly been contained along that same general trajectory here along the top as well. You could duplicate that line, put it across the top. Matches up decently with those high points here. But for now, you can see our red line there matching up with those old highs near 81.50. Like our last chart, price has broken above it and held on for a retest. It's become support now. The old resistance has become new support. So in this case also, we can see that price is above all three of our moving averages. They continue to diverge farther apart from each other. You could also draw a more short-term trend line starting with those April lows, giving us our blue trend line going up across those subsequent lows as well. RSI, green trend line has been broken here, but now RSI is
he's same as I'm taking.
The bought area, that threshold of 70, typically regarded as a
no, I don't have this one in
trending market. So it seems that you know, contrary to what I said in our previous chart, in this case, momentum is perhaps picking up an amount of steam here as we head into earnings. Kind of not what you would typically expect.
Yeah, and so I also think when this name also giving a 1% rally today, I mean, we're obviously seeing
like triple top, quad top on the RSI.
On the session here as we get closer and move closer and closer to that earnings event. So that being said,
damn, you look hot today.
About 18% on the year, about 47% actually over the last 12 months. So looking strong on a 12-month basis. So what else are we watching for here? Given, I mean, various time frames, the volatility, and also the fact that the big banks have now recovered really nicely to these recent highs.
Yeah, so in terms of perhaps downside support levels to consider, it's a little bit easier to the downside in this case. So we can see, obviously, our old highs, 81.50, our red line there that we already tested. That's a crucial support point to hold. But then if you were to look just a little bit below that, just below 80, you can see that we have our blue linear regression line, our line of best fit from which we derived our standard deviation channels last time. Now we can see that one lines up with our moving average, our yellow 21-day exponential moving average. So that gives us a one potential point to watch.
I said the 21.
Breakdown there. We can also see our green line matches up with some lows, subsequent highs as well, near about 77. And that's where volume starts really picking up once again as well. To the upside, I mean, our +1 channel, standard deviation channel, comes in just below 89 right now. And that will be a moving target as time goes on. It's kind of just a snapshot of this moment in time based on our price activity here. And to look at that longer term chart, once again, our 5-year chart for Wells Fargo, we can see that much like our last chart here, we're breaking above that.
I don't see 89.
Channel. In this case, it's the +1 channel, but for now, holding on above it on a weekly basis here. So some interesting strength from these big banks here as we head into earnings.
Yeah, definitely some interesting strength, especially when you look at the longer term perspective as you so rightfully just did. So we appreciate it, Rick, for all the technical help. And now before
there's
we
your
go,
89 right there.
To trade Wells Fargo here, Alex, walk us through your thinking for example purposes.
So like you said, all these names are a little bit different. I think one could argue that the trend is stronger for Wells Fargo given its performance recently, and maybe that it had the room because of its missteps over the last decade or so. But
I said the same thing.
Different strategy, partially because, again, these names can be interchangeable, and I wanted to showcase a different strategy. Buying a call vertical still this week's expiration, so kind of a binary trade around this event. But this one needs upside. So buying the 82.85 call vertical, slightly in the money, slightly out of the money. $1.50 debit, $3 wide spread. Divide that by 2, you get $1.50. Risk 150, chance to make 150. 83.50 is the break even. Now, we anticipate there will be some movement. So yeah, that 83.50 break even is basically where we're trading, which is nice. It's possible it could be unchanged, but more than likely, Johnny, the stock will move around earnings, and it kind of sets up a scenario where you're probably truly risking that.
/ES hit my resistance channel about 15 minutes ago, 20 minutes ago. And that's true with the 5 minute, the 2 minute, and the 1 minute. Support's going to be 63 on the 2 minute. So I set an alert right around 63.0475, about a $6 dip. Pot stocks. I'm going to go to my watch list real fast because I feel like I'm missing something. No. I gotta check my blood pressure. How am I? I'm checking my blood. Ooh, that don't look good. We nailed the dip on the mister earlier this morning. Now that fallen wedge. To the fallen wedge. And then it had a new low. Yeah, it's more like it. 125 over 81. I guess Caroline ain't here no more.
But they're going to do extra not so great if things do turn around.
It really sucks.
The analysts are calling it right. They seem to think
I don't like this girl, but
great, at least through the end of this year. Argus assigned a buy rating to Coinbase, which obviously heavily weighted on any crypto trading in Bitcoin, saying it has a strong record of growth. Also, really looking into this legislation coming out of Crypto Week and how favorable that will be to all the stable coins. And then Standard Charter predicts Bitcoin's expected to climb to 200,000 by the end of Q4, saying they think by the end of Q3 will be at 135,000. So, those are all, the conversation has really changed around Bitcoin. Like you said, Alex, it isn't a toy for experienced traders anymore. It's something we're seeing a lot of institutional buyers in, a lot of financial mainstream, and with the ETFs, it's made it a much more approachable and now more present part of the conversation, because we're talking about it more and more and now, we're starting to hear about, treasuries buying in and the potential with this regulation that it's going to be in the conversation.
So big you can't ignore it.
We can't. Every day we can't ignore it.
No, and a name that continues to be like the asset actually continuing to hit all-time highs. I mean, you have to give it credit where credit is due, and especially like the recent dollar weakness has also boded well for some of the price performance and just the overall appetite for some of these risk assets. So all this to be said, I mean, my only fear of, I guess, when we talk micro-strategy or strategy, what have you, specifically, is this is basically a proxy for Bitcoin now. So if we see any unraveling, then that puts massive risk on a name that has exposed itself so much to one specific type of asset. I mean, it's not even like it's exposed significantly to Ethereum or anything at this point.
It's not. I mean, it's just predominantly on Bitcoin, and it's interesting that now, because they're so heavily purchased, they're in this symbiotic relationship where one is affecting the other, where it should just be a one-directional relationship. It's now a multi-directional relationship.
That's a good point. And I think that is, the symbiotic relationship is such a good way to put it, because it's so accurate. And that's, I think if you're a fan and enthusiast, you love that. If you're maybe a skeptic, you're a bit cautious on that regard. So two different ways to sort of play the same type of idea. But appreciate that, Marley, for all that insight from a fundamental standpoint. Now, as we do look to trade here, how do you think about trading strategy? This is difficult because we're peaking out here for Bitcoin, but enthusiasm in this space, it does feel like has really surpassed an all-time high overall.
Yeah, I mean, I think the Bitcoin point you guys are making is fair, but would we say the same thing about a company like NVIDIA that sells chips to AI companies? That's the only thing it really does. I know it does a few others, but we're picking on Bitcoin in a sense. If you're a believer in Bitcoin, this is a way to get exposure to it. The issue that I think is a fair criticism of MicroStrategy, they're borrowing money to do this. So you're effectively investing in something that is levered into a volatile asset, and that, of course, if there is ever a downturn, can make things a little bit hairy for those who are on the wrong side of that trade. That said, option strategies allow you to be risk-defined, create risk-reward parameters that you are comfortable with. So looking at MicroStrategy, August 1st expiration, I wanted to create something that risk relatively to its reward was small, because this asset can move quickly. And I think, they want to, make a fair amount of money on that risk that they are taking. And so it's not the highest probability of success trade that there is. You're going to need, a 10% plus move for this to work out. But if it does, the reward potential is great relative to the risk. So it's a 490, 500 call vertical for a $1.50 debit. It's out of the money, but again, a volatile asset that can move quickly. You risk $150, Jenny, with a chance to make $850. So tremendous positive asymmetry. But you need something to happen. You need a big move in MicroStrategy, basically back to its all-time highs from the fall of last year for this one to work. Its break even would be 491.50. And that's a 10% move from today, just to break even. But if it does have that big move ahead of it, like I said, you can go from $150 in risk to $850 in reward.
Yeah, so a nice way to also be mindful of some of your risk. And as we know, the risk for these names right now, we're ways away from highs. We're still about 17.5% from highs in MicroStrategy, but up 338% off lows. So that's, I think, always the risk to keep in mind. Appreciate it, though, Marley Caden, for the insight here. Now, coming up next, we will shift gears a bit, but still be focused on the broader crypto and fintech space. We'll be looking at SoFi as well as more of this impact to be expected from Crypto Week.
Jimbo. Me here. Fine.
Well, I didn't hear you. I heard you get on the mic. What'd you say?
Tell me what you said.
On which one?
And that screenshot I posted, the hourly ES.
Let's say Head and Shoulders.
Absolutely.
Breakout. It broke out a little bit. A little bit.
Tells me a lot about CPI tomorrow, I think.
Yeah. Pull back, didn't retest.
Mm-hmm. Yeah, I think I'm going to buy puts over that, actually.
Of course, a next-gen favorite, which has still been up about 200% over the last 12 months. So it's been a really impressive story to watch, despite a downgrade today. Joining us now is Diane King Hall, the host of Morning Movers, to talk more about this note out of JMP. So, Diane, I know we're seeing actually a modest uptick. I say that very cautiously because we just flipped ever so green, but pessimism today from the sell side.
It is, but again, the stock managing to shake that off right now, up by just shy of 1% there. And you make a great point about how strong it's run so far on a year-over-year basis and even year-to-date basis. It's outperformed the S&P 500. But basically, the way Citizens JMP views this is that things are baked in now. They've downgraded their view on SoFi to market perform from outperform. So essentially, they've moved neutral on this one from being more bullish on this. They've taken away their price target. Their previous price target was $17. So it signals that much of the upside is already priced in, especially given that it's above where its price target was. They've downgraded several names today in financial services heading into the back half of this year, pointing out they've recovered from those April lows, and the stock has essentially moved fast. So it's already kind of baked into the valuation, and they said that the downgrade reflects near-term valuations better. And it doesn't mean they're not optimistic in a long-term view when it comes to this, because they point out some strength when it comes to SoFi, the tech-first infrastructure. They think it gives them a competitive.
So on Matey, one of your cannabis stocks, I read her headline here. It says bearish sentiment across the cannabis space. And that was on July 11th. I'm just not as enthused as I used to be about them. We got Sundial. Definitely had a breakout in 20-day 1 hour. Now that looks good. Let's see what this says here. Congressional committee moves to block marijuana rescheduling. GOP-controlled House committee has unveiled a new spending bill that contains provisions to block the Justice Department from rescheduling marijuana. The legislation could also maintain a separate, long-standing rider protecting state medical cannabis programs from federal interference. Now, they busted a farm down in California that had a bunch of kids working in there and illegals. I'd say they need to, if you own a farm, you need to do it the right way, not the wrong way. They pulled 12 kids out of the farm. And I'm talking about kids.
You think 6,200 puts for tomorrow are out of the money too far?
6,200 puts. SPX. For tomorrow.
60 points out of money?
15?
Yeah.
It's a pretty good distance. Yeah.
And we lose 50 points overnight on CPI. That is the question.
I'd rather get, well, I like the price, that's for sure.
I know, right? That's what I'm looking at.
62.20s would be my second choice. One, you know.
The 62.25s have 10 times as much freaking open interest.
Yep.
But damn, $550 for a foot.
Yeah. I would go in, if I bought it, I'd go in the mind that I'd have to buy another one. Tomorrow.
Maybe I'll do spy puts instead.
Yeah, that'd be a better deal.
52,000 freaking volume on the 623s for tomorrow. That's kind of abnormal.
Yeah, we took your alert off of Mister this morning.
I saw that. I was on the phone call and I saw everybody jumping in, but I couldn't freaking get off.
Yep.
Went up a hell of a lot, dude.
I got the 441.92s and added one that dip. So I sold mine.
Frustrated with the fact that work is the way my thing is.
Well, that's the way it is.
Especially when I got a level that freaking hits as hard as that did.
I'm gonna go get my tea ready. Looks to me like NVIDIA is coming back down to the 200 again. Nailed that bottom on NVIDIA too, and AMD this morning. We might do a pot video here later tonight. I'm just not as bullish as I used to be on them.
They've got 5, 7, 8. They've got 800 sell orders at ES63. I think they want to run it up there. That's an insane amount of sell orders for ES. And with what Rob just said, I think I'm right. I think they're gonna freaking run it in the day. You can trade futures 23 hours on the costs. Huh. I've never bought and sold a future. Have you?
Yep.
You have?
Yep.
Does it work the same way?
Been more or less. I use the tick when I'm trading it, but I haven't traded them that much.
You use the tick. Is that a time frame?
Yeah.
Oh, I see it.
100 tick. 100 ticks per minute.
It didn't give me an option. It gives me 133.
You can change it. I think you can change them. Yeah.
So 1 day, 100 ticks. It's easy enough. That help? That look weird.
Yep. Dang, man.
Fast. Jesus. What about pricing on ES? How much does it buy something? Mine's are July 25th. You don't get dailies?
Hmm. Go get my tea. We'll be right back. It's now almost 2 o'clock, so we're going through that period where we could have a pullback into the CPI number or CCI number tomorrow. Now just remember, I'm bullish in this market. /ES has a head and shoulders also right here. Is that the one you mentioned to me earlier? ES?
Yeah.
Yeah. 30 minute, yep. I'll be back. Oh.
Oh my God, another call.
Dang, I wish I'd bought that AMD this morning. I just knew I should have. We have number 4 resistance on the SPY with an inverse head and shoulders. Dan Ives bets dirt. I'm going to get. I've sent 2 messages to this idiot. Dan Ives bets on cryptocurrency as the biggest subsector. Oh yeah. Trump has unveiled $70 billion of AI and energy investment. I hope the heck it's not our money, 'cause I won't. And there's Trump has unveiled $70 billion. You better not be putting. Trump has unveiled $70 billion in AI and energy investment. So that's. Trump says Epstein is alive. I believe he is too. Put in protection witness program. So if he was involved in the CIA, everything kind of consolidated. AMD's consolidated. NVIDIA's consolidated. Apple's consolidated. Oh man, I'm out of laundry detergent. Shit. I got 2 hours still. I'm gonna go run and get some laundry detergent. I gotta do my towels. Mm-hmm.
Somebody might have seen this note before a lot of people. Earlier this morning, in the August 22nd weekly cycle that expires in about 39 days, a trader bought 7,000 of the 100 strike puts in there in Micron. Paid an average debit of about $1.13 for those puts, so the break even for this trader at 98.87 over the next basically 6 weeks, about 17% below the current share price in there, with put volume about double normal daily average volume that we've seen over the last 5 trading sessions. So yeah, we'll see if this comes true because their demand for high bandwidth memory chips is good, but if the other segments of their business are looking to do poorly based on pricing and demand in the second half of the year, that's why maybe we're seeing the pullback here, and this trader thinks might even go lower.
Yeah, so one blurb can really weigh on these names, because I briefly looked this morning when I saw it as a top loser in the S&P 500, wondering why Micron was down 5%. Thank you for explaining that. I mean, there was some hope. I mean, I know Deutsche Bank recently said that the company could see significant growth on the high bandwidth memory trends that you were talking about, but the big picture here under pressure today. How about NVIDIA, which has been hitting some record highs, and you found a bullish trade, so someone still thinks it has room to the upside. The highest point was 167.89. What are we seeing here?
Yeah, stock's relatively muted in today's session, even with the turnaround that we've seen for equities as we started off in the red and went into the green. Jensen Huang's over in China. He's supposed to give some commentary on Wednesday about their ability to maybe sell some of their chips, those lower degraded kind of chips that they're allowed to sell in China. They're trying to get that. Remember, he met with President Trump last Thursday evening before the trip to China, but he's going to give some remarks on Wednesday. Stock's just off of those all-time highs, and you've seen the analysts kind of come back into this as the market cap hit over $1 trillion, or $4 trillion, excuse me, just last week and into this week. So yeah, the optimism's there. You've seen some price targets up to $200 a share across the board. We saw some bullish activity in here. As trader was actually rolling on an existing.
It's weird how their attitude changes.
September.
We hit 3 trillion and now started freaking out, and we hit 4 trillion and they're raising their price target. What's the difference between then and now? I don't know. We're supposed to be in recession and inflation and everything else. Something just doesn't sum up right to me. It's not NVIDIA, it's definitely the analysts.
For NVIDIA.
Okay, thank you for that. And last but not least, what about Citigroup? I mean, we're waiting on all these banks this week, and you're big and you find a bullish trade. What does that tell us? Let's hear more about that.
Yeah, maybe some speculators taking shots to the upside. I mean, this stock has had a pretty good run up about 24% so far in 2025 to multi-year highs just recently, over 3.5-year highs in this stock. CEO Jane Fraser's been doing a good job with this company, selling off assets that are underperforming, overseas assets that aren't performing well. So she's trying to right the ship here as they expand, trying to work their footprint out to more M&A, more IPOs. So trying to compete head to head with some of the other big money center and investment banks at this point. Expected to grow revenue about just over 4% to just about $21 billion this quarter when they report tomorrow morning. The option market pricing in about a plus or minus 3.5% move in the shares of Citigroup going into these earnings. And typically when you're going into earnings, you have that event risk, implied volatility levels really start to expand. But the banks have always historically been pretty muted as far as the expected moves going into these reports. But this will be a big one. See how their net interest income is doing. We've got a normalized yield curve right now that's good for the money center banks like Citigroup, but the stock has run pretty far, pretty fast from those April lows, so the bar's pretty high in this one. But this trader thinks we're going to continue to see some gains in here, and this is out in the July 18th monthly options that expire just 4 days, so really short-term positioning. probably taking a shot here on earnings. The trader bought 6,000 of the 88 strike calls and sold 6,000 of the 92 strike calls. So they're buying this $4 wide call vertical to the upside. As I mentioned, the option market not pricing in a big, massive move. So this trader bought 6,000 of these call verticals, paid an average debit of 93 cents. So the break even of 88.93 over the next 4 days. That's only about 2% above the current share price in there, with call volume double normal daily average volume. So this trader's outlaying 93 cents a debit, and that's the risk on this trade for this to potentially expand to $4. And that $92 price target kind of aligns with what the option market's pricing as far as movement post earnings.
Right, yeah. I mean, looking forward to hearing from all these banks this week. That will really set the tone. But in the last round of earnings, the banks were so great. It didn't mean that everything was so great, but we will see. Tom White, good to see you. Thank you so much. Good luck there. Options Corner every day with Tom White, where he finds real trades and shares them with us. He looked at Micron, NVIDIA, and Citi. Coming up, Andrew Cry will join us and discuss how the markets are navigating the volatility, Fed policy, global rotation, any breaking news. The watch list has you covered. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
We're just kind of consolidating here.
Trade brilliantly with Schwab.
There's my shoes.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, thinkorswim, and mobile-based platforms.
Oh, there it goes.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
Oh, man, these things, cats are bullish.
On demand. Head over to schwab.com/coaching and start learning today.
This is the last chance.
Welcome back to the watch list and a happy Monday to you. I'm Nicole Petalides.
I'll be right back. I'm going to go run and get some soap.
So glad you're with us. Andrew Cry joins me now, Co-Chief Investment Officer at Crescent Grove Advisors. Let's start with just the big picture. As we've been hitting some records recently, we have tons of tariff news crossing the headlines daily. You know, is that noise? Because what we're seeing here is that the markets have been somewhat resilient and desensitized to the daily headlines pertaining to tariffs.
I think that's right, particularly this latest round of announcements here, where I think the market is just sort of saying, we saw what happened last time. We had a significant drawdown, and then we snapped back as the administration kind of backed off, the escalate to deep.
Oh, yeah, right. Taco, right? Taco Trump.
That the administration was
he
thinking
backed
about
off on
policy,
shit.
in the sense that that drawdown actually forced them to de-escalate, to be a bit more conservative in the way that they went about the tariff policy. So if we don't get that same sort of pressure on financial conditions, the market reaction that we had last time around, could we actually see stickier tariff levels, higher tariff levels as we move towards that August 1st deadline? I think that becomes the risk, ultimately, is that the market it's a self-fulfilling prophecy in a way where the markets don't force the administration to correct or sort of course correct on those tariff levels. So that I think will be an interesting dynamic to watch unfold over the coming weeks here.
And also the Fed in focus. Obviously, they like price stability and keep inflation in check. They want full employment. They don't want to see labor weaken. What do you think the Fed is thinking here now? We've been meeting at the end of this month and then future meetings. What's the likely path here in your opinion?
Yeah, I think there's so many different cross currents here to think about. So tomorrow, probably the main event for this week, notwithstanding bank earnings later in the week, is going to be CPI tomorrow. So we'll see. We're expecting a little bit of an uplift on a month-over-month basis. I think 0.3 is the consensus now relative to we were at 0.1 last month. If you look at inflation swaps at the end of this year, they're pricing about a 3.3% level for CPI, which is up pretty significantly from where we were at the beginning of the year and really reflective
I'll be right
this
back.
idea that we're going to start to see some of the pull through of the tariff effects on inflation. So if you think about from the Fed's position, just start with inflation. There's no model that helps them calibrate around what this administration is going to do, just because I think it's so inherently unpredictable what sort of policies are going to be coming out week to week, month to month at this point. So it's sort of necessary in that case for them to be more data dependent. So we think that they're going to take these data points in stride and really not get out in front of what we think is going to be a rising inflation level into year end. So all told, that could lead them to take a slower path towards cutting rates. Now the other side is you've got a labor market that's slowly softening, sort of an insidious level of continuing claims creeping higher. Unemployment rate isn't shockingly high, but at this point it's just slowly inching higher. And then you've got the political pressure that they're facing as well. So there's so many cross currents, but we think all told the Fed's going to be much more data dependent in this environment, just try to weather the storm from a political perspective.
So what do you advise to investors? I mean, we've seen tech, certainly a leader, industrials has been a leader. What do you tell investors who want to put money to work in the equity market?
As we look at it, we still see a very expensive cohort of mega cap tech names that are leading the S&P 500. And for us, not so I think your previous guest referenced this, these are great businesses, fabulous businesses, but we think just the demanding valuations relative to what we see in the rest of the world, sort of world ex-US, where you've got, the ETHA that for instance, trading at about 15 times earnings. You got EM trading at 13 times earnings, just much less demanding valuations and actually reasonably good fundamentals supporting those markets. On top of that, you've got a dollar that's been weakening. That tends to be a great backdrop for non-US stocks to perform well. We kind of see this relative value rotation theme, which we've been talking about now for several months and quarters, continuing to play out, where you get that rotation of capital incrementally, right, at the margin, away from some of those mega cap tech leaders, the US, broadly speaking, into some of these less demanding valuations that we're seeing across Europe, Japan, and EM.
And then you do think that there is a play finding yield, right? How do you do that?
We just think you have to be a little bit cautious at this point on the long end of the curve in particular, right? So kind of what we're talking about with the Fed and I guess the sort of the political pressures that they're facing right now. I think if you were to see a scenario play out where Powell was replaced or again, the jawbone works to the point where the Fed is lowering rates at a much more rapid pace than they're currently indicating, we kind of think that would be a steepener trade, meaning long end yields move higher, short end yields move lower. In that case, you just have to be really cautious about the duration that you own in the portfolio. So the 10, 20, 30-year segment of the fixed income universe. And you've already seen that even this year, not only in the U.S., but outside of the U.S. as well. Some of the fiscal pressures that we're seeing now, countries running bigger deficits, the one big beautiful bill, certainly adding perhaps to the deficit over time, where that's going to be, sort of an upside catalyst for long-term yields. So we just think investors should be a bit more cautious, a bit shorter duration in their positioning in this environment to protect themselves against what could be price losses as yields move higher on the long end.
And also just globally, by the way, I mean, it's been read today here that the Wall Street Journal is saying President Trump is considering 100% tariffs on Russia, for example. But we have to wait and see on all of those. But for global investors at this point, you've seen a shift and you've seen people investing internationally. Do you expect more and more folks to try to do that because they think they can make money? And if so, where, how?
I think that's right. I think it's been a bit of a prove-it story with non-U.S. stocks. People want to see the returns come through before they start to really pile in and press the bets, if you will. But I'll go back to what I referenced before in terms of the EFA trading at 15 times forward earnings, EM trading at 13 times, just those sort of broadly indicative levels to suggest that there's just not a demanding valuation level for these segments of the universe. And if you have a bit of a catalyst now, which we think the fiscal side of things certainly is one. If you take Germany as an example, starting to spend a bit more freely, or Europe, broadly speaking, spending on defense, that's an interesting catalyst. And on top of the fact that you've got the U.S. being a bit more protectionist, isolationist in the way that they're thinking about policy, the dollar being weaker, we look at all those different elements, and to us, that points to incrementally, at least, again, on the margin, dollars flowing into non-U.S. markets as opposed to U.S. markets at the same sort of rate that we had seen for several years, supporting those Mag 7 names in particular.
All right, Andrew Cry, thank you so much, Co-Chief Investment Officer at Crescent Grove Advisors. Appreciate it. Thank you very much. Coming up, Arneem Holzer is here live at the New York Stock Exchange. We'll navigate through the market volatility, the tariff pressures, and the market dynamics here, what he thinks may be good for your portfolio, how to do this and make some money. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides. We welcome in a special guest. Arneem Holzer is here with me on set, global macro strategist, Easterly EAB Risk Solutions. Good to see you.
Great to be here.
A lot of headlines, do you call it noise or what? Because the market has moved to new highs.
Right. You have these countervailing forces, right? You have valuation weight, you have geopolitical weight, and you have fiscal lift. So you have countervailing forces, and just like, how many narratives can you put on the head of a pin? You have to figure out which is going to be the winning narrative. And we're not sure that figuring out which is the winning narrative is the right approach. We think playing the residuals is a better approach.
So, tech, finance. Tell me about some of these sectors, because everybody wants to know, what do I do in this market?
Well, first of all, there are big secular themes here, right? You have the hyperscalers, you have AI, you have all the energy. You actually have a secular energy boom to begin with. Renewables are not dead, but they're, clearly there's going to be a different form of how that plays out. But you have tremendous energy needs and utilities, and a change to the utility sector that I think is a very impressive one. You have some changes in the financial sector that I think, again, are meaningful from a secular and a cyclical point of view. And I think the software space, now that we've done a lot of building out in AI, I think there's going to have to be some software catch-up. So there are some good cyclical themes, secular themes here.
And there's sort of a feeling that software may be a little more tariff-proof too, right?
That is part of the story. But there are some big software firms that are out of the U.S. too.
Right.
I think the bigger issue there is that companies now have put AI into their press releases and into all their earnings discussions, and now they've got to come up with goods. They got to actually deliver some productivity gains.
What about the volatility? I mean, even today we thought we were going to have a down day. Overnight we saw futures lower, only to see us come back and bounce back. What do you think of something like that?
Well, first of all, it's a great comment, because the implied correlation in the market is about as low as it's been all year. It's about 13, 14 CBOE implied correlation. That means we're in a macro environment. But when you look at all the themes that you're seeing in terms of AI, these are macro themes in terms of geopolitical, in terms of the tariffs. These are still macro themes. So there is this push and pull. Are we assuming too much, stock picking, or are we just overlooking some of the macro themes? My sense is that volatility has come in quite a bit, and maybe come in a little too much. But at the same time, this earnings period is going to show us that companies are starting to deliver. We think there's going to be some of that, but at the same time, there's a lot already built in to those numbers.
Are you stock picking today? And you have at least one ETF that you were sort of talking about for a way to hedge, but are you stock picking today, or what's the big picture for investors? What's your recommendation?
It's a really interesting point. There is a tremendous amount of momentum in the international stocks, and this belief that the U.S. excellence, that U.S. superiority is now permanently kind of disabled or somewhat disabled. I would caution people in that vein. I think using equity and taking into account volatility is a much better domestic play. And the reason for that is, if you look at the European, and we did talk about the European equity ETF.
Right.
When you look at that, over half of the outperformance is currency. And so the assumption that people are making is that U.S. currency underperformance is going to continue, and we actually think there's some very good reasons, because some of the concerns around U.S. policy and policy uncertainties, you've taken the legislative issue off the table. Trump has done some things in the geopolitical framework that look better. So I think some of the weakness in the dollar is not going to continue the way it is. So, we're definitely believers in the S&P. We're believers in the S&P plus the hedge, something similar to what we do in JDIX, the Easterly Hedged Equity Fund. We like that actually better than over-diversifying internationally, where we think the correlation to the U.S. is still very high, and we're concerned that the best parts of the U.S. market, things like tech, some of that excellence is not as strong in those international markets. So we're not sure that overcommitting to the international markets really makes sense.
And these weeks 27, 28 are, if you look back from many years or decades, this happens to be a good time, seasonality. You said August tends to be more volatile. Tell us about that.
Well, the idea here is you have this this period where you don't have a Fed meeting. So this July meeting, and I know you were talking about the Fed before, we think there could be some signals, but at the end of the day, it really looks to us as if there may not be any signals.
Right.
And if that's the case, some of the small and mid-cap names that really are looking for a little bit of interest rate relief may not be getting it. And so if you get less of an easing signal, and the Fed Fund futures are already starting to show you less of an easing signal, and there's a chance maybe we only get one. Some people believe there's a chance we don't get any eases this year, Nicole. If that occurs, there's still some volatility. And when you look at the VIX futures curve, you actually see the front end has come in quite a bit, but the September, October, November really didn't come in that much. So there is still some concern around what happens in that thing.
So are you comfortable sort of, since there's concern, but at the same time, would you be comfortable saying we'd likely see new highs again between now and the end of the year?
I think that there's always a good chance of a correction, but the fundamental news here, if the earnings continue to deliver the way they are, it's very hard to commit to, let's say, fixed income unless it's very short term. Commodities have done relatively well. It's hard to buy gold here. You see gold's actually corrected today.
Right.
So it's a little bit like, where are the alternatives? And we think that using volatility within an equity structure just makes a lot more sense than trying to diversify into assets that aren't producing, or overcommitting into strategies on the equity side that could be hurt if the Fed doesn't actually come through the way the markets are expecting.
All right. Thank you so much, Arnie Holzer. Great to see you.
It's
always a pleasure. Thanks for being here with us. Still ahead, we bring in our panel to talk all about NVIDIA, AI infrastructure, much more. Is it too late to buy this stuff? You're watching the watch list. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
I'm Nicole Catalini's host of Trading 360.
Nicole Catalini.
For the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Welcome back to the watch list. Our panel is ready to talk all about NVIDIA, which has been hitting record highs. Does it have more room to run? Austin Lyons, Senior Analyst, Creative Strategies, and Francisco Pito, Senior Portfolio Manager at Fed Investment. Austin, I'll start with you. I mean, we've seen an incredible run. Does NVIDIA have what it takes to really differentiate itself and dominate AI?
Hey Nicole, thanks for having me. Yes, definitely. NVIDIA is differentiated, and they are dominating already. You know, we've seen in the training era from 2022 to 2024, you know, everyone who's building out large training clusters is buying NVIDIA. They're buying them for their hardware, for their software, and for their networking. As we're shifting towards the inference era, where you're seeing these trained models get deployed, that will just continue. So, you know, NVIDIA is holding strong, and the future's bright.
And Francisco, do you agree?
I agree 100%. I think that's spot on. I think NVIDIA
it's in a prime position to really take advantage of this and set an inflection point that we're going through the AI revolution. This is just a point where we start to accelerate. And to have an 80% market share at this point in time is phenomenal. So yes, I agree with that statement.
When you look at the value today of NVIDIA, how much more upside, Francisco, do you think this stock has? I mean, we're already seeing it at new highs. Much more room to run?
I believe so. I wouldn't be surprised if it hits another, a 25% upside in the next year and a half or so. And the reason for that being, it's just that the AI demand, it's for real. It's not what people thought about 2 years ago that AI was a fad. It is no fad. And what we see now with the chatbots and the ChatGPT is only the first part of it. We're going to see agentic AI probably within the next 5 years really take over and really do really amazing things, and not very much to both the top and the bottom line. So there's so much room to run any way you look at this.
Think about all the different things that AI could be used for, Austin. I mean, we think NVIDIA, at least one thing we were talking about were the next waves of robo-taxis, humanoid robots. I mean, Austin, where are we headed when it comes to NVIDIA and all things AI?
Great question, Nicole. So, we definitely have room to run on this AI era with OpenAI, for example. ChatGPT is approaching 1 billion monthly active users, but we are very excited about future growth opportunities and future markets for NVIDIA, like robo-taxi, autonomy, autonomous trucking, and humanoid robotics. NVIDIA has a huge opportunity there. It's not just about the data centers for training the AI there. It's also about for the onboard compute in the robo-taxi or in the robot. And then there's also a third opportunity for NVIDIA there with simulation. So to rent servers or sell servers, they have these RTX Pro servers for running these simulation environments. So given labor issues that are going on, we see a lot of opportunity for humanoid robotics and autonomy to come in and help do jobs that people don't want to do or that are dangerous or repetitive. And we think NVIDIA is very well positioned with their hardware, their software in the data center and at the edge.
Yeah, and in your notes, you talked about the run-up that we saw of NVIDIA to the 4 trillion mark. Big news. And now people are asking, and I'll ask you first, Austin, NVIDIA, Microsoft, Apple, which one's the first one to hit 5 trillion, do you think?
So, that's a tough one, but I think NVIDIA is very well positioned. They are supply limited right now, so demand outstrips the supply that TSMC can make and package these chips. And so, definitely through the next several years, we'll continue to see this AI infrastructure build out. Now, I think, on the other end of the spectrum, Apple is trying to figure out how to use AI to give you the best personal computing device experience. And Microsoft's figuring out how to make AI tools to help AI developers, and there's lots of growth for all of them, especially Microsoft and Azure. But it's very straightforward for NVIDIA right now. It's just sell as many chips as they can get their hands on.
Right, understood. I mean, let's talk more about agentic AI, Francisco. I mean, that is the wave of the future, right?
That is correct. And NVIDIA occupies, as I said earlier, a prime position in that market, that developing market. So, I agree 100% with Austin. I mean, they're just in a prime position to really take advantages of all these new developments. We're going to go past chatbots like ChatGPT pretty quickly.
And when you think about, the other names in the S&P 500, I mean, Francisco, are you still sort of vying for these NVIDIA AI type names because you really think that's where the growth is?
Yes, I definitely own quite a bit of NVIDIA in my portfolios, my strategies. I have complete faith in their growth prospects. And they do have an ecosystem around it, mostly software development. They produce the hardware. There's a lot of room to develop the software, the Microsoft or the Apples of the world. But in terms of reaching 5 trillion, which is that question that you asked earlier, I think NVIDIA, it's my candidate. It's going to be the first one up.
Austin, do you think, I mean, Francisco was saying he thought there was 25% upside on this stock. Austin, do you think there's upside on this stock? How do you quantify the upside potential?
Yeah, assuming there's no exogenous shocks, and it's very hard with tariffs and with just some of the uncertainty going on in the world.
There's no uncertainty going on, you tickle butt.
People like to get in, but we think over the next year or two that they will, so long as they can continue to meet demand and supply as many chips.
There was uncertainty when we had all these wars going on.
I mean, we definitely think there's upside there for NVIDIA and for NVIDIA investors.
Yeah, and how about some of the other names like Meta, Austin, some of the other Mag 7 names? I mean, when we think about AI strategy and investment for that matter.
Yeah, over the next 5 years, what I'm really excited for Meta is their pursuit into smart glasses and augmented reality. I think there's a lot of opportunity with Gen AI to unlock new user experiences where you can now talk and have contextual information about what you're seeing and what you're hearing. And I think there's a lot of upside there. And Meta is full steam on that and really pushing the envelope with Ray-Ban and with Oakley. And so that's one area that I would track to just upside for Meta. I think they're obviously, Zuckerberg's going hard right now, getting as much talent as he can. And, we'll see how that pays off. Of course, they're already using what they deploy to make a better Facebook experience, Instagram experience. But of course, for advertisers, they're actually trying to essentially automate all of that, where you just say, connect to my bank account, here's the outcome I'm trying to drive, and Meta will help you generate copy, generate the ads, and figure out which consumers to put that in front of. So, I think they're very well positioned there. And then I just like new form factors as a new opportunity for Meta to expand into.
Yeah, and Francisco, I see here you talked about new growth and using AI. I mean, manufacturing, healthcare, transportation. We're going to see a lot of AI going forward in everything quickly.
That is absolutely correct. And a lot of it will have to do with the agentic technology as it become more, right now it's basically in the research phase, in my opinion. But, within the next 5 years, we're going to see a lot of those pretty much become reality. And the advantage with the agentic AI is that it can piece together, it can reason like a human. It will be an agent that they will create an optimal workflow. If you're in real estate, it will figure out what's available, what the prices are, what the history of the data is, and it will be capable of making decisions. So that's what agentic AI is about, taking action, not just listening to or looking at a chatbot. It will take action to execute other AI modules and interact with other AI agents. So there's quite a bit left here. This is only the exception. This is where the curve does this. It's that inflection point. Now we'll begin to accelerate. So there's a lot more in NVIDIA's in a prime spot.
Thank you. Francisco Vita. It's great to see you both. Thank you so very much. Glad you were here today.
Okay.
NVIDIA. I'm Nicole.
I just now saw this. I bashed somebody pumping Mullen this weekend. And now I just read this. Tax credits are ending. Can Mullen, Global Push, and Crypto Pivot win over EV buyers? It reminds me of when crypto came out and all these companies that were failing would put, we're getting into crypto. And they'd run a couple hundred, 2, 3, 4, 5, sometimes 1,000% and just knife. And they were worthless. Kodak was one of them. And there were a bunch of them. Just failed companies, that had a name at one time and then just didn't change during the digital era. It's down 8 cents. Someone asked me this morning in another room, do I trade pennies? And I said I used to when they were, fun to trade, but now, they get hit so hard, they're not the same. They just don't trade the same anymore. And I don't want to get stuck and keep losing trade after trade after trade by jumping into penny stocks. Where before I could jump into them and, man, I'd 100% here, 80%, 200%, 500%, 1,000%. So the market's always evolving. Look at my penny scan. And the perf July earnings. Bear was the one I used to trade. See, Deer, I mean, these stocks have really been beat up bad. Gosh, this is one I would have... $16 3 years ago. Dare Bioscience shares soar on data from phase 3 contraceptive study. It says phase 3. Hormone-free contraceptive. They got a grant installment of $6 million. There's pot stock, CGC. Fubo, apps, Zach Morris had one this morning. See what he was pumping. BTOG. No, this is that Levi Strauss one that I was looking at the other day. Oh, it's 5 minutes post power hour. Oh, here's the pullback. Oh, shoot, I missed it. Okay, God darn, look at them Mr. Calls. The 6270 calls. Watching the 6270 calls. They're at $2.40. We're at support. We have a 1-2 free bits. $2.30. On a 1-2-3. Tight stop. Digging roll. Let's go. Let's go. Hey, sing a song, sing out sing a song, sing out strong, sing out loud, sing of good things, not sad. Sing of happy, not bad. Sing a song. Sing out strong. Sing out loud. Let's break it. Uh-oh. I'm up $30 a contract, $40 a contract. I have 5. We're at 285. Okay. Thank you very much. $3. Ladies and gentlemen, I am the proud owner of some SPX stocks. And we got into 230. And now they are at 285. Richard, you're stuck in Mister? Let me see if I can get rid of this thing. Up, back down there again. Is this going to be the flush? This is number 4. One of my girlfriends got, she was still at a stoplight and some idiot run behind her going 40 miles an hour. Didn't see it coming. She got a new car today, and I said, "What'd you get a new car? Why'd you get a new car? I liked your old one." The guy hit me from behind. Piece of shit didn't have a driver's license. He was on probation. It just mind boggles me how stupid people are. I mean, this woman's probably a little bit younger than me, but not in as good a shape. So that sucks. I bought her a coconut cream cake today. Make her feel a little bit better. I think they're going to get their 250 on Boeing. Nice little support right here again. What time is it? I still got time to scalp another trade. But if this doesn't hold, this is a major drop. So far I'm 7 for 7. Didn't hold. I tipped and by put. That or get the. They're at 130 right now. That's don't do good in puts. Not even close to what I can do with calls. Should have got him right there. It's at the 200. Damn. There it goes. There was my chance. 120 to 220. Okay. Well, shoot. I'm going to put my towels in the dryer. Active trader.
Futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Oak. I'll be right back.
Power your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. It's now time for Options Corner. For that, we'll welcome in Rick Ducat, who's our lead market technician here on the Schwab Network. Rick, our focus is PayPal today. Seaport Research upgraded those shares from neutral to sell. Now, I know you're watching some of the technicals, but you also have some technicals on financial sectors and financial services overall, because we're about to hear from the big banks tomorrow.
Right, and it's a week where financials will be in focus. We kind of just talked about the big banks. I wanted to take a different spin on things. I couldn't help but notice today, as I was looking through our news digest this morning, there were several other upgrades in the financial sector in different types of companies. PayPal, MasterCard, Ally, Synchrony Financial, another company, ticker PAY, basically a lot of transaction and payment processing companies. So it was kind of across the board, not really a general major theme, but interesting nonetheless. And if we do look at our first chart, a comparison of some of these aspects of the financial sector, we can see just starting at the bottom, S&P 500 up like 11% here. Then we have the banks, KBE, up about 16.5%. So then iPay, that's an ETF that's more about the payment and transaction. That's pretty much in line with the broader XLF sector here. So I thought it was very curious that such a sector that has seen such strength versus the overall market, these two areas were underperforming their own XLF sector. IAI, that ticker at the top, that's the broker-dealer exchange ETF here. So that's accounting for maybe some of the outsized gains that we're seeing across this sector here. Just kind of food for thought, because it seems like much of the concern has been over these stocks being too overvalued in some cases. So if we were to look quickly at an XLF chart here, a 6-month, 1-day chart, we can see that we've had a push up to the upside here. We've broken above a series of old highs that we saw there, 52.25, our green line there. And so far, we're hanging on to that old supportive area here. So a key level to watch as we go through this week and consider, the earnings from these big companies.
And, we've certainly talking a lot about these earnings, anticipating a lot about these earnings. But like you said, it's not just about big banks right now. PayPal got those upgrades. We saw a lot of these other financial service related and adjacent companies there. What's happening with PayPal today? What sort of trends are you observing with them?
What happened to Caroline?
Right, so when we look at PayPal, it's a story of slowing momentum to me, because we have a trend line that begins with those April lows when we had all those tariff announcements. It was a very important low point for so very many stocks here. In this case, we did have a rally and a recovery here that took us above our moving averages that we follow, our 3 exponential moving averages, 21, 63, 252 day. Also above our volume profile point of control. That's that shaded area surrounding that thick red line on our chart. So around 72 or so, that's a key downside area. That's about where we hit our lows on Friday and then bounced here. Now we're within this triangular shape here, this rising wedge type shape, a more modest slope than what we previously saw. We broke through that downward or that upward sloping trend line there in blue here. Now the next stop to the upside, the other volume node near 78, potentially here. So
PayPal looks like a good setup.
58,000 options contracts traded here. More skewed toward the call side, 66% calls. In terms of call volume, 70 to 80. In terms of puts, 70 to 77 is where most of the trading took place here. Now, open interest, if we were to look at our next chart here, total open interest, 1.25 million for all the expirations in this name. 63% are calls. When we look at July monthlies, it's about 180,000 options. Once again, 60% calls or so. About 15% of the total open interest for this whole stock. So this is kind of one of those feast or famine stocks where most of the open interest is concentrated only a few months. We've got this July, but also August, December, January, and June. That's where most of the open interest
man,
is.
that's a nice setup.
Expected move, our shaded area there, 70 to 78 by that Friday expiration here.
All but
and we can
50.
see that on the call side, most of the activity in terms of open interest, 60 to 90, those are our light green lines. Our dark green line, 75, is where there's the most. And if we were to go to our next chart there, then we could see that on the put side, we can see that we have a bit of a different situation here, but some of these same levels, once again, 60 to 75 is the general range here, while that 70 level is the highest open interest puts here. So 60 and 70 really, you know.
I don't like that one. I like this one right here.
75 especially, too.
You know, and that seems to be right in range. Right now, they're trading at 73.87, having a good day on that upgrade from Seaport, up 3.5%. Were there any noticeable trades that you saw on this news since the shares are responding well?
Somewhat. I mean, you know, not in terms of what we would talk about on Options Corner typically. In this case, the biggest single trade I saw, a 700 lot of the March 20th, 62.5 puts. They paid $335 debit for that. So that's like $234,000. But to me, it looked like a closing trade. There was a similar trade previously for a similar volume here. So perhaps that was more of someone closing out short puts rather than going long to open here on a bearish play. So other than that, though, you know, a lot of activity around the 75 strike in the July expirations here. You know, pretty much what you'd expect. Not really.
Got a hard money.
Well, Rick, we appreciate you breaking it all down for us and showing us the levels to watch. That's Rick Ducat. And coming up, we'll talk more about Bitcoin after its record high. We'll check in on the dollar as it's slowly continuing its upward trend off of its lows. Market on Close. We'll be right back. Stay with us.
I like that. I like this trade. I don't trade
Believe
very
me,
much.
when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the
Carl's
best
way is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
You people are rude.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Unbelievable.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week.
Carl's
on
way is the best way.
schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes.
Tom White.
Fast Market. Weekdays
You're a white boy.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Marley Caden. Bitcoin has continued its recent run, touched a new record high today of over 123,000. And as we look at it right now, we are still up above that level, still over that $120,000 mark. Joining me now to discuss this is Scott Bauer, the CEO of Prosper Trading Academy. Now, Scott, feels like a regular day where we're going to kick things off talking about Bitcoin, but now we've got another high. We're over that 120 mark. We're getting dangerously close to that 125 mark that you've said on this show that we would probably see in the near term.
We are almost right there, and I don't know if the big run over the last couple days has been kind of the buy the rumor, sell the news, because this is crypto week. If it's shorts covering, I know from what I've heard, there's a lot of whales that are just not doing anything, that had sell orders in right around the 115-ish level that pulled them. So that could be part of this as well. But yeah, that 125 is not really far off, Marley. And if we do start to get a pullback, which I would expect at some point here, the recent consolidation that we saw, so 107, 108 area where we stood for such a long time, that would probably stand as a major level of support.
So that 107, 108 line on the bottom end for our level of support. If we don't get that pullback, what level are you keeping an eye on? Is it still that 125 mark, or is that inched higher for you now because we've gotten so close?
It actually has inched higher. If you look, there's a lot of orders out there.
PLTR.
129 to 130. So that has pushed that up a little bit for me now. I'm still moderately bullish here, not as bullish as I was when we were in that consolidation, just because of this amazing move here. I am a little concerned of maybe a buy the rumor, sell the news type of event this week, but we'll see what it brings us. It's always pretty fascinating.
If crypto week works in the favor of Bitcoin and the other cryptocurrencies, and we do see passage of these three major bills that are up to go to the floor, price action.
In the short run, I'm not so sure. Longer term, it's definitely bullish. I mean, any sort of regulatory framework that can actually come into this space, whether it's governing stable coins or crypto asset custody, that is really a good thing. That is a great thing. That is what this industry has really missed for the last several years. And if that finally comes together here, that is definitely bullish longer term.
All right, now let's move on to talk about the dollar. Dollar finally starting to slowly grind higher, trying to, as a little sideways, gain back some of it. Most of that is likely because of more of this tariff news that we're getting with these 30% tariffs on Mexico and Europe.
Yeah, absolutely. There's no question about it. So it's as much the euro weakening as it is the dollar strengthening. And as we saw, as you just mentioned, that's kind of come off a little bit. It's really moderated somewhat. So the overall feeling, the overall move on the dollar, definitely there's still pressure. It's still lower. And we'll see what happens as things play out here. Things can change in the next 2 weeks till we get to August 1st here. But for right now, again, I think the dollar is really still on its heels. And again, this is more just these other currencies weakening a tad instead of they're really getting some strength behind the dollar.
And as we hopefully, in theory, get closer to these more comprehensive trade deals and get some more clarity, what levels are you keeping an eye on with the dollar? What's your expectation as we, in theory, get more certainty as we get closer to August 1st?
Sure. If we don't see anything I shouldn't use the word rash because I think we've seen some of that, but if we don't get any more tariff announcements that are unexpected, we'll probably see the dollar moderate here. Maybe we break 98 on the upside, but I would watch for 96 on the downside. I think that's well within reach here, and that's going to be very concerning if we reach that level.
And I do, before we have to say goodbye, I want to talk to you about tomorrow's CPI print. Obviously so important to the Fed, and everybody's wondering what's going to happen, with inflation, what it's going to indicate. What's your expectation?
The median estimate out there is for 2.6%, which actually that is an uptick, but that is what is expected here. So I think if we get a number that is in line with that, the market's going to be okay with that. If it's lower, the market's going to be really okay with that. And we can see bonds really rally and rates come down a little bit. If it's hotter than that, if it's hotter than 2.6 here, we'll probably break 4 or 5 on the 10-year, and we can get a little bit of a sell-off in the market in the equities.
So you do think we'll see a decent response? Because I know we've talked in the past about how the street seems to be digesting things in this
I'll be right back.
almost desensitized way lately. It seems as if when the data comes in, there doesn't feel to be the response that there used to be because of this time we're living in where there's so many unexpected announcements.
No doubt about it, but my point is because the expectation is for a rise already, 2.6 would be an uptick. That to me, if we're at that level or lower, great for the market. If we are higher than that, that is for sure going to bring in some concern.
Well, we'll know tomorrow morning. Thank you, Scott Bauer. We appreciate it from Prosper Trading Academy for joining us as always. Coming up, we'll close out our market session. We'll get the big picture from the team at Charles Schwab. Don't go anywhere.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of
Boom,
specialists
baby.
in taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Welcome back to Market on Close. We have just a few minutes left in the trading day. So
10 minutes.
Time for the big picture.
Not a
We'll
few.
welcome in our team from Charles Schwab to help us do that. First, we have Colin Martin.
I want her fired, and I want Caroline back. If I have to pay her salary, I'll do it.
Going to be a pretty important report, but we always want to highlight that one report doesn't necessarily make a trend. So there's a lot of anticipation around this, but obviously one report tomorrow isn't necessarily going to change the trajectory with the Federal Reserve.
6270s, get
what
ready.
Everybody's looking at is when will we start to see the impact of the tariffs on a broad swath of goods.
I'm going to take the risk
look
here
at the tariffs
for
and the fact
fast
that
scout.
we're now 3+ months into a
50
relatively
cents.
high tariff
Don't
regime,
enter at your
someone
own
is paying
risk.
those tariffs. And whether it's the exporting company, whether it's the importing company, or whether it is passed along to the end consumer, or some combination of the three, that cost should be showing up in the data at some point. And we've seen it here and there, but I think there's a lot of anticipation of if we'll start to see it more, just because as more time passes, I think companies, especially importing companies, need to figure out if these are temporary or if they expect them to be in place for a while. So I think that is really what the markets will be focusing on. Expectations are for inflation to pick up a little bit. That's already baked in the consensus estimate. If it comes in a little bit hot or above expectations, I think that'll spook the markets a little bit, because what that could mean down the road.
Certainly, you mentioned we're already priced in this sort of uptick for inflation. It's already expected. If it comes in hot, likely
Uptick
a market
for
reaction.
inflation.
If it comes in under, what do you think the market reaction might be?
Now, if it comes in under, I think we'll have to see what's the driver there, because it's not just goods inflation we're looking at, but we're also looking at services inflation, because a slowdown in services inflation, or worse, services deflation, suggests a slowdown in consumer demand. And knowing that, consumers are the lifeblood of the American economy, that would be bad news if we saw services, deflation kind of offset potential tariffs, goods inflation. And then
This
I think
woman's all about tariffs, I just don't want to listen to this
between the
bitch.
risk to tariffs, which are well known and something that a lot of officials have talked about, the idea of waiting to see how it'll play out, and the idea if we see services deflation, which we've already started to see in, say, hotels and airfare, if that suggests the economy's slowing and maybe we start to see cracks in the labor market down the road, maybe we start to see
Maybe my vacation become more affordable.
rate cuts pull forward, because we don't think July, there's really no chance in July. Maybe the idea of September becomes more likely, and maybe the number of rate cuts this year increases if we do get a lower than expected number.
And Colin, what are you watching for in Treasury yields as we get this new inflation data and maybe a little bit more interpretation of where the Fed might move?
We'll be paying attention to intermediate and long-term yields, because one thing we know is that short-term yields are highly related to Fed policy. So as those rate cuts, once they come, we expect short-term yields to fall. But we think that long-term yields might kind of stay range-bound because of trade policy uncertainty and fiscal concerns. And I think that's what's kind of keeping them where they are. If we see long-term yields fall with a, say, benign report, that suggests that a lot of the concerns we've had and the market's been concerned about in terms of who are the buyers if we continue to see these deficits, it'll show us that the markets are actually still just focusing on growth and inflation expectations and the outlook for Fed policy over the next handful of quarters.
Now we're at the 50.
Colin.
Dang
Mike,
it.
I want to come
I
over
ain't
to
got
you
much
here.
room.
Tariffs, obviously a big story there in every conversation that we have, it feels like. How long do you anticipate this uncertainty will last? We thought we might have clarity last Wednesday. Now that may be August 1st.
Yeah, I think that's right, Marley. We're looking at August 1st as
Marley.
the big date. But, I think the market is learning not to overreact to every social media post about what tariffs are going to be on this country or that country or this product or that product, and kind of wait and see how things actually play out. The president has been talking a lot about tariffs. I think he's feeling very confident. He's made reference to the record highs that the market has recently hit, in saying, look, I've put these tariffs in place and the market loves it. So I think the market is not overreacting to every single thing that the president says. But this is an important few weeks. I mean, the president has said that they're going to try to make some trade agreements with some key countries, or those tariffs are going to go into effect on August 1st, particularly to countries that aren't making maybe a good faith effort in those trade talks. So I think there's still a lot of uncertainty out there. I think there's going to continue to be uncertainty for companies, but so far investors have been kind of not too overreacting to every little announcement.
And Mike, I want to shift gears here, but stay in your specialty. It's crypto week with the House right now. How important are these three bills that are up in the House right now, and what they mean potentially for crypto, especially with Bitcoin hitting a new all-time high today?
Yeah, it is crypto week in the House of Representatives.
We got to make a decision here.
Legislation, and I think by the end of this week we're going to see one of these bills, the one that would regulate for the first time stable coins, which are a particular type of cryptocurrency that is pegged to the dollar. I think we might see that signed into law as soon as later this week, and that will be the first time that Congress has passed crypto-related legislation. I think what it does is it starts to give some sort of stability and credibility, kind of a regulatory structure to the crypto space. There's a second bill that would give a much broader market structure for all kinds of cryptocurrency. It would clarify sort of who's in charge from a regulatory standpoint. It would give primary responsibility to the CFTC, the Commodity Futures Trading Commission, secondary responsibility to the SEC. That one is a more complicated bill. The House may pass it this week, but the Senate probably isn't going to consider it until the fall. And then the third one is a bill in the House that Republicans have been advocating for a long time, which is something that says that the Fed cannot launch a central bank digital currency. It's something Republicans have wanted for a while. I think that's going to be a more partisan vote, but you'll see some bipartisan on some of these other crypto things because there are bipartisan supporters of a regulatory structure for crypto. I think that it's a realization in Congress that crypto is here to stay and we got to put some parameters around it.
And the big beautiful bill, we have to talk about that too, since it's law of the land now. Specifically in the bill, we've spoken on this show about different sectors and how it affects them, but for investors in the market as a whole, are there any specific wins in the bill that stand out for you?
Yeah, Molly, I think we're going to see over really the next 18 months between now and the midterm election, sort of a battle between the two parties to message this bill. I think there's no question that the fact that there is tax certainty on lots of different issues for a long time to come, I think that's a win for financial planning, for investing. And I think the fact that there's not going to be a big debt ceiling crisis anytime soon. You know, the market historically does not like it when we get to the edge of default. That happens every couple of years. This bill raised the debt ceiling by
I got 35 cents. We're at 45. 50. Okay, there we go.
27 when there's a new
Out.
Congress and
65 cents.
have to deal with it. So I think that certainty, or at least temporary years of
down to the minute,
is good for the market. At the same time, there's worries that that is just going to allow for more and more debt, and the bond market is going to be watching that really, really carefully over the next 18 months. So, you know, I think there are pros and cons to anything of this size, and a lot of it is going to have to shake out over time, and we'll see how investors react as the details turn from, you know, paper into reality over the next several months.
Well, we appreciate you both being with us for Market on Close
There's
today.
90.
This is Colin Martin from the Schwab Center for Financial Research and Mike Townsend from Charles Schwab. The bells are just about to ring on today's session.
A dollar, you dog.
Panel to break down today's action and set you up for the rest of the week next on Market on Close.
Rob's a dog.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Market knowledge and shift your perspective into full gear.
Okay, what a day. 8 for 8. Perfect day at Coco K. Really not a bad day. Something's changed here. I don't know if it's the market. Probably the market, but I'm producing a little bit more patience than what I had before. I had patience, but I'm not jumping on every setup. I'm still averaging 8 trades a day, 7 trades, 6 trades a day. But I don't think I'm over trading like I was before. You know, trying to get through. Like this morning, I nailed 4 trades, 5 trades. Before I had lunch, and then after that, I've only took 3. So that's 5 trades in an hour and a half compared to 3 trades in 5 hours. So maybe I need to be a little more patient and wait for the better setups later in the afternoon. Because if y'all watch me, I get stuck in a lot of them trades right about midday, right? Not darn, what'd you do? You at the casino? Oh my God. I'm your good luck charm, Marbardo. I want 10%. Okay, well, I'm going to take a break. We'll see what the ladies at the IRS say about my pineapple cream cake. I'm going to take a break, go cook a hamburger, have me a bun. Oh, I forgot. Well, that's all I'll have is a freaking bun hamburger. I ate all my other. Man, my refrigerator's empty. Okay, well. Thanks, everybody. Hope we learned something new today. Thank you, Robert. Thank you, Bobby. I hope we're are we getting better? I'm going to suggest if your mind gets rattled, walk away. Come back when your mind is clean and clear. You know, I've always had a thing about the psychology part of trading. If you're having issues at home, it's best not to trade. You know, I traded stoned for 15 years straight every day. And I did good. But I stopped getting high, so here in the last year and a half, last 18, 19 months, and I missed out on a lot of good trades, I think, by doing that, coming in stoned every day. And I went to church Sunday, and last Sunday the preacher started crying and worried about his audience, if they're going to be saved and go to heaven. I was kind of getting the idea that, you know, he was thinking that his teachings weren't doing any good. So after sermon yesterday, I went up and I said, "Hey, I want you to look me in the eyes." He looked at me and I said, "You know, I think you're doing a real good job." And he looked at me and said, "Well, that's God's choice." I kind of shook my head and I said, "What? I'm giving you a compliment. You're, you know, a missionary for Jesus, and you've got me interested in going back to church because, you know, I have a thing about preachers sometimes, but I like how you get to preach." And so I was thinking to myself, I didn't say that to him, but I was thinking to myself, man, I'm giving this guy a compliment. He's giving me this line about Jesus. And I don't think he got my point. Or I didn't get his point last week. When he's up there bawling his head out, saying that he didn't know if he was getting through to people, or so the impression I got. So it kind of pissed me off Sunday, but I walked away from it. I said, I wanted to say, you don't get my point, do you? So you're a missionary of God, and you're supposed to be, you know, and you've encouraged me to read the Bible more and study more. It's just kind of a sour note. I'm going to get on out of here, watch some YouTube, and get caught up on my politics. A nice reversal bounce here, a couple bucks just now on that NUWE. Didn't get no news. So I ain't trading it if you don't have no news. We'll catch you all later.
you.